future's alive. Join the movement at SuperCrowd25. Ideas igniting, the sparks in the air. Dreamers and doers are gathering here. From start engine rising to we funders flame. Deal makers building, the world knows their name. Set apart guiding with wisdom they share. Together we're stronger, a force everywhere. SuperCrowd25, we're making it real. Community power, the change that we feel. Johnny Price smiling, Ron Miller's on stage. Voices united, a turn in the page. Oh, SuperCrowd25. Tucker too. Jackie Logan shining with a passionate view. Sarah Kaplan's vision, a light we all see. Crowdfund insider writes history. With King's Crowd watching and media shares near. Cortex Steve shouting, the future is clear. Crowd check is steady with truth they provide. Impact investors are standing with pride. SuperCrowd25, we're making it real. Community power, the change that we feel. Together we're rising, together we thrive. Building the future, it's SuperCrowd25. Oh, SuperCrowd25. Ignite investment grows, worthy and local fund. Everybody knows crowdfunding pro association leading the way. We're changing tomorrow, we're starting today. SuperCrowd25, together we rise. Hope in our hearts and fire in our eyes. Dreamers and builders, the future's alive. Welcome the world to SuperCrowd25.
You're watching SuperCrowd25, the biggest event in impact crowdfunding. Over 2 days, top experts, investors, and mission-driven founders are sharing how to raise capital, discover profitable investment opportunities, and change the world. Stick around. You'll hear stories, strategies, and insights you won't find anywhere else. And if you want to go deeper, join our VIP community for just $25. Get backstage access, exclusive networking, speaker handouts, and a special VIP-only webinar. SuperCrowd25, crowdfunding the future. Impact starts here.
The property was dilapidated. It was horrible. It was code violations, drugs, crime, rundown RV trailers, no parking lot, no lights at night, just nothing. Our main focus is second chance housing. A lot of affordable housing households are led by single mothers. Our portfolio is 100% affordable. So our mandate is to be 20 to 30% below market rent. I'm personally $180,000 invested. We're only one of 2 companies globally to have a published social impact report for affordable housing on a Morningstar platform.
What's the faster way to build wealth? A traditional savings account at 0.38%, or worthy property bonds earning nearly 20 times more. Earn a fixed 7% APY starting with just $10. Access your money anytime with no fees, all backed by real estate. Visit worthypropertybonds.com today.
The African diaspora is one of the biggest investors in the continent, but they are looking for a structured, transparent way of supporting this business. This is not donation. This is investment for return, including impact, and join our movement community. Thank you.
Join the CFPA for the Regulated Investment Crowdfunding Summit on October 21st and 22nd.
Register at ricsummit.org.
Rural property taxes fund vital services.
Only when they're paid.
Invest in real impact.
Visit invest.coretaxdeeds.com today. Behind today's biggest crowdfunding raises.
The leading CPA firm for Reg CF, Reg A, and Reg D compliance.
Trusted.
Experienced.
Set apart.
ISPD strengthens health for families across Haiti.
Donate today. Make an impact.
Hello, everyone. I'm Gene Massey with Media Shares, and I'm very excited to be speaking at SuperCrowd25.
Save the date for Super Green Live, the global event on sustainability and green innovation, January 22nd through 24th, 2026.
We extend our deep appreciation to our supporting sponsors and co-hosts, including Potomac Growth, Energy Capital Funding Group, Move the Needle with Rob Kaplan, Ridgecrest Herbal, Stakeholder Enterprise, Renaissance League, the Global Equity Crowdfunding Alliance, the National Coalition for Community Capital, Green to Gold, and King's Crowd.
Enter to win one of 2 FireMax 11 tablets. Videos, books, and games come to life. Scan the QR code now.
Rules apply.
Welcome to SuperCrowd25. We have spent 6 months gearing up, planning, preparing, organizing, and it's here. It's such a rush. Thank you all for taking the time to be with us today. We're so excited to share this incredible event with you. I want to thank Chandon, who is our producer and works so hard to make everything work. He just does a phenomenal job, and we're thrilled and grateful to him. So I'm going to just kind of kick things off here. You know, one of the things that I love about crowdfunding is stories like Jennifer Eden at Tampon Tribe. She spoke at one of our earlier Super Crowd events. This is our 4th annual, by the way, biggest and best by far with respect to the number of people involved, probably an order of magnitude more people tuning in today than last year, for instance. But Jennifer participated. I've had her on my show. I've talked to her a couple of times, right? And she has an amazing, amazing story. She started out Tampon Tribe by fundraising on Indiegogo using a rewards crowdfunding campaign, and then financed the growth of the business on WeFunder, doing 3 different community rounds over the years, and then did additional growth capital using SMBX. So she's done 4 Reg CF crowdfunding rounds. As near as I can tell, all of her entire cap table is crowdfunded. I mean, I want you to think about that. She's a prime example, a fabulous example of a business that simply would not exist were it not for crowdfunding. Think about that. And I think there are hundreds, thousands perhaps already in this nascent environment for financing that exist only because of this marketplace. This is exciting stuff. We need to grow. We need to expand it. We need to build the movement. But Jennifer and people like her are proof that this works and that it matters. So I want you to stick around with us today. You know, one of the things that I love about crowdfunding is that, you know, it's a new way for people who feel strongly about changing the world to align their values. You know, the fact is, it's arguably impossible to really genuinely have an impact when you buy shares in the stock market on Wall Street. Why? Why is that? Because when you invest in Wall Street, what you get is not shares that, you know, the money you invest doesn't go to the company you're investing in. The money goes to the entity that sold the shares, and most of the time that's a big hedge fund or a big mutual fund or ETF. So the company that you want to align your values with doesn't even get the money. But when you invest with crowdfunding under regulation crowdfunding or regulation A, the money goes directly to the company and the company uses it to create value aligned with your values. And so a climate activist, for instance, can invest in climate solutions. And when they do, the money they invest, whether it's $10, $100, or $10,000, helps that company grow. Now, one of the things that I love about crowdfunding is the scale, the range of scale. And just this year, we've seen some great examples of the scale. That we have seen successful crowdfunding raises where small businesses have raised $25,000, $30,000 on websites like SMBX and Honeycomb Credit. On the other hand, we've seen businesses raise $75 million on Dealmaker. I mean, the opportunity is there for businesses at any scale, at any stage, right? This could be your very first capital in to catalyze a startup idea into something real. It could be growth capital at any stage along the path. It could be debt capital to help you finance your growth more inexpensively. There are all kinds of tools for crowdfunding. I've seen crowdfunding raises that as low as 3% interest rates over long periods of time. It can be a very affordable source of capital. At the same time, I've seen the returns to investors be so much better than stock market returns. And it all allows someone who's running a food truck on the one hand or scaling a global business on the other to participate in the same marketplace. This is a magical, exciting place. I'm so excited to be a part of it, and thank you for taking the time to be with us today. Another thing that I love about this movement, and it is a movement, is that everyone can participate. Now, there are a couple of websites where you can invest as little as $10 consistently, routinely. It's sort of their default minimum participation level is $10. Think about that. You don't have to be rich. You don't have to be wealthy at all. And yet, on the other hand, if your idea of a small investment is $10,000, you can do that too. No one's gonna, everyone's thrilled when you show up with a $10,000 investment in a deal on via crowdfunding. So, and in so many ways, the $10 investor and the $10,000 investor are playing on the same playing field. It really is just a wonderful, wonderful space, and we can all join the movement. You don't need a special license. You don't need special training. You don't need huge wealth. Everyone can do it. And I hope you will. I hope if you haven't started investing this way, I hope that you will start investing this way after you experience SuperCrowd25. I want to be clear. Everyone brings a different value and different perspective. One of the ways that we try to support this movement is we operate the Impact Cherub Club, a little group of angel investors who invest small amounts via regulated investment crowdfunding. And one of the things that we recognize is that in that room, when we are deliberating an investment, everyone's perspective matters. Everyone's vote counts. And it's interesting how often people who think of themselves as naive investors bring to the table real valuable insights that help us make more informed and better investment decisions. Everyone has what it takes inherently to begin making savvy investments via this marketplace. I am so excited. Bring your superpower to play. We need you in this community. Now, another aspect that I love about crowdfunding is kind of you might think of it as sort of the barn raising aspect. Neighbors come together to support local businesses regardless of the politics of the people involved, right? Uh, we see one of the speakers in the next hour is helping to develop a business that is designed to help deploy power in emergencies so that people can come together following a natural disaster or even a human disaster. It's an amazing spirit that sort of underlies all of the crowdfunding effort, which is to come together as a community, ignoring political differences, ignoring racial differences, ignoring gender, all the things. We can set it all aside. Let's come together and do something great together. Let's make the world better together. Let's make our community better together. And we see it happening all the time in the crowdfunding space. It's wonderful. I want you to think about this as you think about what you're seeing today. We really are in the early stages of this marketplace. So much money has been raised. Billions of dollars have been raised. And this year, under regulated investment crowdfunding, Reg A and Reg CF, we could easily reach $1 billion of total financing this year in one single year. This matters. This is real scale. This is proven. But here's the deal. Here's the deal. There is so much more potential. We're talking about a multi-trillion-dollar economy. And yet this financing mechanism works for every small business, every startup out there could be utilizing this, making more opportunity accessible to investors, at the same time creating more benefits for everyone. For everyone. So this is wonderful. I want you to think about the potential. Think about nurturing this little tree, because in 20 years, in 30 years, we will look back and on these days and we will say, wow, look at what we have grown from that little seedling that was planted 30, 40 years ago. So hang with us. This is going to be great. I want to invite you all who are watching, and I realize many of you are watching. I think there are literally thousands of people watching today, and we're just thrilled to have you here. We have a special VIP option, and you can check this out at thesupercrowd25.com. For just $25, you can purchase a backstage pass. And that will get you access to the backstage. We will invite all of our speakers to pop into the backstage Zoom, not very high tech, just a Zoom room, but you can go chit chat with the people there so that you can have an opportunity to interact. And you get that for just $25. You also get a listing in our VIP directory, a resource that will be valuable to you. You also get access to the VIP directory to see who all the VIPs are. You can also get access to our private VIP LinkedIn group. You get access to a special exclusive VIP only networking session that will happen at 8 p.m. Eastern, 5 p.m. Pacific time today. You also get exclusive access to all of the speaker handouts and the slides. We've asked all of the speakers to share their slides and handouts with us. We will make that available to the VIPs. You want to be a VIP to get access to that. And then finally, tomorrow night, 8 p.m. Eastern, 5 p.m. Pacific, we'll have a VIP webinar that I'll be doing for VIPs only. All that content is available for just $25. I encourage you to check it out and participate. Now, I am so excited This has just been for me a remarkable process of building, and we are so excited. We have just never seen the kind of enthusiasm for a super crowd event that we have seen for this event. And the energy is palpable. I hope in some way you can feel that, even via the Zoom or via our live stream here. But we definitely want to see you participating and enjoying and experiencing today's event. I've got. It is now my privilege to introduce you to our Max Impact sponsor, who is Dr. Kanan Van Williams. He is an extraordinary human being. And as I have gotten to know him over the past few years, I've come to appreciate that he is not only a magnificent person, and deeply so at the most human level, he's also an extraordinarily successful affordable housing manager. He's built projects across the country, and I have it as an odd point of pride for myself that the Dr. Van, as we call him, got his start right here in Stockton, California, where I live today. I've driven by this project that he completed. It's now been like 30 years ago, but that provided a foundation, and he's been doing genuinely affordable housing ever since. And with that, I want to introduce you now to Dr. Van. Dr. Van, we better get your camera turned on here.
Okay.
Dr. Van, we're thrilled to have you. Welcome to SuperCrowd.
Thank you.
Take it away, my friend.
Yes. Hi. Good morning, everyone. I'm Dr. Kanan Van Williams. I'm the managing founder of the Proactive Realty Group, Proactive Sustainable Bonds, Rancho Affordable Living, our current offering in Las Vegas, Nevada. I have a doctorate degree in psychology, and my background is in the social impact affordable housing space. I've been around in real estate for 26 years. This is my 26th year in real estate and my sixth year as a fund manager. Very happy to be part of SuperCrowd and to be supporting Devin and all of his fantastic efforts. We have an offering on Rancho. My background as a developer for this particular offering at 1750 North Rancho Drive, we've developed directly across the street at 1735 North Rancho. And there we were able to go in, provide affordable housing, provide second chance housing to the residents of Las Vegas, Nevada that desperately needed it, keep prices low, provide current income, and a 3x return to our investors on that particular project. And I'm just very excited to be part of this super crowd, to be a sponsor for such important, impactful work that Devin is doing at Super Crowd. And I'm very thankful. Also, I have two books on affordable housing and NOAA housing. NOAA meaning naturally occurring affordable housing. And the two books are The Affordable Housing Multimillionaire. The other one is Driving Social Impact, Transformative Strategies in NOAA Housing. And Devin has the link to our Reg CF offering. So you can scan the QR code for Rancho Affordable Living, which is a 23-unit affordable housing offering that provides current income. Can't talk too much about the returns. However, it's in a vibrant community that is really in need of affordable housing. We'll be bringing in new manufactured homes that are sustainable, low E, energy efficient homes. And we focus on sustainable development goals. And for those of you who are not familiar with sustainable development goals, that's the United Nations has 17 global goals that kind of guide us towards a better world in society in both the US and abroad. And so the ones that we focus on are number 1, 5, No, number 1, 3, 5, 6, 10, 11, and then directly number 8, 12, and 13 for sustainability. Our other goal is that we're 20 to 30% below market rate for affordable housing, and also per HUD-user.gov guidelines that show what fair market rents are. So we're really excited about this project. We're excited about being able to provide affordable housing. And a little other background is, there's a link to our offering at Rancho Affordable Living. On a broader note, I'm the founder of Proactive Sustainable Bonds. That website is sustainablebonds.com, and that's for our Reg D investors. However, as it relates to this offering and this event, this is for our Rancho Affordable Living in Las Vegas, Nevada. Been in fund management for 6 years now. To date, we've returned $7.5 million to investors in our regular fund. We're really excited about what we're doing there in Las Vegas, Nevada, and I really appreciate this time. If there are, I'm not sure if this is a Q, like if there's questions, but if not, then I'll turn it back over to Devin.
We can do some Q&A.
Yes, that'd be
folks,
great.
Let's see if I can get my colleague Shannon to pop up on the screen the link and the QR code for questions. But I think 4sc.fund/question. Or is it questions? Shannon will check here. Let's see. We'll find it. There it is. But 4sc.fund/25Q. Sorry, 4sc.fund/25Q will get you a question submitted. Also, if you are watching on YouTube, and I know we've got dozens of people watching on YouTube, our biggest audience is on television. They'll scan the QR code. That's the way to do it. Point your phone at that QR code, scan it in, and then you can submit a question in the form there, and then we'll get Dr. Van to answer that. But if you've got a question and you're watching on YouTube, you can just put the question in the comments, and we'll see that right away. So feel free to tackle that.
Okay.
Well, Dr. Van, let me ask you a question or two.
Yes, sir.
I have been by the little project you did here in Stockton. What inspired you to tackle that project? What was it? It was like 30 years ago, wasn't it? 25, 30 years ago?
Well, no, not quite that long, Devin. It was, yeah, I'm not that old. But it was in 2016, 15, 16. 2015, 16. And what inspired that is like what I talk about in my book, The Affordable Housing Multimillionaire. And also, so both that one and Driving Social Impact is that growing up, I had a background. I spent some time in affordable housing myself in Section 8 housing in Berkeley, California. And, my mom wasn't the most stable. She suffered, with some behavioral health, mental illness. So growing up, it was kind of rough. And so the mission overall for, developing naturally occurring affordable housing and providing a stable place for residents comes from a very personal mission of having, lost a brother to homelessness, having experienced some challenges growing up, and also having experienced, after my mom was stable and was, on a medication regimen, was that, she had a difficult time even back then finding affordable places to live. And so a lot of my mission comes from that. And it's in those two properties on North Commerce and Magnolia are in a designated opportunity zone, which by definition, federal definition and federal guidelines is that they're underserved markets. So I realized that, wow, we can pick up these properties for a very, reasonable price, very discounted. And not only could we pick up those properties, but we could then pass the savings on to residents in a form of 20 to 30%. In that particular area, I want to say, if I recall correctly, it was right at between 25 and 30% or 32% below market rates, if not more. So we were able to pass those savings on to residents. And at that time, we weren't a formal impact fund. However, to look back and to go back and retroactively apply, we certainly hit our sustainable development goals there prior to becoming a formal impact fund offering. So the motivation for that particular property was the area was underserved. It needed low income affordable housing. It was adjacent to downtown, close to public transportation, close to work centers. And there were families struggling that just needed a decent, safe place to live that was well lit, that had, sustainable improvement, LEED renovations, insulated doors, insulated windows, new HVAC systems, and really quality apartments. It was a unit mix of one bedroom. So there were 2 studios, there were 1 bedrooms, and there were also 2 2-bedroom units there. And we were able to provide some really fantastic social impact affordable housing at that particular property. Oh, and by the way, we had a return even when we exited to another affordable housing developer, local developer who was really big on affordability and worked with a lot of nonprofits for affordability. We were able to exit right at a 2.5, 3x just after about 4 or 5 years.
You really have had some remarkable success in this space. You have in the past shared some stories, though, with us about how you have interacted with the individuals, the human beings who live in the projects that you own and manage. I wonder if you'd share a story or two with us, because I think you've demonstrated the human side of this as well as the fabulous financial success that you've had.
Yes, one story that really sticks out in my mind is just recently I was in LaFountain, Indiana, at one of our properties in Indiana. Then I'll get to a Las Vegas story that's much more relevant to the offering at hand. In Indiana, so the address, if any of the audience would like to Google the address and see the news stories, the address is 121 Fountain View Drive. So it's, yeah. Oh, and I can see the comments now in the live chat. So the address to that property in Indiana was, and a minimum investment is $1,000 for a rancho. Someone just asked. Yeah, I believe that's what it. Yeah, $1,000. So 121 Fountain View Drive, LaFountain, Indiana, 46940, and you'll see there that the water was shut off to the residents in this particular community. And there's some very low income there. That county, Wabash County, is low income. And there were some low income folks. And there was one particular family, a husband and wife who was elderly, who take medications. This was a previous owner, by the way, not proactive. And so, excuse me. And so went into this community, was able to work with the town, get new water meters, installed, and we were able to come in and get water services back on. One particular family stood out because after we took over the park, they had to flee their home because they had heart condition. They're on a lot of medications. And so they called me up on the phone and I says, okay, you have this house here. And they called and they were kind of irate. They were older people. And they said, Mr. Williams, they kind of associated us with the previous owners. When will you be in town? We lost our house and we had to move to an apartment that was much more expensive. So I went to the property, met with them, and was able to buy their house from them, so that they have something to, cushion, the immediate move and all of these things. And for anybody that knows what it's like in affordable housing or what it is, even for just working people who aren't in affordable housing, is that here it is. These people had the expense of uprooting and moving, elderly people on a fixed income. We were able to buy their house. So no sooner than I had to brought money order, went to the post office and got money orders for about 2,500 total. Their house was really worth about 8 or 900. However, in the interest of social impact, went in and met with them. I'll just give you their last name, the farmers, and they were just, still irate when I met them in person, and that's just like, you know what? I understand. Putting my psychology hat on, I said, I understand, the hardship that you've experienced, etc. I was able to buy their house. No sooner than I bought that house, I got a phone call about 2 weeks later, and I thought it was a telemarketer. This lady calls me up, Miss Amanda, and she says, "Look, she says I'm looking for an affordable place to live. I hear that now by this time we have brought in new homes, and for those who'd like to get a link to the video, Bill Houston can send over a link to our LaFountain to the footage of the new homes we've brought in, the impact we've created there." So fast forward, so I'm talking to this lady, Miss Amanda. She says we currently live in some affordable government housing, but it's not safe. There's shootings, excuse me, that they've experienced shootings, violence in the neighborhood, some crime. She says, I have a health condition. I'm on oxygen and I have my daughters and I'm looking to, rent a place that's much more reasonable. I says, well, ma'am, how much, what's your income? She said, my income is $1,100 per month. I said, what are you currently paying in the place that you live? She says she pays 30% of her income or 300 some odd dollars. I says, you know what, Miss Amanda? I says, we have a home that work out for you. I says, we'll go in, we'll make some improvements to it and we'll assist you with it. So long story interesting, the same house that I just brought from these people, I was able to give to this lady for $300 a month. I say pay $300 a month for the space rent. So no monthly rent, the space rent. And then we'll assist you. So long story interesting, she's currently in that house. You'll see an impact video from her in the next couple of weeks when our videographer goes back out. But when I was in Indiana about a month ago, she stopped me and she says, Mr. Williams, she had tears in her eyes. She says, thank you very much, for providing this place. My condition is such that at some point it'll get worse. I'll pass away. But my daughters will have a place. And she has some young daughters, like 19 or 20. They work at Dollar General in another place. She says, my daughters will have a place to live, paying the $300 a month because we locked in her space rent under the formal name for it is tenant protection program that the government rolled out, and it's voluntary for park operators. So under our resident protection program, we fixed her space rent at $300 per month for the next 10 years. And she was just really happy about that. And that's just one of my favorite impact stories is that, wow, we just didn't realize how much we would be able to impact someone's lives. Now let's go to Las Vegas. Las Vegas, directly across the street from our Rancho offering at 1735 North Rancho Drive. And those are some of the videos you'll see. And also we have more collateral, video footage, testimonials, information on that particular property. We were able to provide what's called second chance affordable housing. So imagine that there are low income people who are low income, they need a place to live, and as part of that needing a place to live, they have an eviction on their record, or they've fled a domestic violence situation, or they have challenged credit, or they only have so much documented income. And I'm thinking about, even from our migrant community, or they don't have from the migrant community, they don't have the proper documentation to rent a place. However, they come through different social service agencies. So we work with Help of Southern Nevada. We work with Hope Link. We work with Salvation Army, all these different places. And so what has happened is we've gotten a lot of people who have come in and they've had previous evictions or their credit challenged or some other issue. And there's agencies and landlords who won't even look at the application, because it's a very competitive process. And not only are we able to provide housing for them that's safe, decent, affordable, up to date, energy efficient, sustainable, but we're also able to help them get back on a path to getting themselves together, working, employment, and they pay below market rent. Our retention rate with our second chance housing people is about 98%. So that's one of my favorite stories as it relates to housing is Miss Amanda's story on affordability in Indiana and then in Las Vegas, Nevada, is our ability to create second chance housing in an area that so desperately needs it. I had a call yesterday from a social worker. I had a call the day before from a manager. We also work with an agency called Liberty Wellness. And we just closed on an 8-unit building in Nevada that we bought, distress sale. A lot of our properties are distress sales. And that is how we're able to pass on savings to our residents, is that we buy properties well below market price. We renovate them, go in, make improvements, and then we're able to pass that savings on to people in the form of reduced rent and second chance housing. So over my career, we provided affordable housing for about I want to say about 1,800 families. Probably no, more like 2,500 families. I just thought about that. So I have 6 years as a fund manager, 26 years in real estate. I started April of 1999 in real estate. Uh, Other thing is I'm from Oakland, California originally, so my background is very diverse in the Bay Area. The park, one of our success stories is we bought a 187 space, 40-acre park in Orangeburg, South Carolina, which is 1 hour from Charleston, 40 minutes from Columbia, South Carolina. We bought that park. I went into that park, and this is the park that we used to start our fund in August of 2019 for our regular fund investors who are accredited. And we went into that park at $1.2 million, and we did an exit for $5.2 million. So we went in that park November 2018 at $1.2 million, did an exit August of 2022 for $5.2 million. And so we had a 3-4x on our investment. However, we had a 10x on our social impact. So our social impact went into the property. The property was 6 weeks from being condemned by the local officials and the Department of Health in South Carolina. We went in and we turned around that park. It had infrastructure issues. It had drugs, crime, sheriff calls. It had about a 20, 25-year track record of not being a viable place to live. And we were able to go in, turn that property around, sell it to a social impact affordable housing REIT. The name of the REIT is UMH, and they're traded on the big board, UMH.com. And we were able to provide housing for people, and UMH has continued to come in and provide affordable housing, social impact housing. We have follow-up videos. We sold it in August of 2022, and we've since gone back and followed up. UMH, by the way, owns 30,700 spaces across the United States, and they don't allow anybody to sublease in their communities. However, they've allowed Proactive to retain ownership of several houses in that particular community. And so we're very thankful for that. So as it relates to social impact, I don't know how many in the audience are familiar with social impact. So we have verified social impact. What does that mean? So we're only the only group in the United States to have a Morningstar Sustainalytics social impact report in affordable housing published on a Sustainalytics site in the United States. We also have a third-party impact report from impactevaluationlab.com, which is tied to the Sorensen Institute, which is a really big deal in the social impact space. And we also have, we're undergoing a Blue Mark Fund ID certification, bluemark.co. Those are really big impact companies that do third-party verification. I'm sure you've heard previously of impact washing and things of that nature. Proactive does not engage in any of that. We have verifiable impact. Are there any more questions? Well, let me look at the chat here.
Well, yeah, Dr. Van, you've got such an amazing story. We have just another minute or two.
Okay.
As you think about this work, I'm intrigued by the fact that you are operating really pretty nationally. You've got projects scattered all around. How do you pick a place where you're going to tackle a project?
Yes. So we get a lot of calls. We're in a lot of areas. Currently, I'm in Chicago. Well, actually, Harvey, Illinois, which is a Chicago south suburb. In our office here, we have a new office. We're in South Carolina, Indiana, Ohio, Illinois, Nevada, and we're moving into California over the next few weeks. We have some projects there to provide some rapid housing. I forgot to mention that. One part of our secret sauce is rapid housing. We get a lot of off-market deals. Oh, also, we're in contract to buy about 450 units in Selma, Alabama. Um, excuse me. One of our secrets is that we have a network of brokers who call us constantly for multifamily, manufactured housing, SRO housing, with off-market deals. So that's how we source a lot, and we have we have on-site managers at all of our places. Um, is how we do it. Oh, so how much of it? 100%. So I'm glad you asked that question. I have a question from Community Finance Academy. Our
Yeah.
housing development is 100% affordable. So we buy NOAA housing, naturally occurring affordable housing. That allows us to pass savings on to our residents. And it also allows us to do what's called rapid housing. So I'm a big believer in being able to provide housing anywhere from 2 weeks to about maybe 3 months on the high end. On the longer term end. If we have a huge project, maybe 4 months. However, within that 4 months, we're usually able to start providing housing, like I said, within about 2 to 3 weeks.
That's amazing.
Yes.
That's amazing. Well, Dr. Van, thank you so much for being with us today. I really appreciate your tremendous work. I congratulate you on it, and thank you for your sponsorship. I thank you for your time today. I want to encourage you strongly, Dr. Van. Pop into that Zoom backstage area. There's a big group in there eager to chat with you and learn more about what you're doing in there. So pop in. Again, folks, I want to invite you to check out the VIP experience. It is pretty cool. Like I said, we've got a big group in the hanging out in the backstage area. So, Dr. Van, I hope you'll take advantage of that. It's now my pleasure to introduce our next speaker, Andrew Dix. Andrew is the founder and CEO of Crowded Media Group. So he publishes Crowdfund Insider. It really has been for more than a decade the definitive voice on the crowdfunding industry, keeping track of all the news. And he does just a brilliant job. There's so much going on. There are constant debates and news and tweaks and adjustments to the regulations, and no one covers it better than Crowdfund Insider. Everyone in the industry knows the name. We all follow it, and I'm just thrilled to have Andrew here with us today. Andrew, we're thrilled to have you and welcome you to SuperCrowd25. Take it away.
Thank you very much, Devin. Hello, everybody. As Devin did a great introduction, I am the founder of the Crowded Media Group, and we are the publisher of Crowdfund Insider. We cover all things fintech, including securities crowdfunding, and we've been doing it for a number of years now. I do want to thank Devin and SuperCrowd25 for inviting us to be here. It's a pleasure and an honor to address the people that are attending this, and I thank everybody in advance for listening to me and what I have to say. I only have about 15 minutes or so I'm going to jump right in and share some of my thoughts on the crowdfunding industry. And first of all, sometimes we call it investment crowdfunding. Sometimes we call it online capital formation or securities crowdfunding. Other people call it community round, related crowdfunding. It all kind of means the same thing. We're not here to define it. We can't define it. In the end, it's raising money online and selling private securities. And I don't want to get too stuck in the weeds here about terminology. I will say this: from our point of view, rewards is not crowdfunding. That's e-commerce. You spend some money and you get a discount if you wait a certain amount of time, and hopefully the product shows up. We only cover securities crowdfunding or online capital formation. Online capital formation started with the Jobs Act of 2012, obviously signed into law over 10 years ago. There were effectively 3 different exemptions that enabled firms to raise money online: Reg CF, Reg D, 506C, and Reg A. Each of these accomplish the same task in slightly different ways. Reg CF, you can raise up to $5 million by filing a notice. Filing is fairly simple to do, and it's not that costly. Reg A, you can raise up to $75 million. You must have the offering qualified by the Securities and Exchange Commission. So it's a greater undertaking. Both those offerings can be accessed by non-accredited investors. We're going to talk more about that later. And then there's Reg D, which has been around for eons. It's the largest of the exemptions. You can raise an unlimited amount of funds, but only from accredited investors. And like I said, we're going to talk a little bit more about that later. When you raise money online, you can sell equity. Some people used to call it equity crowdfunding. That's really a misnomer. You can issue any type of security you want to issue: equity, debt, safes, revenue share. You can do convertibles, which VCs like. It really kind of spans the spectrums. It's basically it's a private security marketplace is what we're talking about. What makes a successful industry? Well, I say sustainability, and this is something that I continue to emphasize, and I will continue to do so. For this industry to be successful, it has to be profitable. That's very important. If it's not profitable, it's going to go away. The platforms that participate in this, and this is funding portals or broker dealers, they must be able to generate a net income over time. And some of them are doing that. Some of them are not. That's how they're going to be successful. For issuers, obviously, you need to raise sufficient money to execute on your vision. That's vital. If you can't do that, it doesn't work for you. For investors, you have to see a return on investment. Now, when I say that, that means on a portfolio basis, similar to venture capitalists. Not every investment is going to turn out, great, but over time and with a diverse portfolio, you need to see a return on the investment. And I think that there needs to be more emphasis on that from the platforms and from the industry in general. And I'm going to return to that a little bit later. So what's new or forthcoming? Nothing is static. The rules were established many years ago, but they have already changed. The SEC has made changes, the Congress has made changes, and changes are going to continue to happen and take place. And that can be a good thing for both investors, platforms, and issuers. And there are several things that are in the works that are going to impact the industry. And I think it's always important to talk about this and look at how things are evolving, because you have to adapt. If you're an investor, you have to adapt. If you're a platform, you have to adapt. If you're an issuer, you need to be up to date and ready to adapt. So I'm going to talk about a few of these things. There's actually more of them in the queue, but I only have a short amount of time here, so I'm going to try to cover a lot of territory pretty quickly. First of all is the Genius Act. Now, everybody's probably heard about this. This sets a federally regulated guidance for issuing stable coins. Why is this important? Because when we talk about stable coins, it's really updated payment rails. It's not really crypto. It's how you transfer value, how you make payments, and how this is going to happen in the future. This streamlines the process for transferring value for everyone. That's a good thing. Now, you're already seeing platforms offering this. You're seeing Start Engine doing it. You're seeing Dealmaker doing it. You're seeing Republic, and I'm certain there's others that are doing it now too, because it just makes sense. You can transfer value quicker, more secure, and less costly. So that's a good thing. This is law, and so the changes are already taking place, and the changes are going to continue as more and more entities realize they can issue stable coins. You just saw the state of Wyoming announce that they're going to have their own stable coin that they're going to issue. It's called Frontier Coin, which is kind of interesting. I didn't really anticipate that, I guess. Next, I want to talk about the Clarity Act. So is the Clarity Act about crypto and digital assets? Yeah. But what's really happening here is you're going to see a merging of traditional or establishment capital raising with the digital asset sector. It's inevitable. And this is going to be good for the industry. Now, the Clarity Act is not law. It's been approved by the House, and it's over in the Senate right now. And the Senate has its own opinion on how things should operate, but their draft legislation is pretty close to what the House is going to do. I expect this to become law by the end of the year. Now, it'll take some time to update everything, but I really think it's going to happen. The market infrastructure bill is a heavy lift, though, because it impacts everything. It impacts the Securities Exchange Commission and the Commodity Futures Trading Commission. Under the bill, the SEC is going to have greater oversight of digital asset commodities, is what they call them. And so that's going to be, both primary issuance and secondary trading. So this is a big change. This is one of the biggest changes to our financial market since maybe the 33 or 34 Act. So it's really a big deal. In the bill is also an exemption for raising up to $75 million. Now, you're already seeing platforms taking note of this because they want to be in this sector too. And so you're going to have broker-dealers like Dealmaker, who's been to the SEC to discuss specifically this. You have Republic that's already doing some of this, and others are going to follow suit. Investment crowdfunding and digital assets are going to merge. Digital securities are inevitable. It's just going to happen. This is going to take place over an extended period of time. But, eventually it's going to be the norm. And we're not even going to talk about digital securities or digital assets anymore. It's just going to be securities or commodities. That's what's going to happen over time. Some of the aspects of the bill, and again, this is not final, the language is going to change because Congress likes to tinker with things before they get it wrong. There's going to be a requirement for disclosure. There's been some talk about disclosure similar to Reg A in a primary offering. That's probably a good thing. There's the whole concept of decentralization and blockchain maturity, which I'm not going to get into, but there's been a lot of discussion of that in the crypto sector. And when does something become effectively a commodity because it's decentralized? Some of you may remember that Bitcoin was always deemed to be a commodity and not a security. At one point, the SEC said Ethereum is not a security. And then the last SEC said, well, maybe not, it could be. This is going to drive clarity for this. It's going to discuss and provide guidance as to how you can trade digital assets. And effectively, any ATS will be able to trade these digital assets that meet listing standards. And for already established firms, there's going to be like a period where you will actually register with the CFTC and the SEC to offer these services. But if you're already providing the services, you're going to have a grace period where you make certain that you abide by all the rules and to offer services going forward. But the established platforms, crypto exchanges, are going to continue to exist. Interestingly, the current language in the bill says there's not a limit to access to accredited investors only. So this is kind of a big deal because accredited investors are currently able to access Reg D offerings, which are only available to them. It's the largest sector. The language right now says both non-accred or it says that you cannot determine based on net worth or income. So that's a big deal. There'll be provisional registration for brokers, and there's also provisions for international reciprocity. That's a big deal too. I mean, you think about that. That's one of the reasons why the crypto industry grew so rapidly. It wasn't domestic. It wasn't stuck with one jurisdiction. You could trade these assets, even if they're bogus, anywhere in the world, and you just had exceptional liquidity. So that's a big thing. So again, I expect something to be signed into law by the end of the year. I don't know the final language. Once that comes out, everybody's going to be talking about it and throwing in their opinion. We will probably be doing the same at some point later this year. But it's a good thing for the industry. So here's something that I mentioned I want to talk about before is the definition of an accredited investor. This is something that I've disagreed with for years because it's a form of discrimination. Reg D is a huge industry. It's measured in the trillions each year. Now, a lot of these are for nuanced securities offerings, but it also is the biggest sector for private offerings from private firms. It's just an enormous industry. The SEC doesn't even really know how big it is because under the rules, you have to do a notice filing, which is 2 sheets of paper, and just file something, say, hey, we expect to raise this much money, and we have raised this much money within the last 2 weeks, and then that's it. So as long as you file a document 2 weeks after you've raised your first money, you're good in the eyes of the commission. So you never have to tell them how much you've raised or when maybe you went over, or maybe you didn't raise, you raised less. So the SEC doesn't even really know what's going on there. But what is going on there is most promising firms use this securities exemption. So big firms like an Uber or any well-known tech firm initially raised money under Reg D, and today smaller investors are cut out from accessing this. So there's going to be a change in that, and you're already seeing platforms participating in the private securities markets with both primary offerings and secondary trading, and some of the platforms that are providing secondary trading include EquityZen, NASDAQ, Forge, Hive in Canada. Start Engine has made a big move in this. Microventures, they've always been big in secondaries, and Republic. But again, these are limited to accredited investors. That means smaller investors aren't allowed to participate. And again, it's my personal opinion that a smaller investor should have access to the very best investment opportunities out there. In fact, I would like to have a preference where the smaller investor would get access over big money, but that's for a different day and a different conversation. The current legislation that is in the works has been approved by the House and is over in the Senate is the Fair Investment Opportunities for Professional Experts Act and the Equal Opportunity for All Investors Act of 2025. Effectively, one mandates a test where you sit there and you basically say, I understand it's risky. I can and probably will lose all my money. But I understand, how securities, work and operate. And the other one basically says, well, if you have certain licenses or an applicable education or other, you can be deemed accredited. As it stands today, you're accredited if you earn over $200,000 a year or $300,000 if you're married, or if your net worth is over $1 million, not counting your primary residence. I think that's wrong. I think that if you are sophisticated, you understand the risks, you should have access to these. And so this is going to change, and this is going to impact investment crowdfunding. And all the platforms are taking a look at that. Now, do we know exactly how it's going to impact the industry? No, we don't, because we don't know the final language of the bill. But I predict and anticipate it will be a good thing. Let's see. Let's quickly, I'm running out of time here. Tokenization, real world assets, digital securities, as I mentioned before, real world assets, digital securities, it's all going to happen. It's going to become the norm. You're already seeing billions in tokenized assets. You're seeing platforms and broker dealers tokenizing public securities. This effectively means that you're going to have, better back office operations. It's really not that sexy, except for, how people hype it up. But it also means that you're able to do more novel offerings. You'll be able to create securities out of things that were difficult to securitize before. And so I think that's a positive thing. There's a recent development with mirror tokens. And I know some people don't like this out here. Republic is offering mirror tokens. Robinhood is planning to do the same. What they're doing is they're taking existing holdings in private securities, probably issued under Reg D, and they're doing a Reg CF offering to allow non-accredited investors to access this. In my opinion, that's a good thing. If I would like to have, would I like to have access to, say, to invest in OpenAI before it goes public? Yes. Would I like to be able to invest in SpaceX before it goes public? Yes. I think this is a positive thing. It gives people more choice. And again, I'm always for more choice and less government intervention, because we know that, too frequently the government gets things wrong. I added a separate slide in here, which is not going to show up your screen, but very quickly, I want to mention alternative assets and 401k accounts. This is going to happen. There's an executive order. The U.S. Department of Labor is reviewing it now. And this means in 401ks, you're going to be able to invest in digital assets, private securities, and other non-traditional securities, which will provide greater diversification for the individual investor. I think that's a positive thing. I think that the environment that we're in today is a very good one. It's an exciting one. It's somebody said it's a golden period of investment opportunity and innovation. I agree with that. Today, people are encouraging access to capital. They're also encouraging access to opportunity for more investors, smaller investors. This is in contrast to the last administration. I don't care what your politics are. I just want to see more opportunity for everybody, especially the smaller investor. And I want to see more access to capital for smaller firms that are seeking to do interesting things and to be entrepreneurs. There's always the question about risk versus reward. We'll all have to understand that, greater risk can come with greater reward, but most private securities offerings go bust. That's okay. But failure is not fraud. And that's something that gets mixed up in the discussion. I also wanted one very quick note, because my time is up. I would like to see more transparency in the crowdfunding industry. And this means I want to see platforms share which offerings perform well and which firms go bust. We don't see enough of that today, and I think that harms the industry overall. I think somebody's going to eventually come around and figure out how to share that data, and some have already discussed it, but I think the platforms themselves should be pursuing this. Cedars, now Republic Europe, in the UK, does a great job of it today, because they have a secondary market where you can see, the valuations, the notional valuations of the firms that raise money on their platform. Everybody needs to be doing something like that so people can understand, how the industry is performing. Again, we want to create a sustainable industry. The way you make it sustainable, all three parts of the industry benefit: issuers, platforms, and yes, investors. Most importantly, smaller investors. Again, thank you everybody for listening to what I have to say. My name is Andrew Dix, Crowdfund Insider. Please visit our site, follow us on X, LinkedIn, Facebook, etc. And thank you very much, Devin, for putting this all together. Sorry I took too much time.
No. You're right on track, Andrew. You're great. I really appreciate the insights. As you may have noticed, the only hair I have is gray, and so I worry, about how I perceive things as someone who's had a lot of birthdays. What, as you think about this technology evolution, how do you think the crowdfunding industry will adapt over time? You talked about kind of a long transition. What do you see as being some of those key steps, quickly, please, for transitioning to a digital asset structure for Reg CF?
Reg CF is in the mix. I don't know what's going to happen to Reg CF specifically, and part of it has to do with what happens to the definition of an accredited investor. There's just a lot of moving parts, but it's still in the mix. It's a notice filing. It doesn't need to be qualified by the SEC. There's been some people that have been advocating that would be a good path for digital asset offerings, because you don't have to be qualified like Reg A. Some people like Reg A. And there was one big firm who said, hey, let's raise the funding cap on Reg CF to $50 or $75 million and use this. I think that's very interesting. Whether it happened or not, I don't know. What I do know is the SEC is working on this. They're taking a look at CF, A, D, and everything. And for platforms and participants in the industry, the bigger firms already moving on. It's like the deal maker they visited with the Securities and Exchange Commission. And one of the things they did is they pitched Reg A as the best vehicle. They're big in Reg A. They do Reg D. They do Reg CF. Republic's already doing it. Everybody's taking a look at it. You will have to do it because it's going to save you time and money. And that's big for the platforms. It's big for the issuers, and it's big for the investors. So it's inevitable. How long it's going to take, I don't know. I just know it's going to happen.
Yeah, that's fantastic. Well, again, Andrew, thank you so much. I really appreciate you being with us today. I want to encourage everybody to check out Crowdfund Insider. Thank you very much, Andrew. It's now kind of my coincidental privilege to introduce another Andrew. Andrew Field has become a good friend. He is leading a global effort to harmonize investment crowdfunding around the world. He leads the organization known as the Global Equity Crowdfunding Alliance. And he is really a great human being and a deep thinker in this space, and a really impactful leader as this coalition is gelling globally to sort of harmonize, coordinate, and conduct cross-border transactions. It'll be interesting to see if some of this relates to the digital conversation we were just having. But Andrew, let me pop you onto the screen, and I'll turn the time over to you to introduce the great people that'll be on your panel with you.
Thank you, Devin. Thank you for those kind words. That's really kind. And hello, everybody, and welcome to this session on crowdfunding without borders, unlocking global opportunities. I'm Andy Field. I'm from DaxiChain and from the Global Equity Crowdfunding Alliance, as Devin has mentioned. I'm going to be your moderator today. And as steering committee lead at Gecko, I'm seeing more and more every day that around the world, entrepreneurs, investors are getting increasingly connected, which is great because that kind of sums up our vision. But the journey to truly borderless crowdfunding, we think still has many challenges as well as opportunities. And today, what we're going to try and do is explore how platforms, technology, regulation, and community capital can help break down some of those borders. And I've got four incredible panelists on your screen right now who can bring deep expertise from across the globe, and I'd like to introduce them to you. We've got Patrice Gayton. Hi, Patrice. Patrice is Business Development Leader and Operations Manager at ISPD in Haiti. Patrice has decades of experience in grassroots investment and economic development. I'm also joined by Meseret Warner, or Meze, as I believe you like to be called, Meze, founder and managing director of Ignite Investment, Ethiopia's first equity crowdfunding platform that's dedicated to connecting entrepreneurs, especially women, with investors worldwide. We've got Konstantin Boyko. Konstantin is a fintech entrepreneur, CEO and co-founder of LenderKit, and a global voice in building compliant crowdfunding infrastructure. He actually sits on the steering committee of Gecko as well, which is fantastic. And Cameron Neal is joining us at a ridiculous time, I think, Cameron. It's probably something like 2 a.m. where you are now in Australia. Cameron is co-founder of Lend for Good, mobilizing community capital for impact ventures across the globe. Now, we've only got around 35 minutes to talk here, and there's a lot to talk about. So if I could ask all of our panelists just to be as succinct as possible when sharing views, but we're going to jump straight in. And I think we can start by sort of grounding ourselves in the bigger picture. So I'd like each of you actually, just to take a minute or so, just to share your perspective on this sort of overarching question, which is, what does borderless crowdfunding mean to you? And why does it matter for entrepreneurs and investors today? And I think, if it's okay, Patrice, I'd like to start with you on that one.
Thanks, Andy. What we're seeing within the Caribbean market, I think one of the biggest untapped opportunities is the possibility of linking the diaspora with the US and Europe sector with the crowdfunding crowd. And we have there's many Caribbeans living in those countries, and they want to help. They want to sponsor good projects within the Caribbean environment. And I think that's what with an easing of international regulations, and I think platforms that can provide different type of devices and concepts would definitely improve that sector.
That makes sense. Great, and we'll come on to some more regional differences shortly, actually. So, Meze, could you just have your take on that, please? Well, we can't hear you, Meze. If you could just.
Sorry, I muted
That's
my
perfect.
phone.
That's perfect. We can hear you now.
Yeah. For me, from our experience at least, is that, a lot of the African diaspora live all over the world, but mostly in the US and in the EU zone. And the regulation and just fragmented the regulations of every single country has been the biggest challenge. So when we talk about borderless, crowdfunding for me would be a seamless, a virtual border kind of capital movement would make really a huge difference in Africa, because billions of dollars come into the continent as remittances. And then as soon as it switches into investment, it just creates a ton of bottlenecks. So to me, is really making a seamless capital flows, between countries globally would be amazing.
Fantastic. Thank you. And Konstantin, your perspective, please.
Well, first of all, I stay on technology side, and technology is sort of global. So that's one angle. Another one, I think I represent a living example of a person who deals with cross-border things every day, because I live in one country, I have passport from another country, and my company is registered in the third country. So I have to do a lot of things, and I can do those things digitally without any not easily, but manageable. So why investment crowdfunding should be so difficult when it comes to cross-border transactions? I guess that's my perspective, and of course I would like to see it easier done. Of course, not every project is supposed to be global or cross-border. It can be very much local, and if we talk about impact projects, they are usually local. But on the other hand, there are diasporas, and there are people who might want to invest in those local projects. So let's try to make it easier.
Thank you. And Cameron, what does borderless crowdfunding mean to you, and why does it matter for the entrepreneurs and investors?
Just to pick up on Konstantin's point, it's communities being able to pool their capital to back impact enterprises to create the kind of world that we all want to be part of, whether that's local or not. It's a shared planet, and no matter where we are as investors or entrepreneurs, we need to be able to connect. The challenges that our communities face don't really care about borders and nation states, to be honest, like climate change. Like that's not something that has that a border can play any role with, right? And so we really need to be able to mobilize capital of all kinds, financial, human, social, knowledge capital, to solve these things. And that it needs to be able to go to where people are acting and where people want to see that action taken. And that's, for me, what everyone said, we need things to move at a pace that can make change happen. And
sure,
the borders get in the way.
No, I actually couldn't agree more. I think actually it's pretty much common sense. Everything that's been said there is pretty much common sense. And thanks for that. I mean, already we're kind of hearing common themes around collaboration, around trust, inclusion, opportunity. So let's actually move on to some of those more regional perspectives. Just so in Europe, we've seen the introduction of ECSPR in recent years, and that's a harmonised framework designed in part to make cross-border collaboration simpler across the EU member states. So, and the intention there, it's been clear, it's been positive, but the reality is that the implementation of that has taken longer, and it's proved a bit more challenging than many expected, actually. As a result, the benefits have been a bit slower to materialise, and the framework is still in the process of kind of kicking in to deliver its full positive impact in terms of sort of helping to break down the borders. So, again, I'm going to come back to Patrice on this one. Patrice, you've worked extensively in the Caribbean, obviously. What unique opportunities or untapped potential do you see for cross-border crowdfunding in that particular region?
Well, following up on what you were saying, Andy, I mean, and based on what the Caribbean dynamics, I'm seeing what you're seeing is there's different groups that are setting up themselves. Like, for example, the Eastern Caribbean crowdfunding framework, and it's a patching of 10 countries, 10 small countries in the island, and they're coming up with regulatory framework that's politically aligned with EU regulations and US regulations.
Okay. Yep.
And also, I know there's a good one that's coming up that's real helping hands, and it started during COVID. It offers their particularity is like you have 90% of the donations. You can keep the 90% of the donations, and you don't need US banking, or there's a lot of vetting that they don't need. So if they can grow and if they can promote this, I think it offers a lot of advantage for different crowdfunding platform within the region.
Okay, that's really interesting. So there are some efforts already in the Caribbean to sort of, even on a regionalized basis, to sort of harmonize the regulatory framework, which is really interesting. Meze, if we could,
one also.
Yeah, sure, Patrice. Yeah.
It's a woman-led network. It's called Fundrise Her. Okay, and their goal is to raise $1 million over 10 countries and spread it out to 50 women entrepreneurs. So it's more direct. It's a project-led, and so it's interesting to see as well. And
that is fantastic. Yeah.
Yeah, and during our earthquake also, 2010, there was this program that was supported by a microfinance institution in Haiti. It was Fonds, and they had a crowdfunding platform in order to promote those little projects. It's not there now, but it's an idea of what can be done.
Oh, it's a great example. Yeah, absolutely. Fantastic. So, and Meze, if I could just come to you, Ignite Investment is connecting African entrepreneurs with investors abroad. What have you learned about bridging that sort of geographic and often also cultural gap?
It has been like I said, I think regulation is the biggest hurdle. So crowdfunding. A lot of people can claim that they are raising funds for this cause, that cause on the internet. So creating trust is the biggest thing. You can talk to any diaspora. So number one, the number two, the number three concern they have is trust. So when it is remittances, it is very easy, right? It's going to your moms and dads or friends and stuff. It's consumable. You don't care coming back and things like that. So it's no big deal. But as soon as you say it's investment, they want to know where is it going, who is it going, how's the company performing, all a number of questions, even if it's like $100, right? Even though we say we are compiling that. So for us, it has been creating a huge partnership. And then we said that we're going to focus in one region in the US because there is a big Ethiopian and African diaspora where they are sending billions of dollars as remittances. And also that we know we have data that shows that a lot of the diaspora does actually invest a lot as long as they get structured, dependable, transparent kind of investment. So for us, is like, okay, well, how do we create that trust? And it has been complying as we can say, okay, we're regulated in the US, your money is safe, that they can see, they can touch. We also create a system where they can be directly linked into the fundraisers on our platform so they can see it transparently. And also, the context that we can say what they are solving, the biggest challenges on the continent being solved, as well as being also regulated locally. So it is kind of being compliant in multiple jurisdictions that gives them, the confidence that we are not just collecting money and disappearing. So that's really, really important. But also even others who want to jump in when they see the diaspora, we try to create blended financing that would encourage them to come in. So it is a multi-pronged approach that we're doing, but compliance and regulation is one of the very biggest trust building factor, but as well as finding fundraisers that are dependable, that you can say they are not going to take your money and disappear, so that they can see the money working. And even if it's a very small fraction of the money they are sending, that if they can get it back, they can reinvest it, they can see their impact they are looking at, and things like that. So all those factors are really, really important. And also, the investability of the fundraisers, as well as, many factors. But these three things are key in order to make cross-border investing work. One thing I think Patrice, hearing him is really amazing, especially as a person who cares about like women empowerment, mentioning what they are doing. It's really encouraging.
Sure.
Because I think one of the very discouraging part of struggling with crowdfunding in Africa has been we are very few. There are a ton of crowdfunding platforms in Africa, but they all tend to be grant based, like GoFundMe, African version. So we really do not have any kind of harmonized effort to make that happen. There has been the African Diaspora Crowdfunding Association, but there hasn't been a lot of progress. So we are very, very few in the continent. And also the countries have a very, very few countries have a very well thought out crowdfunding framework. At least in Ethiopia, where I am, we are implementing a capital market where they are experimenting on sandbox, where crowdfunding can be part of that experimentation. So it's very infant stage, I would say. It's advantage, but it's also a huge disadvantage to be, not having that as well. But It's coming
Sure.
slowly.
Well, look, I mean, it's. I knew for a fact that you would talk about trust, and it's something we're going to come on to shortly. But it's fascinating how both of you actually, when answering that, both of your experiences highlight not just the capital, but the sort of human connection that cross-border models can create. So I'd like to just move on now, if that's okay, to talk a little bit more about the technological aspects and compliance aspects. And this is a question. This is a question for Konstantin. Konstantin, you built crowdfunding software for platforms across multiple continents. And so from a technology and compliance perspective, what's the biggest challenge when operating across borders?
Yeah, well, on this question alone, I could probably take all the time we have, but I'll try to be short. So you can't imagine actually how many people come to us with an idea of a crowdfunding platform, and very few of them actually progress to launching the platform. And one of the reasons why they can't do it is they come before they figure out the regulation, and then once they understand how things work from regulation standpoint, they understand, okay, this is not so easy as we thought. Just build technology, launch a platform, and you're there. Regulation part takes a lot of challenges, and also many of leads we have, they come with an idea of cross-border transactions and working, because everyone thinks, okay, well, if we want to launch a platform, why limit it with one country? We can go to other markets, to other regions, raised from anywhere. And then they find out that they should be compliant not with just one regulation, but with regulations from very different parts, different countries. And like Mr. mentioned, it comes down to getting licensed or being regulated in multiple jurisdictions. This is not easy, even in one location, but in multiple, that's very difficult. But if we talk about technology, then from regulation, and there are a lot of implications to technology, and that includes payment providers, and this is probably one of the biggest pain points because there is no universal like crowdfunding payment solution all over the globe. If you go to Europe, then there are players which work only on European market. If you go to US, there are a lot of them, well, not a lot, but a few of them, but they also work only on the US market. So especially when there is an idea of cross-border things, this is the most painful thing, to find a reasonable payment solution. The same goes to KYC or identity verification, because many things are also local and localized for a certain country. It's easy to do within one country, but then when you add to the mix other investors from abroad, becomes very complicated. And even Andy, you mentioned the CSPR, which is supposed to enable cross-border and kind of pan-European crowdfunding in Europe. But in reality, even finding a payment provider which will work in all European countries is not an easy task.
Difficult, yeah.
And we found it out very recently with one of the customers. They've signed one of the big names on the market, and then 6 months later, they understood that they can't work in a specific European country within the European Union, just because they don't have necessary authorization or necessary procedures which are required in this country by central bank. So basically, the framework is unified, but the implementation and the rules and the laws are very different in in local countries and member states in the European Union. So unfortunately, even there are a lot of challenges, and they impact technology as well.
Yeah. Okay. And again, I suspected you'd say that. And I was going to ask a question. I've decided not to ask it, but I'll tell you what it is, because I don't think we've got time to answer it. It's so complex. But the fact is that regulatory environments do vary dramatically. And my question was going to be, how do we sort of overcome this patchwork so that cross-border crowdfunding can grow? But I don't think we can answer that. Such is the nature of the question. I don't think we've got time to answer it in this session. So I think that's probably one for another day, and certainly one that Gecko will be trying to solve. But one thing is for sure is that clearly regulation, it can either be a barrier or it can be a competitive advantage, depending on how it's approached. And I guess that's kind of a perfect segue to the role of social impact and community capital. And this is where I'd like to come to you, Cameron, if that's okay. So, Cameron, your work focuses on mobilizing community capital for impact ventures. How do you think global crowdfunding models can stay value driven while scaling internationally?
I think it's what Messe was saying before, right? Like the whole secret sauce to all this working is trust and trust chains. And if you break that trust, you begin to not do what's on the tin, what's on the box that you're promising, like you don't have a platform. You need to be able to build trust and maintain trust from investors and entrepreneurs and connecting them up. These entrepreneurs are, often working in very challenging environments. Investors need to not only be able to trust us to get the money to them and to get the money back, but they also need to trust that those entrepreneurs are going to deliver the impact that they say they're going to deliver.
Yeah.
So, it's an interesting dynamic, I think, when and we've been touching on it with all the conversations so far about how you balance efficiency that you need for scale, which comes with technology, but fuse that with the really human touch points and elements that kind of build trust and relationship and that give people a strong sense of who I'm connecting with, what I'm connecting with, how I experience them, how I trust, how I see my money being put to work. And so I think it's an interesting thing that we have to grapple with, which is we have these technologies that can enable us to do stuff all over the place efficiently, but you tend to, as you pursue those models, almost astroturf everything and make everything look homogeneous. And that's not the world. Like in our experience, what's actually super interesting is the nuance of each particular place and community where stuff is happening. And how you get that balance right, I don't think we've got it right all the time, but how you get that balance right between that kind of nuance and deep storytelling and human element of understanding what's happening, particularly with the SME sector that we work with, they're highly susceptible to shocks, both personal and, and global and context specific. That very often means that investment is not a straight line in terms of what you said was going to happen is what happens. So how do you maintain trust in that context? Well, you need to be able to be transparent, to provide information about what's happened, what's gone on for you, and explain that to people. And what we've seen with our model is that if you take your investors on that journey and you provide that really human connection and insight, like those investors are learning too. They're learning about, oh, I had no idea that's what was happening on the ground in Kenya. Like, that's really interesting. I'm going to go and do some more research. What other things can I do to help you? Right. And so you kind of, people want it to be easy and they want it to kind of be efficient. But I think there's also a part of us that, we're human and we like some of that messiness of human connection and interaction, which is real. I don't think we all want just AI agents talking to each other, investing our money and not having any humans in the chain. As efficient as that would be, I don't think that's what will build trust and those trust chains that makes this work. That's my perspective.
I think I think that makes a lot of sense. I think what you're saying as well is that the storytelling element is obviously key in building that trust. I'd open it up to everybody else actually. And does anybody else have any sort of examples of trust building measures that work best for convincing the investor in one part of the world to put their money into a venture that's located thousands of miles away?
I have a thought which I can share.
Sure, Konstantin. Yeah.
So basically, I would compare it to e-commerce, because what makes people trust all those marketplaces where you buy some products on the other part of the world and then get them shipped to you, and so you believe that those products will actually arrive and they will be delivered. In my mind, this trust is about brand awareness. So first of all, you have to trust the brand, like Amazon, for example, or some marketplace where you buy it, and then you check the seller, and then there is sort of reputation and other things. And what's also more important, that this thing works for others. So there are success stories of people buying those products and getting those products. So apply this analogy to crowdfunding, I think there should be trust to a platform, so that the platform is trustworthy, and that may be achieved with success stories, with regulation, because it's harder to do wrong things when you're regulated. And then, of course, the story of a certain company which is raising funds. So this is a combination of two things. And then the third thing is the global awareness of crowdfunding itself, because if people know that it works, then there is more trust to it. And as we know, there's still work to be done on this awareness, at least global awareness.
If I can add to what,
point.
if I can add to what I was saying, what the key way that we make this kind of trust thing work with our global crowdfunding is that we work through intermediaries. So a borrower cannot list on our platform. It has to be listed by an entrepreneur support organization, a venture studio, an accelerator incubator, etc., that works with that client, that works with that enterprise. And effectively, that intermediary is staking their reputation that the borrower is going to execute. So what you have is someone representing to you that they know these people, they've met these people, we're going to work with them, we're going to support them. We've done the due diligence, we've done human due diligence, we've done financial due diligence. We believe they're going to succeed, and you can see our track record as intermediaries bringing things to the platform, right? So you don't have, who is this borrower? We've never heard of them before. Yeah. You have these other actors in the chain that you begin to build a trust score around to go, well, oh, they've done 30 before and 25 of them have worked. So for us,
there's a track record, right? Yeah.
There's a track record. But what investors value is that those intermediaries have deep knowledge of particular geographies. They might specialize in women-led enterprises in Indonesia, and so you can go, well, they know women-led enterprises in Indonesia. That's their specialty. And so if they're getting out of their lane and they're trying to talk about a borrower that's, a male business from Rwanda, they're like, well, who are you to know that, right? So I think it is about like building chains of trust. And for us, it is really about trying to accumulate that trust at a level of intermediary actors whose job it is to support the growth of these businesses, right? And so by bringing them into the chain rather than, they are intermediating between investors and borrowers to kind of provide a trust mark. And so that's one of the ways that we get around that. And to what I was saying before, they bring the local nuance. They can bring a context of, we know East Africa. That's where we work. And so we understand context, and we know why this loan will work where others won't, because this is our context, right? And so you do get more of the nuance, you get more of the granularity, more of the reality of the world not being a homogeneous place when you have intermediaries that can be specialists and experts in particular geographies or particular industries.
Yeah, that's
just
an interesting
to add,
approach.
if I can add a little bit to what Neil was saying, is that for us also, we added different elements to create that kind of trust, and also just getting awareness to it. Is one, we work with a well-known bank in the country, in Ethiopia, and then we created and we had a partnership and we had MOU. So now we have a custodial services. So we tell them that it's money does not really come to us, so it's directly transferring. Investors do send their money, but it goes to a bank, whether it's a successful fundraising. If not successful, there is someone who's taking care of that whole securities movement. It's not only the money that gets as a custodial services, but also in share management, in how they're going to get their exits later on. But especially in Africa, one of the biggest concerns that we hear from the investor side is, how do I get my money back? How do I know all these things happen? So we created that whole ecosystem of partnerships, like as I mentioned, but also in the US side of it, we have SPV creator partners and others even. So that creates a lot of trust, because we do partner with well-known institutions.
Yeah.
Are that gives them confidence. On top of that, we created an accelerator on the side as a different consulting service where we work with the fundraisers, because in Africa, making also investable companies is a challenge. So we do that, and what we create a community is we invite potential investors to be in the demo day. They can be virtually connected. So we had quite a few of them actually who participated demo day and say, can I see the pitch deck of this company that was in this accelerator program and things like that. So they feel connected. They were part of the process in vetting companies and things like that. So all those kinds of layers create additional trust factor that it's not only trust factor for them, it kind of builds that community, that involvement, that impact, that it just brings a whole dimension to the crowdfunding investment.
Yeah, so adding to that building of trust, working with established partners, establishing credibility, and also again going back to something that Cameron said earlier, we're talking about being very transparent, and I think that they all contribute to that. I'd just like to move on quickly. We're running out of time, so I just want to kind of make this real for the audience. Really, I'm just wondering if any of you have an example where cross-border participation has either contributed to or transformed actually a venture or an ecosystem.
So I will just jump on that because I think the Ethiopian Renaissance Dam is well known in the world. I think even we hear it in politics, like the Egypt-Ethiopian conflict and other things. That's a huge Ethiopian multi-billion project. Even though it wasn't through the technology of crowdfunding, but the government was so smart to involve a lot of the diaspora in just crowdsourcing the whole thing. So it became like a community built, a really big project in the country, but it was a crowdfunded. And for us also, that what I'm so proud of is we were part of one of the public-private partnership project in Ethiopia, building some convention center in the country. We were involved in. We did get involved almost about 600 Ethiopian diaspora in raising small equity shares, even that without the technology, but pretty much crowdfunding without it. So it was soliciting, it was passing. It's almost Reg D. So those are the two, in fact, that give us a very good platform and also a very good experience for us to get into the platform and get it scaling. So those are the good examples.
Yeah, fascinating. Has anybody else got an example?
I have one. I mentioned in the beginning a lot of countries I'm connected with, and I come from Ukraine. So my example would be about Ukraine. And basically, again, it's not exactly equity crowdfunding, but with the war which is ongoing in Ukraine, there have been a lot of raising funds through different channels, and many of them are very similar to crowdfunding, just that's mostly donation-based. And huge movement, not just within the country, but also cross-border. In this context, it's very important because there are a lot of money going in for very different causes, and it's basically exploded in 2022. But moving closer to investment crowdfunding, I personally believe that there will be a huge opportunity to do the same, but also with investment crowdfunding when the time comes. Because there will be a lot of projects and investment opportunities which would be viable for investors all over the world, in Europe, but maybe not just in Europe, to invest in and support rebuilding of the country and also making money out of it, not just supporting as donation, but also getting some return. Right now, it's still probably early days. I know only one example, and it's not exactly a Ukrainian project. It's more German project, which a company which is trying to build co-living and housing in Ukraine, and they raise money through crowdfunding in Europe. And so this is sort of like one early example of how crowdfunding might help in that matter. And personally, I'm following this story and trying to build sort of awareness that this tool might help in the future. But this is more a vision than an example. But I wanted to share it.
No, that's really interesting. Look,
I'm going to throw one in, but just to tell people to go to lendforgood.io, and you can see the story of Sarvaguna Foods and Kitchen. So they're Nepali based, but they raised $90,000 through our platform to get started, and they've gone broke even in their first year, a mass catering business, and they're doing 10,000 meals a day for schools, employing 120 people, buying from 500 farmers in the Pokhara region of Nepal, and it's like transforming on multiple things with nutritious food and regenerative and sustainable agriculture and jobs and employment. And that's a very small investment, but what it enables in a country like Nepal is significant. And I think that's one of the things about cross-border and borderless is, in a wealthy country like Australia, buying impact in Australia, your impact per dollar is low. It takes a lot of money to create a level of impact. That same dollar being spent just outside of our borders in Indonesia or in Nepal, you can buy a lot more impact with that same dollar, right? And so I think there's a lot of Australians that are on our platform that like that, the ability to have a catalytic outsized impact in different markets that they couldn't have, investing within Australian markets. With $90,000 in Australia, that would disappear very quickly. $90,000 in Nepal, it's seeded a whole business that's employing like hundreds of people and impacting thousands of lives.
Fantastic. I'd encourage everyone to have a look at that. So just take 30 seconds to 45 seconds each, much like the first question, actually. I'd just like to ask one question, and it's kind of it's kind of typical of these questions at the end of the session. But if you could change one thing in the global crowdfunding landscape tomorrow, what would it be? And let's start with Patrice, please.
Yes. Well, if I'm going to look at it from a economic development perspective, and it's how do you direct? Basically, it's how can I redirect capital towards high potential ventures within underserved regions, and that would be because as we can understand, most crowdfunding activities and projects they're done in the U.S., Europe, very well-off, affluent countries, and there's a lot of capital going through there. So my if I could have a wave one is how do I gather that capital and transfer it to more less the least developed countries. So because again, in those countries, formal banking systems, credit systems is very hard to get access to capital, and using crowdfunding as an alternative type of financing would be something I'd be very interested in looking into.
Fantastic. Thank you very much. That was really succinct as well. Thank you. Konstantin, one thing you can change.
Yeah, I will say one word, collaboration, because I think there is really a lack of collaboration right now between platforms, between people in the industry. And it is too early to compete, I think, because you need to first grow the market, and then you will have space where you compete. Right now, a lot of platforms look at each other and say, "Oh yeah, I have some secrets. I don't want to share it with others." This is really not helping.
Great, thank you, Meze.
For me, I know I'm going back to the regulation. I think it would have been really good if I can just get rid of the regulation that just completely separates everybody. I'm not saying that it should be free for all, but at least sensible, where we can make cross-border capital flow seamless. I would make it like, investing in a country in Rwanda from the US should be as easy as investing in the US. Absolutely. And while we have all the protections. So somebody being in Africa should be able to have the same capital access as someone being in the US or in France. So that would have been one thing I could do if I had
Absolutely.
the magic.
Thank you. Thank you. And finally, Cameron.
Well, I would have said the same thing. So I'll say something different. If tomorrow large capital allocators like pension funds, VC funds, foundations, DFIs, and the like, that they realized the immense power of investing alongside communities in impact enterprises, and they were figuring out how to back their liquidity into all of our platforms so that we could actually move the trillions of dollars that needs to move to SMEs in emerging markets, that would be gold.
Fantastic. What a great way to finish. And I think I am going to wrap up now. I think I've got about a minute and a half left. So I think it's safe to say we've covered a lot in just over 40 minutes. We've from local opportunities to global regulation, from tech solutions to human trust. A few key takeaways that stood out for me. I think collaboration is clearly important. We've just spoken about that. We need to collaborate in order to compete as an investment class. Trust is key. The platform having the right partners, the story, having the right communication strategy in place is actually fundamental to building that trust, and is fundamental to the success really of any campaign which is going to be exposed to an international market. So it just remains for me to say a huge thank you to Patrice, to Meze, to Konstantin, to Cameron for sharing your time and insights, and to everybody for joining us for this session. I encourage you to connect with all of the panelists after the session and to keep the conversation going. And that's it from us. Just enjoy the rest of the event. And thank you, Devin, for the opportunity of being able to speak to you.
Well, you've done just a phenomenal job. We've got a couple of minutes. I wonder if you'd indulge me to ask a question or two of you and the group. But as I look at this global crowdfunding ecosystem that's sort of forming, it seems to me that that the use of digital securities could be a way to enhance the global trade, the global issuance of these kinds of things. How do you see the kind of the digital asset and the crowdfunding global community coming together? Do you think that's going to happen?
I can take it. I think the technology side, for sure, of digital asset, and if we talk, I'm not sure if you're talking about tokenization, but probably. And technical side, from technical side, for sure, there are benefits. But for it to work on a global scale, there should be that same collaboration between governments and regulators and other parties, because it's not enough to just move the digital asset from one owner to another. You need to have the underlying legal side, and that's still there, so it's still fragmented. Well, that's my point of view.
I completely agree with Konstantin. Like, I think we it's on our roadmap that we will have digital wallets, digital currency, smart contracts, tokenization. It's the only way to do this stuff at scale on a global level in terms of the back end technology. But for it to do what it needs to do, we need to have a jurisdiction where we can be based that will allow us to do that with people everywhere. And there isn't a place that you can do that now. Like the regulatory regime is not where we need it to be to make that possible. And so, I think that's everything we're talking about. Messe saying, let's just get rid of the regulation. Like, we're not saying that, but I think with the digital, one of the biggest concerns to everyone obviously is making sure people pay tax in that every nation state wants to make sure they're not missing out on tax, right? So I think there are definitely ways with technology and digital that we can make sure that happens. But we need everyone to collaborate on making sure it happens. Like, we should have a new global treaty on tax, which most governments are running away from because they don't want to do that. They get a lot of opposition from rich people in their country if they try and sign up to those things, right? So there's a whole bunch of challenges around kind of the taxation and jurisdictional elements of it. Technologically, yes, 100%. And it needs to happen for us to do this, for us to do it at scale. And it will work better. You'll get transparency, instantaneous payments, all this stuff. One of the hardest things that we all have to deal with doing global crowdfunding is banks and banking systems. They are not, most of them are not designed for international banking and trade. That is something that is a pain in their butt and something that they don't want to do. And so neobanks are coming along that are kicking their ass on that, and that's great. But I think the digital stuff can do it even better and faster. But what we need, and like Andrew was talking in the session before about what's happening in the US, and that's fantastic, but that's the US. Like that's not giving us a regime where we can do that seamlessly globally tomorrow. And that's kind of what we need really for it to work.
And to add to that, actually, the Global Equity Crowdfunding Alliance, GECA, is the talking shop to discuss those challenges around harmonisation of regulatory frameworks. So I'd encourage anyone to have a look at GECA and get involved if you can.
That's fantastic. Well, I want to thank all of you for taking the time to be a part of this important conversation. I think it is exciting to think about what we can do. And I look at the work that Cam is doing and say, wow, the focus on social impact globally is impressive. And I want to see that kind of work expand. Meseret actively engaged in moving capital into Africa. And there's so much potential in Africa, especially in Ethiopia. What a great place. And so I'm excited to see that happen. Patrice is one of the most resilient people I know. He's got this tremendous operation in Haiti. We'll be talking to Patrice a little later, doing amazing work, saving lives, and is an active angel investor via crowdfunding. We're so grateful for him and his work. And Konstantin, it's just great to have you be a part of this effort and part of this discussion. We thank you. And what you're doing with LenderKit is super valuable. And of course, Andy, thank you so much for taking the time to prepare and organize this so well. What a great conversation. We look forward to continuing the discussion with you to see if we can't help you accelerate the global movement toward crowdfunding, especially when it's got some impact.
Thank you.
So
thank you.
Thank you very, very much, all of you.
All right.
Thank you, everyone. Thanks, Sandy.
Bye.
Well, we have kind of reached an interesting moment. We've now completed a couple of hours of SuperCrowd25. Only 16 hours to go. This is such a great event. We've had some great content, and there is just so much more great content coming up. I really hope you'll stick around, come back. If you need to grab a sandwich, then come back. We want to see you participating. We've got just a ton of great stuff coming up, but we're going to take I just want to emphasize this, a very short break. This is a great time to use the restroom if you need to, but please, I want you to, we're going to play a little homage to our sponsors. I want you to recognize we could not pull this event off. We could not do the work we're doing without the great support of our sponsors. I think especially Dr. Van and the team at the Rancho Affordable Living team at Proactive. My gosh, the check they've written to support us at this event is just absolutely essential. I encourage you to check out their work. But please, stick around. We don't want to miss a minute with you.
You're watching SuperCrowd25, the biggest event in impact crowdfunding. Over 2 days, top experts, investors, and mission-driven founders are sharing how to raise capital, discover profitable investment opportunities, and change the world. Stick around. You'll hear stories, strategies, and insights you won't find anywhere else. And if you want to go deeper, join our VIP community for just $25. Get backstage access, exclusive networking, speaker handouts, and a special VIP-only webinar. SuperCrowd25, crowdfunding the future. Impact starts here.
The property was dilapidated. It was horrible. It was code violations, drugs, crime, rundown RV trailers, no parking lot, no lights at night, just nothing. Our main focus is second chance housing. A lot of affordable housing households are led by single mothers. Our portfolio is 100% affordable. So our mandate is to be 20 to 30% below market rent. I'm personally 180,000 invested. We're only one of two companies globally to have a published social impact report for affordable housing on a Morningstar platform.
What's the faster way to build wealth? A traditional savings account at 0.38%, or worthy property bonds earning nearly 20 times more. Earn a fixed 7% APY starting with just $10. Access your money anytime with no fees, all backed by real estate. Visit worthypropertybonds.com today.
The African diaspora is one of the biggest investors in the continent, but they are looking for a structured, transparent way of supporting this business. This is not donation. This is investment for return, including impact, and join our movement community. Thank you.
Join the CFPA for the Regulated Investment Crowdfunding Summit on October 21st and 22nd.
Register at ricsummit.org.
Rural property taxes fund vital services.
Only when they're paid.
Invest in real impact.
Visit invest.coretaxdeeds.com today. Behind today's biggest crowdfunding raises,
The leading CPA firm for Reg CF, Reg A, and Reg D compliance.
trusted,
Experienced.
set apart.
ISPD strengthens health for families across Haiti.
Donate today. Make an impact.
Hello, everyone. I'm Gene Massey with Media Shares, and I'm very excited to be speaking at SuperCrowd25.
Save the date for Super Green Live, the global event on sustainability and green innovation, January 22nd through 24th, 2026. We extend our deep appreciation to our supporting sponsors and co-hosts, including Potomac Growth, Energy Capital Funding Group, Move the Needle with Rob Kaplan, Ridgecrest Herbal, Stakeholder Enterprise, Renaissance League, the Global Equity Crowdfunding Alliance, the National Coalition for Community Capital, Green to Gold, and King's Crowd.
Enter to win one of 2 FireMax 11 tablets. Videos, books, and games come to life. Scan the QR code now.
Rules apply.
Welcome back, everyone. I am so excited to be able to share now with you a little about our next speaker. Our next speaker is Christopher Miller, and Chris is the CEO and board chair at the National Coalition for Community Capital. And Chris is he's a great human being. He's become a dear friend, but he is an active investor. He's leading the movement to create community funds that are investing locally via crowdfunding to participate back and support other entrepreneurs. He and his wife launched a business, raised the capital via crowdfunding. There are a few people in this world who are more nuanced, more engaged, more passionate about crowdfunding, and we are thrilled to have Chris on the program with us today. Chris, welcome to the show.
Thank you very much. That's a ridiculously hard bar to get over, that introduction. So thanks, Devin, for putting the bar like way up here. So I will do my best to try and get there. So
you'll be great. You'll be great.
Thank
Go
you.
ahead.
All righty. So greetings, friends. It is lovely to see you, even though I'm not really seeing you, but I know there's a lot of folks out there. I want to especially thank Devin for the ridiculous amount of work that it took to pull this all together. It makes me shiver just imagining all the bells and whistles, all the levers, all the things which have to go right. But I really appreciate it, and his passion. We need someone like Devin to corral all of us, to herd the cats, to nail the jello to the trees. And I'm really appreciative of SuperCrowd and of Devin's passion that's behind all of that. So as Devin noted, the National Coalition for Community Capital, the organization that I'm privileged to be one of the founding board members of and currently serving as the CEO, is really focused on community investment funds. We love investment crowdfunding, and we love all the terrific stuff that has come out of it. I know following me, I think, is Woody Neese, and if there was somebody in the U.S. that made this happen, Woody would have to get the bulk of that credit. And he's also done a great job of measuring the impacts of this, which of course is what we're all really about, not just the act of investment crowdfunding or bringing folks together. And again, I know the panel that preceded me was talking globally. We are in this session just talking about in the US. But we love the idea of pooled investment vehicles on a local level that can then partner with investment crowdfunding campaigns as businesses and projects in our communities get launched. And it is our goal at NC3 to not stop working until we have a community investment fund in every community in the country. And maybe then we'll start talking globally as well in that process. But we're busy right now doing that work and piloting out community investment funds. And about 24 communities across the country. We launched our first one about a year ago. The title of this chat is Community Investment Funds, the Antidote to Extractive Capital. And I think it's really important to kind of put this work in context. And we cannot do that without talking about extractive capital. So Devin noted that that my wife, her business, so I was the gopher and am the gopher in it, but she did an investment crowdfunding campaign with her business partners and raised capital. And during COVID here in the US, raised funds to launch a breakfast and lunch coffee cafe and candy store. And so I had the opportunity to see that firsthand. I've worked on a number of campaigns as well firsthand to see, but that one I've lived. They're approaching their 5th anniversary. And I've been able to watch what happens when communities make investments in business, and it's really good. So I started talking about Woody because I wanted to make sure to really highlight some of the important statistical information that we've learned from investment crowdfunding. There are 2 numbers that for me really stand out and I think demonstrate the power of this kind of investing. One is the equity that happens when investors come from the community, not just from a stratified group of a few that are controlling so much of the economy in so many parts of our country. So by way of comparison, in 2024, venture capitalists invested looks like less than 4% of their investment in companies whose founders were women or minorities. In itself, a pretty scary statistic, as compared to investment crowdfunding, where about 44% of those founders were women or folks of minorities. So much more close to the actual ratio of women and minorities in the population of the U.S. And so therefore much more equity. The other statistic that came out of Woody's report from last year was that we're seeing a significant improvement in resiliency when community members are involved, when the public is involved in investing in businesses. And again, here in the U.S., a commonly accepted statistic with respect to startups is a 50% fail within the first 5 years. Food is something like 80% fail in the first 5 years. So one of the things that Woody and his team did was take a look at this broadly over the last 5 years, and I'll be close in this number, but they studied over 6,000 businesses, I believe, and looked backwards 5 years to see those startups that started, and just shy of 80% of them were still in business after 5 years. And it's not surprising because what's supporting those businesses are those investors. And when they've invested in it, not just been a cheerleader on the sideline, but when they've actually invested and committed to it, they bring business with them. They bring their own business, and this is where my personal experience is great. I've seen our local investors set up shop and do work in the cafe all day long. I've seen them have business meetings and birthday parties and come after hours and do a fudge making class. And they all think of this, despite the fact that they have a debt position, as their business. And so it's really super powerful and very exciting to see. So as I said, we love investment crowdfunding. We love it even more, and we think it's even more important for us right now to focus on creating community investment funds. So the extractive model that I mentioned earlier is something that has permeated all of our communities and all of our economies globally, nationally, regionally, and locally. And it's a problem. When my wife and I moved into this community where her cafe is in a 170-year-old building downtown in 1999, there were about a dozen local banks, and they had their headquarters in this county. The villages and the cities all had their own bank and their own headquarters, and the bank presidents lived there, and the loan officers lived there, and the mortgage folks lived there. And today in 2025, there are none of those banks left in our community. The closest thing we have to a community bank, they're operating in about 10 counties in southern and south central Michigan, and they're growing. And we love the fact that they talk about themselves as local and they behave in local ways. But the fact is that that capital is diluted across many communities, not exclusively in our community. So the consolidation in the banking industry has really had a big impact on that. So the folks that used to live in our communities and make decisions about where capital was invested in our communities, paid taxes, sent their kids to school, that's gone by the wayside. At the same time that's happened, we've seen a real explosion of big box and little box stores. And it used to be that we just talked about big box stores and what they were doing, but today it's also very common for communities to be populated by businesses, small businesses that are headquartered somewhere else, that pay most of their taxes somewhere else, and that ultimately exit their capital from our communities to somewhere else. So in the last about 2 years here in my community of 22,000, we've had 10 new businesses that have opened up. None of them have been local businesses. They've all been chains. Again, some business from somewhere else that is coming into our community. And I'm going to take a giant risk here. I am a really shy artist. But I did a piece of artwork to show kind of what this extractive capital looks like. So I'm going to hold it up to the screen, and there we go. So, and I didn't reverse the screen, so you probably can't read it. But this is a little bit of capital coming into the community. There we are. We have a nice house around a pond. There's Main Street and some businesses and a nice park with a curved trail on the other side, a few houses down here. And then in the extractive capital model, they put a little tiny bit of capital in, and we take a great big chunk of capital out. And that is, thank you for your applause on the artwork. So, but that's really the extractive model is what we're living with today. Virtually any business that is placed elsewhere sits down at a table somewhere with a spreadsheet, and they look at and conclude how little can we put in order to establish a foothold in this community, and how much capital can we take out of it. And if you think of it in purely capitalistic terms, it makes sense. We want the business to grow. We want to pay the shareholders back and make sure they get a good return on their investment. But from a community perspective, it's corrosive. And because it is significant as it is right now, it means that all of our communities are struggling to retain and recirculate capital because we don't have a lot of local businesses, which is one of the reasons that it's so exciting to see what investment crowdfunding has done across the globe, but again, in particular here in the US, created a lot of small community-based businesses. And by community-based, we don't mean that they only sell in the community. We believe that any business that is housed physically, geographically in a community is a community-based business. Even if they don't sell any of their products in the community or provide any services in the community, they're a community-based business. And they historically have done good things. So we want to build more of those businesses and kind of move out of this capital extraction methodology that we have right now. And the final kind of nail in the coffin is this This you may have seen some of these trucks going up and down your street. The company is named after a jungle. It's called Amazon, and they deliver stuff every day in our community and in your community that was made by someone else who is headquartered somewhere else, who lives somewhere else, who pays taxes somewhere else. And even though it's really exciting to do that, it's like Christmas every day. You get to open up a package. You don't even have to pay to have it shipped to you. If you achieve a certain level of shopping, then it's really cool and it's really convenient and it's really easy, but it's also incredibly corrosive because that means those dollars, instead of going into our local economy, recirculating throughout the economy, moving from business to business and services and products all provided locally, those dollars go elsewhere and we don't have a chance to make them recirculate in our community. And capital recirculation within our community is what builds wealth. That's the way we do that. We recirculate money within our communities, and that dollar becomes $7 or $10 or $20. Or in the case of Black Wall Street in Oklahoma, I've seen numbers all the way up to 80 times a dollar recirculated in Black Wall Street. And what did that do? It made $1 $80. So we really need to get to the place where we're doing this. So as I said, the title of the talk today is Community Investment Funds, the Antidote to Extractive Capital. So I want to spend the rest of the time talking about community investment funds. And I've drawn another picture, so hang on to your hats. Here we go. So this is in the middle of this CIF there, a community investment fund. And then we have the circle of folks. Those are really hard for me to do, those stick figures, but I worked hard at this. And those folks are all investing in a community investment fund. And you also see arrows coming out of the community investment fund that don't exceed the circle. So the circle is the community, and they are reinvesting that. So the funds we are setting up, we piloted our first fund last year in Rhode Island. We're going to launch 2 or 3 this year and maybe 8 or 10 next year, and then maybe 1,000 the year after that. We'll see. But the community investment funds that we're setting up are hybrid and workaround funds because I think it's, as it's been referenced earlier, I think Andrew mentioned it, the regulatory environment in the US is not kind to non-accredited investors. That's about 85 to 90% of the population. It's not kind to small communities. In fact, when we first started looking at community investment funds, all the experts in the field said, if you don't have a community of at least 50,000, you're not going to be able to set up a fund because it just doesn't pencil out. So that's a problem because there are lots and lots of communities across the US that are a lot smaller than 50,000 people. And we've really relegated them because of the structure and the legal structure and the regulatory structure around investing. We've prevented them from doing that. So the funds that we are right now piloting across the country is a fund structure we call a diversified community investment fund. And the DCIF has a couple of secret sauces to it. Number one, it's a real estate fund primarily. And as of those of you in this space know, real estate is not considered a security in the same way investing in a business is. And therefore the regulatory is a hard asset behind it. So the regulatory requirements are less, and it is in part the regulatory requirements of funds and investing that make it difficult for non-accredited investors because the little bit of money that might be in there for a return on investment is absorbed in the costs of complying with regulations. So as a largely real estate fund, we essentially are out from underneath that heavy regulatory burden. The other secret sauce of this is that it uses the language of the legislation. In this case, I will name it the Investment Company Act of 1940. I said that for Brian Becken, one of my co-founding board members and our legal guru on all things securities laws. So we stay out. Yeah, thank you, Sarah, for those good comments. So I'm going to touch on that too. So we stay out from underneath the regulatory burden of the Investment Company Act. And so these diversified community investment funds have to invest 60% of their dollars into real estate, but then the other 40% can be invested in anything the community is interested in, including any regular security. So for communities today in the US who are desperate for housing, You can put a fund up, raise money, build that housing, and then also support local businesses. So if you build commercial real estate, you could then populate it with businesses that you incentivized to move into those spaces with some of your community investment fund dollars. So thanks to Sarah for calling out the governance piece. So the virtue of this fund, number one, it is available to anybody in the community. You don't have to be wealthy to invest in one of these funds. Number two, we also structure it so the governance is local. So it isn't external capital coming into our community deciding what business is going to be there, where it's going to be, who's going to work there. It is the people in the community, the actual stakeholders, whom we also hope to be and want to be shareholders, coming in and being part of that governance structure. So they'll be making decisions about the capital that is raised in their own community and how it's reinvested back into their own community. So we're creating this virtuous cycle where the community invests in the fund turns around and invests back in the community in the form of projects and real estate and businesses that the community wants. So we're retaining that capital locally. The other really important piece for us is wealth building. So we're doing a lot of work in the city of Detroit right now and in Cincinnati and some other large cities that have suffered at the hands of extractive models for a long time. And so there's very little capital in those communities. And we want to retain the capital that's there, and we want to give folks a chance to build wealth because there's been no opportunities to do that. So it's important that the fund offer the opportunity for wealth building. Having said that, it is really challenging these days to make much money in real estate, especially if you're not just doing high-end commercial and high-end residential. So if you're trying to do affordable or attainable housing, the returns are going to be relatively modest. So for our funds, our goal in our funds that we're setting up is that they would beat the rate of inflation. We also do some things with the least able investors. So we typically counsel the communities we're working with or the organizations we're working with to flip the return paradigm and make the least able investors, the people who can only put in $50 or $100 in investment, get them the highest rate of return. And the most able investors that have plenty of resources, give them the lowest rate of return. So flip what has historically been the normal paradigm. We also frequently identify philanthropic capital or sometimes corporate gilt capital to backstop those least able investors. And that's not terribly difficult in a complex and expensive capital stack because those small investors that are community-based are going to be a relatively small portion of the overall capital stack. So backstopping them, potentially even guaranteeing them a really good return. So if you invest 100, we're going to get you $150 back. So you can just run the math out and realize that for a relatively small amount of money, we could give a great return on investment and help do wealth building in those communities. And then I think the other thing that we do, which is important, is we pay a lot of attention to the environment. We think about that in the communities we're working with, and how do we do no harm? How do we support things, et cetera? So this fund gives us a lot of flexibility to do those kinds of things. And as I said, we're working in over 24 communities across the country. So I want to spend the last few minutes talking about a couple of the funds that we've launched, just to give a little bit of reality to this, because we've had, I've been doing this work for about 15 years, and for 5 or 6 years, it was a purely philosophical discussion. Even when NC3 came together and we were really thinking about communities more, we were really talking more philosophically than actual projects happening on the ground. And one of the things that we did was turn to the ground and start doing that work. So our first fund was launched in Rhode Island, and that is the Rhode Island Community Investment Cooperative. So that's set up as a cooperative. Another fund that we're doing right now in Lansing, Michigan, is funded by the county land bank, and we're working directly with a developer and creating a new community downtown in the 1960s era part of the community that looked pretty terrible and had no sense of community and no sense of downtown. Devin just popped into the meeting. That means I've got to wrap it up. I know enough to know that. So I'm going to end right there. And if there are any questions, I would be happy to respond to them, provided Devin says it's okay.
Yeah, so we're out of time, but if you've got a question for Chris, go ahead and submit that using our question form. That's 4sc.fund/25Q. And that will get you, we'll get the question. We'll pass it along to Chris. Chris will answer it. It's a magical process.
Magical.
So, Chris, I want to encourage you to pop into the backstage. I know there are people there who want to talk to you, want to have more questions for you there. So if you've got questions for Chris, one of the ways to do that is to join as a VIP, pop into that backstage room, and you can chat with Chris all you want. With that, thank you, Chris. Really appreciate you being here. Your insights are really powerful. Now, I want to share some additional information. I'm so excited to introduce you to Woody. Many of you know Woody. Sherwood Neese is really one of the OGs of investment crowdfunding. He was invited to the Obama White House for the signing ceremony. I always think of that as kind of a test, right? A lot of us were, thinking about crowdfunding, but we didn't get invited to the White House. Like, Woody is on that short list of people that got invited to the White House for the signing ceremony of the Jobs Act that created what we now call regulation crowdfunding and the revised Reg A that works so well. Anyway, Woody is a big deal. We're thrilled to have him. Let me bring him to the stage now. Woody, thank you so much for taking the time to be here, to be well prepared, and to share a message with us. We're just thrilled.
It is great to be here. I want to make sure that you can hear me clearly because I am in Seattle at the Kiretsu Forum, where I've been speaking to family offices and angel investors, probably 1,000 of them, about investment crowdfunding. So we have not had a chance to test my sound, and I want to make sure it's okay.
Yeah, you sound pretty good. So take it away, my friend.
All right, great. Thank you, Devin. Thank you, everyone, for being here. It's super exciting. A couple of things are exciting. I always chuckle when I hear Devin mention that. That we testified in front of 5 House and Senate panel hearings. I think that's another testimony too. That wasn't an easy thing to do. That was like being in a Hollywood movie. And Chris, I love the fact that you are quoting statistics from the report. That 200-page report takes us quite a bit of time to get done. So it's great to see that other people are using it to help bolster everything that we're trying to accomplish. So thank you for that. But today I want to talk to you guys about, what Investomers, this book that I wrote, is all about. And really what it comes down to is, what if you could turn your best customers into your biggest investors? And why is this important? Well, I'm sure you're hearing these things over and over again, but traditional capital is broken. It's 2 to 3% ever get venture funding. You need to know those people. You need to know angels. It's very difficult. Most of these people live across the United States, don't have access to them. But you do have customers, and you do have a community, and you do have people that already love what you're doing, your company, your brand, and they can help fund your growth. This is the age of the investor, as we call it, where your customers become your capital partners. So I am Sherwood Neese. I am the author of this book series called Investomers. There's 2 books. The first book is a 400-page manifesto. It's why this industry was needed, how we created it, the history, what we did to turn it into a law, the work that we did with the World Bank globally in 43 countries around the world. And there's a whole section on entrepreneurs and how they can benefit from it. That's why it led to this second book in the series, which is sort of the playbook, the how-to book on how to use investment crowdfunding to raise money successfully for your business. So today I want to talk about, the old model, traditional finance. It's broken. Like I said, VCs fund less than 3% of businesses that apply. Bank lending, well, they require collateral. If you're under 3 years old, how are you even going to get a bank loan? It doesn't apply. Traditional investors, their emotional connection to your brand is like 0. You want people that are going to be engaged in what you're doing. And you're competing with thousands of others in the limited pool of money. So I believe this is just a massive missed opportunity for angels and VCs in the space, because your customers already believe in your mission. They know your product works because they use it. They want to see you succeed because your success benefits them. But until recently, none of this was possible because they couldn't invest. The game changer was the Jobs Act. It was happened in 2012. It's the law that we worked on. It changed everything. It allows anyone, retail and accredited, rich and not so rich, to invest in companies just like you. They can raise up to $5 million. I'm sure you're hearing all of that. I'm not going to get into it. So let me just tell you what an investor is. It's not just an investor who writes a check and disappears. It's not a customer who buys and leaves. It's actually someone who financially is invested and emotionally invested in your success. That's the difference, that emotional connection that they have to your business. The power of this dual investment, there's really three things. The financial stake. These people do want a return on their investment. I mean, they're investors just like any other investor. They have that emotional stake that I'm talking about. They want the products and service that they love to thrive. And the result is a more motivated supporters than you could ever have. So since this industry launched, and I'm sure you're hearing numbers like this over and over again, I usually do a data dive, but I'll just give you some of the overview. Over $3 billion has been raised through investment crowdfunding since 2016. When the industry launched, 65% of the deals were pre-revenue startups, really risky, unproven. Now, over 65% of the companies are post-revenue, established businesses over 3 years old. Less risky, revenue generating. It's what investors like. These people just don't have context to the angels and the VCs, or they don't want them actually to help them grow their business. These are companies with strong customer relationships that consistently outperform when they come online to crowdfunding to raise money. And that's the magical formula right there. It's this customer love plus investment opportunity equals this unstoppable growth engine. So why does investors, why does this law change everything? Well, traditional investors, it's really interesting. They write a check, they expect returns, they have no emotional connection to your brand. They say they can help, but it's typically limited help beyond the capital, and they're very, very exit strategy focused. Like, who's going to acquire you? How long is it going to take? What do you think the multiple is going to be? And I'm not saying that those are bad things. I'm just saying that the investor is a different type of investor in a business. It's a community investor. They invest and they become brand evangelists. They actually play an active role in the business. They're out there marketing your product or service. They're bringing in sales to your business. They're bringing in future investors to your business, all because they want you to succeed and they want to benefit as well. They do become that marketing army. The power of buzz marketing through investment crowdfunding cannot be underscored enough. These people, if you give them the right leads, like, you need to tell them what you want to do, and I think that's something I'll talk about later on. But they become your marketing army. So give them the tools they need. Give them the social media scripts. Tell them what you need to do. They need to do on social media to market it. They are success focused and not exit focused, and I think that's one of the biggest differentiations. So what do investors do that others don't? Again, they share your story on social media authentically because they invested. Like, they put their money in, they believe in you. There's nothing more authentic than someone that put $1 in and risked their own money on your behalf. They refer friends and family to your products. They defend your brand through tough times. That's like a critically important thing. You will have a team of people that can help you with your company when it's going through tough times. And they create word of mouth that money can't. This is a really important point. VCs love to throw big checks, or they did, not anymore. That's before this whole collapse, massive checks to startups, and most startups are using that to buy marketing. But what we saw is it didn't translate, like the dollars didn't translate into revenue. But there's a difference when someone tells you that they are using a product or service. You're most likely going to listen to it. Why do I know that's true? Well, look at social media. These influencers, and I'm going to talk about that later on too, shape the way we have purchased products and service today. And so you can leverage these people that way too. These investors drive revenue growth. They continue to buy your products because they're invested in your success. They buy more because they want to see strong company performance. They bring new customers, I was saying, through referrals. And guess what else they do? If they don't like something that they see and what you're doing, they provide valuable feedback because they want you to improve. So you need to leverage that as well. But the key thing, and I think we're seeing this when companies do rounds of financing through investment crowdfunding, is they fuel future funding rounds. So they, in essence, become your anchor investors for follow-on rounds. They bring their network, their extended network, to future investment opportunities. Again, they provide that social proof that attracts new investors, and they create momentum that traditional investors also notice. One of the things I like to point out is investment crowdfunding, Reg CF in particular, has become the testing ground for venture capital. And I hear this all the time. I talk to a lot of entrepreneurs that decided, listen, I just had to go online. I don't know any angels or VCs. Been successful. When they're successful, they start getting calls from VCs. So VCs are using this as a diligence test to see, like, can you raise capital from other people other than us? And what did you do with that capital once you raised it? So that's a critically important point. When you get this capital, you've probably set milestones for your raise. Make sure you hit those milestones with your crowd before you go out for your next round of financing, because they will be happy with what you did. They'll help support you in the follow-on round if you hit those milestones. But also VCs will check to see what those milestones are, and it provides some credibility for what you're doing and actually de-risks the investment for them because they see, all right, this person's got traction. I'll put my money in there. There's so many case studies. 8,400 companies have tried this. There's been over 10,000 offerings. We have our own venture fund, D3VC, that invests in select crowdfunding offerings. One of the companies we recently invested in was called Naseclips. Great story, nosebleeds, just shove some toilet paper up your nose. Well, it turns out, if you're on a flight, you might not have, a flight attendant doesn't want to deal with it. If you have an amusement park, the amusement park staff doesn't want to deal with it. Any public space, the people that work there don't want to deal with it. But there's this little clip thing that can go on your nose that can stop the nosebleed. And you can actually have attach medicine to it for other purposes. It was just a phenomenal take on this concept of nosebleeds by a doctor that's dealt with this. They raised over $3 million from 250 investors. It's just a story of how you take those people that know the doctor, know the problem. Everyone knows nosebleeds, and then you build that community of people that believe in this turning into a product. So, it doesn't have to be, nuclear energy. You can have simple product solutions like this, with the key being someone might want to acquire this. And this is where patient capital comes in. This is where the investor comes in. Investors are like family offices in a way. Family offices are very patient. There's no rush to get their money back. They don't need to report to anyone. The crowd wants to get a return, but they understand that they need to wait for that return. So how do you transform your customers into investors? Well, first, you have to build a foundation. You really need to have paying customers first. This isn't really about ideas. It's about proven businesses. And it's not like companies that have no revenues don't succeed. That's not the case. There's many healthcare, biotech, and life sciences businesses. It's probably the number one in terms of the number of offerings and maybe where capital is going in the last 12 months industry. So you can be pre-revenue, but you have to be very far in your milestones. But it works very well when you've got these customers lined up that are paying, because that's validation for your business model. It creates genuine value that customers love what you're doing. And you can build that community around your brand. And this is where social media, email lists, customer events become very important. This whole capital formation and crowdfunding thing in general is really important. You have to prepare. You've got to get compliant. You have to have professional materials. You need to have a clear value proposition. And then you have to activate your community. You need to warm them up before you launch. You don't just want to surprise them with an investment opportunity. You need to tell them, I need to go out and raise capital. I want to have you involved in this. Would you be willing to invest? Make it personal. Tell your story. Come from the heart. That's what translates into dollars. And don't treat them like some person off the street. Treat them like a partner. Have a conversation. Have a dialogue. This requires that you're communicating with them. You need to have regular updates. You need to actually, because they're part of this exclusive pool, give them exclusive access, like early access to the product or service, behind the scenes content to what's going on. Celebrate your milestones together. Make a big noise about it. They will love to be part of that, and it gets them further engaged. And by the way, they will share your success with other people. Again, two-way communication. It's not just you throwing stuff out there. You have to listen and take this all in. So what we've seen is companies with existing customer bases consistently outperform in Reg CF offering. Businesses that treat investors like community members have a higher success rate. Brands that offer engagement create long-term loyalty. And we've seen this across the board. You don't have to be, Nasaclip. There's craft breweries that do great with this. Why? Because people love beer. They love their local brewery. So you leverage that into a pool of people to help fund your growth. Tech companies, obviously, we're seeing a ton of AI-related businesses launched through regulation crowdfunding. Even on the stage yesterday, I was saying the future unicorns for investment crowdfunding will start their funding journey online through investment crowdfunding. It is transforming the way. So tech companies that are turning their early adopters into evangelists. It's great for building awareness about their products. And then consumer brands, like any of the consumer brand things, it's just great for transforming loyal customers into growth partners. But keep in mind, this is not a once and done thing. Most companies raise money, they go quiet, investors become names on a cap table, relationships die after the check clears. With the investor model, the approach is really different. It's personalized communication. Avoid mass sterile updates. Use this like exclusive insider access. If you pay attention to these exclusive hotels that exist, the Soho House or whatever, follow that thing. Like they have this exclusivity. Create that type of exclusivity. Make people feel like a VIP because they are. And keep that two-way communication going through surveys, through beta testing, and advisory input. And again, share those celebrations. One of the things that I was on the stage talking about, which really causes a lot of controversy, is the future of what we're going to see with social media influencers is going to intersect with these investors. And what that means is you're going to have social media influencers, instead of holding up a Labubu doll and saying, hey, this is a Labubu, you should get one of these. They're going to say, hey, I invested in this company that makes this Labubu doll. It's a $1.8 billion industry now. I just got in. This is why you should get in. Now, of course, $1.8 billion industry is probably not going to be crowdfunding, but there are thousands of you out there that have great ideas that can hold up your own little Labubu or whatever your company is and market that and turn your investors into brand advocates online through what we call influvestors. So influencers that are investors. They can really help promote your business in a way online that people are consuming media. So keep that in mind as well. I've got 1 minute left, I think. So I just want to say that the shift is happening. Influencers are here. Post-revenue companies are dominating the space. Customers, investors are the new norm. Traditional finance is becoming the backup plan, not the first choice. What this means for your business is your customers are your greatest untapped funding source. You should leverage community building because it becomes a core business strategy. Brand loyalty is measured through investment participation. Growth is not just about finding new customers, it's about deepening relationships with existing ones. And if you do this, companies that engage with your company will succeed. You will, they won't be easily disrupted, by the way, because you've got this core community around you. You've created this sustainable competitive moat. and your growth will become organic and community driven rather than advertisement independent. So we love this industry. I love talking about it. If you have other questions, by all means, I would love you to share those with us, and you can get all this information through our book.
Fantastic. We did have a question come in for you, Woody. Tom Wright asks, thanks a million, Woody, for all you've done to make my angel investments possible. It's a global changer, game changer. What happens next, in your opinion? We just have 30 seconds for a quick answer.
Okay, so next we are going to the intersection of blockchain with investment crowdfunding. You guys are going to be issuing tokens, securities in your companies, which means that keeping track of your investors is going to be a breeze. It already is through technology. But what's the most important part about this? If you are a unicorn in this space, you will be able to allow secondary trading of your tokens on these alternative trading systems, which will allow liquidity sooner rather than a 5 or 10 year exit. So that's where I see all this going.
Fantastic. Woody, thank you so much for being here. Thank you for your time. Thank you for all you've done to lead this industry. It's just amazing to see the ripple, the wave that is building out of what your work that began 15, 16 years ago. It's amazing, to see what's come of it, and the potential excites me. So thank you very, very much, Woody. We're thrilled that you were here. I encourage you to pop into the backstage area. I know there are people there who want to talk to you, so pop in. And those of you who aren't VIPs yet, sign up for the VIP experience, and you can pop into the backstage area with Woody and chat more with him. So thank you, Woody.
Thanks, Devin. See y'all.
I'm now excited. We're going to have so much fun here, but I want to introduce our next guest. That's just the amazing Danielle Godfrey. Danielle and I have just fairly recently become acquainted, but she spoke at SuperCrowd LA, our recent event there, and did a phenomenal job. I've invited her back, and we're going to have a little one-on-one conversation now. But Danielle is the owner and the leader, the principal at Set Apart Accountancy Group. And so she and her firm are doing a lot of the work in the Reg CF space, Reg A space especially. So they're doing the audits, the reviews, the financial statement preparation required for these things. So this is an important conversation. You don't want to miss a second of this. Stick around. All righty. Danielle, welcome to the show. We're thrilled to have you.
Good morning, Devin. Thank you for having me.
I
am honored to be here.
Well, the pleasure is all ours. Golly, thank you. I want to chat with you a little bit about, the accounting. I want to start with kind of maybe a big picture question. But, as you think about accounting, I think some people think of it as a nuisance. But I think accounting is the essential part of a business. Without accounting, there's no data. Without those data, how do you make decisions? Tell us about how you convince your clients that accounting is important.
Yes, absolutely. Like you said, accounting is the language of business. Accounting help us understand what is going on with a business. Accounting is very necessary to understand if the firm is meeting their goals, if the firm is on budget, and what the firm need to do to adjust. Do the firm need more funds to run operation? Do the firm has enough cash flow? So accounting is truly the language of business, and it gives you a big picture of what is happening with the company.
Well, it's just such an amazing, important part of a business. I remember I took my first accounting class back in a long time ago, before you were born. And I remember thinking, oh, this is the language of business. You have to know accounting to do any business. And it really is just profoundly important. And so the work you're doing is vital on a fundamental level.
Yes.
But there are some regulatory reasons that accounting becomes absolutely necessary beyond just taxes. We'll talk about taxes in a bit, but for under regulation crowdfunding, there is a requirement for people to do a review if they're going to raise a certain amount of money. And there's a requirement for an audit if they're going to raise a certain amount of money. And those rules change a little bit if you are going back for a second round of capital. Can you walk us through those rules so that we understand them, Danielle?
Absolutely. So when it comes to regulation crowdfunding, so if a company is raising about $124,000, they only need management certified financial statement and some information from their tax return. If they need to raise in between 124,000 to 1.235 million, they need their financial statement reviewed by a CPA. And if they need to raise from 1.235 up to 5 million under Reg CF, they need audited financial statement. So those are the requirements of regulation crowdfunding. And for a company who have already raised financials, they need to take into account what they've previously raised and move into the limits of the raise. So let's say you are going for a second round of Reg CF and you had raised 500K before, so it's going to be the cumulative. So now you have the difference is what you're going to be able to raise in your second raise under Reg CF. I hope that makes sense.
Yeah, that makes perfect sense. So if I'm understanding what you say, if I raised $50,000 in my first raise, I could do a second raise up to $74,000 and stay under the review limit. But if I want to raise more than $74,000, I've got to get a review. And if I want to go over $1.2 million, I'm going to have to get the audit then, right?
Exactly.
Okay. Wow. This is a little complicated, and all the more reason why it makes sense to call Danielle if you need help with this stuff, because it's so complicated. Now, there is a tendency, Danielle, for people to think of a review as a very informal process. And even you may think of it as being informal compared to an audit, but when people pay for it, it doesn't feel very informal. So tell us about what a review is, because I think there's a fundamental misunderstanding, a misappreciation of what a review is.
Thank you, Devin. So think about a review as a checkup. Like when you go to a doctor for a checkup, is where we do analytical procedures and inquiry to tie out your financial statements. For instance, we make sure that the numbers you have on the financials ties to the trial balances, the underlying documentation. So that's what a review is. It doesn't go, it's kind of a surface level where we make sure, for instance, the cash on the bank statement tied to the cash on the balance sheet, the account receivable on the balance sheet tied to your account receivable aging, or the account payable aging tied to the account payable on the balance sheet. So it's just a check. And also making sure that you are reporting the transactions according to GAAP standards. A lot of time, CEOs their mind is about getting their product out there, about selling, about their mission. They are not worried a lot about conforming to gap standards. For instance, a review, we would check things like, are you amortizing depreciation? Are you recording your interest on the debt? Things like that. So that's what a review does. It's a tie out and making sure that your financial is compliant, and we give a limited assurance for a review.
Yeah, it's essential now, right? The rules require it under certain circumstances, and so even though it's a less formal thing than an audit, it's a real process that you go through. It's a meaningful process, and that's why you don't do it for $100.
Absolutely. And
yeah, you're not just glancing at the financial statements. Say, oh, they're reviewed, right?
Exactly. Yes, that's why, and also it's risky to the CPA, and we have to follow specific procedures. So it's a compliant a type of work, and it's a very regulated type of work. It's about protecting the investors, right? So yeah, so that's why you don't do it for 100.
That's right. That's right. So when I think about audits, it's tempting to think of audits as sort of like a tax on a business that you have to do. And yet, whenever I have been working for a company that has been audited, there were sometimes painful truths that came out of it that helped us make the business better, right? Impose better financial controls, et cetera. Walk us through some of the operational and financial benefits that are associated with getting a proper audit done.
Absolutely. So, getting a proper audit done, it shows credibility to the investors. That a lot of benefit. It also help clean up your financials and making sure that your financials are compliant, your internal controls are in place, and it also helps with management decision making when your audit is done. So, and the biggest thing in the area of funding where trust is necessary, having an audit done speak volumes, right? It's you are positioning yourself not only to raise more, but you are telling investors that you are ready, and it also sets you up to institutional investors. It also set you up with banks and VCs. So yeah, doing an audit is very beneficial.
Yeah, it's it's kind of an intimidating thing, right? To kind of cross that threshold for a growing company. And I get that not everyone is excited all the time to be audited, but it can really provide some tremendous value in the long run as you improve your financial controls.
Yes.
Which, I remember one of the takeaways from my first accounting class was if you give someone the opportunity to take your money because you have poor financial controls, it's not a question of if they will take your money. It is only a question of when, right? Because as soon as they need your money, it's gone. And so those good financial controls reduce the risk of that kind of thing. You can kill a business with a little embezzlement,
Yes. And I also want to add, having an audit is beneficial when a company is ready to scale, right? Or for acquisitions, as you know. So yes, it has a lot of benefit.
Yeah, and so it isn't just ticking the box. It isn't just ticking the box. That's an important thing.
Yeah.
What are the things that drive the costs of audits and reviews, and how can an entrepreneur, a company, a small business prepare to be reviewed or audited in a way so that you can be more efficient, maybe cost efficient for them? What are some of the tips that you would offer?
Absolutely. I would say that what drives the cost of an audit and a review a lot of time is the size of the companies, is the complexity of the transactions, is the company a single entity, or is the company consolidated and has subsidiaries? Is Are the books clean? Are the books, is the company, is are the book cleans? Are the book ready? Or do they need some type of cleanup? Are the records in place already? So what is this the size of the revenue? So all of those are driver when it comes to reviews versus audit. I mean, when it comes to reviews and audit, those are the drivers of the cost.
I appreciate you sharing that because it's a little bit opaque for the rest of us to try and understand why does it cost so much. And so
Yeah.
helping us understand some of the tips to keep those costs low is really, really helpful. As you think about your work in this space, what are some of the problems that you've seen that have really been big? I think it's possible. You correct me if I'm wrong, but I think it's possible for books and records to be so poor you can't audit them. And so what are some of the worst case scenarios, and how do people avoid those worst case scenarios?
Absolutely. Some of the worst case scenario is getting to audit a company and then asking for an invoice or a contract that they do not have available. So it's very important to keep records of your invoices, of your agreements. It's very important to reconcile your your financial statement every month. Is very important to get a CPA involved early. And if you're a startup, you can get even a bookkeeper if you are, you want to save. Even getting a bookkeeper to reconcile every month is very helpful. So it's really just keeping things organized, just keeping things is very important. It will save you a lot of headaches, once you are keeping your invoice together, because the process of an audit, we make selections and we send you to we ask you for specific invoices. It's called testing. That's one of the procedures that we do in an audit. So making sure you have those is very important. So yeah, so being organized, having help early, it will make the process so much smoother, and it will also bring your costs down. And also communicate. Make sure you are communicating and you are keeping track of your key assumption if you've made any estimates. So I would say those are some tips that make it easier to go through the process.
Danielle, you have been remarkably successful, I think, with this business, and you've become kind of a dominant player in the industry. I congratulate you. That's amazing, amazing.
Thank you, Devin.
What brought you to this space? What attracted you to this niche, and how have you been so successful in establishing your presence here?
Yes, I would say that I kind of stumbled into crowdfunding by accident. I was actually discovered by Start Engine. They discovered me at the beginning, and I was helping Reg D issuer put their financial statement together. As I was doing it, the issuer will give feedback. She's great. She's quick. And they used to send me, believe it, even tips in the mail of just what a good job I was doing for them. And Start Engine took notice, and they started referring me reviews and audits, and that's how it grew. But more, what makes me passionate about this field is seeing a company coming with big dreams, big prospect. And I know today AI is a thing, but I remember 7 years ago, we audited an AI company. So we get to see the future before it happens in this field, you know. And just seeing those company coming, and I remember within 2 weeks one of the company raised 1 million within 2 weeks, and seeing the crowd being involved, seeing how they connect, you know, the passion with what they offer, and the connection with the crowd, and just the difference that it makes in people's lives and in the world. It helps advance the world. So that's what I love about this field of crowdfunding. So yeah.
Well, it is so powerful. You know, the opportunities for people are so real.
Mm-hmm.
You know, as I think about this space, it is inspiring. But one of the challenges I think for entrepreneurs is trying to decide whether to approach a Reg A, a Reg CF, or do a Reg D round. And as you kind of look at the work that you're doing, what are some of what is the logic, maybe kind of the decision tree you would help an entrepreneur, small business owner go through in thinking about which path to go down for the current round? I realize the answer changes sometimes, right? You might
Yeah.
do this here and that there, but how would you help them make the decision for the current round?
You know, I think that it's always good to test the water. Sometimes even have uh, preliminary campaigns. So I think I always recommend starting. Someone can start with raising up to, that's depending on the size of the company and the goals of the company, up to 124,000, where you don't require certified financials. Those financials are management certified. If you're a new startup, just getting started, and you can start there. That allows you to go through the process, even with the crowdfunding platform, and and get things in place. And then once you reach, and then you start preparing for a review, which is from above 124,000 to up when to 1.235 million. So that is very helpful. And with a review, the review kind of prepare you too for an audit, right? So it cannot prepare you for an audit because you have gone through the process, and you will have the financial process of it, and that will have been helpful to set you up. You will have had already an understanding at that point of the of how things work, of what you need, and it will and set your book up for the audit. So I think that's what I would recommend. But if a company is mature, and I would recommend still go for a Reg CF if you want to raise above 124,000 up to 1.235 million. Even going through a review process set you up for the audit. I would recommend, starting at it, with a review, then going for an audit, unless you are a mature company and already familiar with an audit. Yeah.
You know, that's a great advice. Great advice. Now, as entrepreneurs, small business leaders are thinking about getting ready for an offering that let's say it requires an audit.
Mm-hmm.
Certain Reg A offerings require an audit. What's the timeline? How quickly can you perform an audit for a Reg CF client or for a Reg A client? what's the process? What's the timeline?
Yes, a rec CF audit takes time, and audit takes time. And again, having your financials clean, it helps reduce how long it takes. So it can take from 4 weeks to 6 weeks. It can take 3 weeks if you're a new company with not much transaction. If you just incorporated today and you need an audit, it can take about a week because you don't have much transaction, but we still have to go through the audit procedure and documentation. So yeah, it depends really on the size of the company and the complexity of the transaction. If you're a consolidated company, it can take up to 2 months. But one of the things about our company that has made us strong for the past 7 years is really how quick we are. SetUpad, Accountancy Corp, we are really on top of it. Within 24 hours, we get back to the issuers, and we have a seamless onboarding process, and we walk with you through the process. We set up meetings as necessary to make sure you understand. So that has been one of our strengths. So that communication help. It's really how we're reducing how long it takes. So yeah.
That's amazing, and that's vitally important. I know as an entrepreneur, when you're trying to raise capital, delays are just toxic. They're just the worst. So being able to have somebody who can respond quickly is so helpful. Danielle, as we wrap up, I wonder if you would just take a minute and tell people about your business, how people can learn more, how they can connect with you, and so that they can engage with you and get your help if they need it.
Absolutely. So you can learn more about SetUpad Accountancy Corp. We are on Google, www.setupadfs.com. You can email us there or call us. There's a phone number there. My email is danielle@setupadfs.com. You can set up a meeting on our website too. But the best way to reach me is always through email. I'm always online, and I will make sure I respond to you right away and get my team on board. We are actually also on Instagram. We have an account on Instagram and on Facebook too. SetUpad Accountancy Corp.
That's great. That's great. Well, Danielle, again, I want to thank you for taking the time to be with us, and thank you for sharing those powerful insights. This is such an essential element of finance in the Reg CF era that we have to get good at this. We have to understand these rules and understand who the players are. So thank you very, very much. We really appreciate you being here. I invite you to pop into that backstage area and mix and mingle with the folks there. I'm sure there's some folks there who want to talk to you. So we'd really appreciate it. And for those of you who are VIPs, pop in, ask Danielle your questions. If you're not a VIP yet, you can register at the SuperCrowd25.com and buy your VIP ticket and get into that room in under 5 minutes. And so that you can be participating with Danielle and get the answers to your questions too. So Danielle, again, thank you very, very much.
It was my pleasure, Devin. Thank you for having me.
All righty. Now I want to introduce you to the moderator of our next panel. I'm so excited to introduce you to Alan Tratner, Professor Alan Tratner. He is, one of the, believe it or not, one of the organizers of the first Earth Day 55 years ago. And for decades since, he has been actively involved in leading a nonprofit called Green to Gold that supports and acts as kind of an incubator or accelerator for climate-friendly, sustainable technologies and businesses. And over the years, he's helped launch and support thousands of businesses and hundreds of nonprofits as well. Just a great human being. He'll be the moderator of our panel discussion today about climate. Stick around. You don't you don't want to miss a minute of this conversation. Let me bring Alan onto the stage now with the rest of his team so he can introduce them. Welcome, Alan, Will, Lester. We're thrilled to have all of you here. Jackie, I think we've got everybody now. I'll pop off. Alan, you take it away. Oh, no, Alan, we're not hearing you. There we go. Now we're good. We're good.
Yeah. Okay. Aloha, fellow Earthlings. I am Professor Alan Trapner. Thank you for the little introduction, Devin. It's incredible. We have an expert panel that's part of SuperCrowd25 on climate capital, crowdfunding a greener future. Our action-packed agenda is first self-intros of Jackie, Will, me, and Lester, followed by 5-minute presentations of each, and then a discussion, a panel, and as time allows, we'll field questions from you, our audience, and we want you to enjoy, learn, and act with us. So without further delay, I would like to have Jackie first give a short introduction, self-introduction. Jackie, good morning. Welcome.
Good morning, good afternoon, or wherever you are. Can you hear me?
Yeah. Yes.
Thumbs up. Well, first, a pleasure to be here. Hello, SuperCrowd 2025, my favorite time of the year. It brings together really, the folks making it happen. So a pleasure to be here. So my name is Jackie Logan. I come into this space with, I hate to say it, but about 30 years of experience in the capital markets. I absolutely love the capital markets being the place in which, folks that need to raise capital and folks that want to invest come together and make that happen. Because as we all know, the power of private capital and power of all capital, it causes change, it creates new companies, it creates wealth in communities, and so on and so forth. So I started my career as on the big trading floors, whipping around bonds at JP Morgan, covering big clients like Vanguard. They were my client for 8 years. Other large banks and institutions. So I had a good sense of what the institutional market was like. Jumped from that to do a startup to try to plug a problem that I saw for what we would call illiquid assets. And of course, that leans itself to crowdfunding because the nature of our assets are illiquid. But already back then, trying to figure out a way to move illiquid assets that were out in the market and make a secondary market. Then found my way actually to the private wealth area. So I had my exposure to, we would call them retail investors, which is really, again, coming into the crowdfunding space. And there actually I was at Goldman Sachs and had the opportunity for almost a decade to oversee trading for private wealth clients, and but from a compliance perspective. And during that time, had the opportunity to see some of the ESG strategies that were coming out in the 2010s, time period. And at the same time, recognized we have a climate crisis and decided that it was time for me to take all those years of experience, package them up in whatever package I am, and find a way to leverage that experience and get private capital moving directly into climate. And so I went on that journey, and I invite everybody who cares about climate just to be open, be out there meeting people, because if you want to get involved, there is an opportunity to do it. Met my two co-founders literally at Climate Week, New York City 2019, and very shortly thereafter joined up, started Raise Green. And its very purpose was to get private capital moving directly into climate, and never look back. And with that, I will turn it over to the next person to introduce themselves.
Thank you, Jackie. Will, please introduce yourself.
Sure. Hello, everybody. My name is Will Wiseman. I'm the CEO and co-founder of Climatize. My background is in renewable energy engineering in particular. I've personally built 15 solar arrays. I have 2 master's degrees in the sector, and then now started Climatize, really catalyzed by the 2019 global climate strikes. We've funded $10 million worth of renewable energy projects, 22 projects in 9 states, and we're almost to $11 million thus far. And yeah, it's been really exciting to really enable everyday people to become active stakeholders in the energy transition. One of the comments that we really discovered with this journey is that for many people, climate change feels like an urgent problem, but they often feel powerless to make a difference. And so by using their dollars as a tool for creating impact, we're making it much easier for the everyday person to actually participate in the energy transition as an active stakeholder. So we've actually helped Lester here and the Ovanova team build a number of projects all throughout the Southeast, and had a chance to actually visit those projects. And so that was deeply fulfilling and really part of what we really see as a unique differentiation with crowdfunding is that you can see the end product of your money, and you can actually see the people that it has helped, and really create a direct impact in these families and communities. So with that, I'll hand it off to Lester to speak about what the hard work they're doing in the field.
Yeah, Will came to visit us down here in West Tennessee. So my name is Lester. I'm the co-founder of Ovanova. Our mission is to add as much value as possible to as many lives as possible as soon as possible. We believe that adding value means solving problems that allow humanity to thrive. And one thing that all problems we can solve have in common is that they will require work to solve them. And from a very first principle definition, physics, energy is the ability to do work. So we serve our mission to add as much value as possible, as many lives as possible, by creating energy access, resilient energy access in grid edge communities specifically. But we've worked all over the country. We're fortunate to have worked with churches, schools, nonprofits with innovative methods to support them while educating their supporters about solar. Been doing this for about 10 years, and we've installed microgrids, solar storage, smart controls in 27 states, and have interconnected with 60 different utilities. You won't believe how challenging finance is. We got really lucky, and through some Inflation Reduction Act incentives together, Will can tell you how challenging it's been to actually receive those. But with Will and Alba's help, which was not help any bank was willing to give, no help that any VC was willing to give, but help we found from the crowd, we were able to bring energy resiliency to rural communities and allow them to be included in the Inflation Reduction Act incentives. So it's been a blessing. My partner John will be on tonight to tell you all about some cool technology we're developing as a way to help rise to the national energy emergency we're in. But we're in energy because of its impact on humans, because we believe with more energy, we can do more work, solve more problems, and therefore add more value. So thanks for having us on. And Will, thank you for helping out the people of my community in places like these. And I say we because I'm just a farmer from West Tennessee, but I have an amazing team of people who have chosen to drive our mission forward. So glad to be here. Thank you, Professor.
Thank you, Lester. Well, then it's my time. I'm up to bat. So as you heard a little bit earlier from the introduction that Devin gave, I'm kind of proud of this, of course. I helped be one of the founders of the original Earth Day. On that occasion, we actually created the Environmental Education Group and Green to Gold, this first pioneering impact incubator globally about inventing the future and reinventing the mess that we made with pollution that was part of the cause of Earth Day. And now we're 55 years of existence. We have more than 100,000 members globally that are inventors, entrepreneurs, and scientists and researchers and innovators. And we also are novel in the fact that we're a tax-exempt nonprofit incubator from day one. And we help nonprofits like ourselves, more than 320 to date, that are socially and environmentally responsible. And they have a wonderful synergistic interaction with the mothership Green to Gold and our for-profits. And it's very wonderful to watch that happen and the impact that we bring. The big project that we did right after Earth Day was 2 years later when the United Nations produced their first international conference on the human environment in Stockholm, Sweden. And they commissioned me with a grant to write an entire story, a whole history, and a presentation on energy options for mankind. And that's where I got really deep into the whole issue of renewable energy and what the green economy could be for this world and how important it could be. We could have a utopia if we wanted to on this planet with sustainable economic development driven by all forms of indigenous renewable energy, have regenerative ag, all those things. And we foster that in the Green to Gold Incubator. So my message about what we do is if you have a great green idea, get a hold of us and we are going to help you. And we don't take equity in the ventures, but we're surrounded by all kinds of investors, angel VCs, high net worth individuals, a whole new range of called pre-seed venture capital. But most important, and I'll talk about that in my presentation, is what crowdfunding has done for what we do in sustainability, green energy, and everything about climate mitigation and change. So welcome, everybody. Thank you. That was our introductions. Now we're going to move into the 5-minute segments where we can delve into what everybody is doing right now and how they feel and the challenges and opportunities. And I guess we'll start again with Jackie. Please, Jackie.
Wonderful. Well, I'll take this opportunity to dive in a little bit too in terms of what we do. So as I said, my goal was to take all my experience and get private capital moving directly into climate and not moving the little puzzle pieces around. And at the end of the day, what have we really accomplished? And so Raise Green, with my two co-founders, we originally started, we're a crowdfunding portal. We originally started with the idea actually that we wanted to provide communities with a suite of software that was going to enable the everyday community member in order to create a project, raise the capital for the project on the crowdfunding portal, and then run the project. And we built that, the beginning of that software, a climate software journey with IBM. At the same time, we got our crowdfunding license in 2019. We started in 2018. And so what we found in that journey, because at the end of the day, there should be a solar array on every single commercial and industrial sized building across the United States. And there still isn't. And we wanted to bust through some of the barriers, access to capital, access to ownership, let the community own it, and soft knowledge associated with documents, etc., and all built into the software package. Well, what we learned in that journey, not so easy to make an everyday person a software developer on a 25-year project. And at the same time, we had a crowdfunding portal, which folks were coming to us from every different area saying, hey, we need to raise capital. Raise Green was the first crowdfunding portal dedicated to climate solutions once the regulation came out. And so folks were coming to us from energy efficiency projects, new climate tech companies, and of course, solar projects, et cetera. And so we decided that we would open up, given the importance of raising capital and not limiting, climate solutions are going to come from everywhere. And so we decided to open up the portal, not just focus in one area and with our software, and then just develop a healthy community that way and get some money flowing. So after 44 securities offerings and raising 10 million through the platform, we joined up with Honeycomb Credit, which is a larger platform. They've been around since 2017, done about 600 plus offerings, moved, combined with us about 50 million across the platform, and had a lot of infrastructure that we didn't have. And we felt was critical in order to continue the mission. And so in December, we joined up with Honeycomb Credit, and there I'm the director of climate finance, helping build out the climate component of the platform. And it's been great. Over the last 8 months or so, we've moved close to 2 million across the platform in this space, ranging from everything from a small business that's doing composting in LA, for example, all the way to a new climate tech, and of course, working on some solar projects. So that's what I've been doing. And, every day is a great day because we're talking to people doing great things out there and hopefully facilitating not only investment in, but also access to important projects that are happening out there. So that is the first piece. Talked a little bit about the impact that we're having. And then just looking at some of the other topics, so some of the other, just in terms of what is the power of crowdfunding, it is such an amazing tool. I always say every investor, every everyday person, and even institutional folks, and everybody who's creating climate solutions, whether it's a project or whatever, everybody should know that crowdfunding exists because it is purpose built. It enables folks to get up and display an offering in a relatively quick time with relatively low expense. And then it enables everyday folks to come in and invest with basically a touch of a button. And it enables capital to move in areas that just maybe would never have moved if it were for crowdfunding. And Lester, you were just using that example. And we have had those examples where, banks are turning people down, et cetera, but they come to the crowd and the crowd will stand up and support them. So, at its very highest level, when Raise Green started, we wanted to give more folks a chance to get involved and we wanted to get more capital moving. Well, agency combats paralysis. And Will, you just mentioned it. Many people feel, climate change, it's so big. I can't tackle it individually. They're almost paralyzed. And look, for as little as, $100, you can turn an abstract concern into a concrete action, and you can do it today. It is as well, if people have a chance to own something, own a piece of the energy transition, they're just that more involved. They're bigger supporters, both emotionally and as well as financially. And then, of course, there's the bottom-up momentum of having everyday folks involved. Could not do that before Regulation CF. This is purpose-built for that. And then, of course, there's the network effect where folks can start to talk to their family, et cetera. And it just creates more demand for climate action in other communities. And then, of course, there's the other piece of this, which is, we know this from the stats. Our friends at King's Crowd give us a lot of stats in that there are many folks, if you look at women-led and BIPOC-led organizations, if you look at the VC money, it's less than 5%. If you look at crowdfunding, the numbers are closer to 25% of the funds going to women or BIPOC-led firms. So this is incredibly powerful to really, really grow and tap into the incredible capabilities of folks across, our system. And challenges, look, crowdfunding is challenging just in general as a business, for a crowdfunding portal. It's a volume business. You need to do a lot in order to pay the bills. But there is tremendous opportunity out there. But, it's a challenging business itself. From a project perspective, obviously, if you're working with someone looking to raise capital for a project, projects take a lot of twists and turns. You think one is going to go live on the platform, and then all of a sudden there's an issue with this or that. And so, scale versus speed is challenging when it comes to projects. It's a reason to build a big pipeline. And of course, we have policy. Everybody's aware of the big, beautiful bill wiping out certain important benefits that have been incredible tailwinds behind the clean energy transmission implemented by the Biden administration, and now we're dealing with the rollback of a lot of those wonderful incentives. Some of it is not as bad as we had anticipated, but it's shifting policy, and we have to figure all that out. And so that obviously is part of the journey. And then, of course, investor education. We have to continually be getting the word out there that crowdfunding exists. It is a real avenue for investment. Yes, it has risks associated with it. Every investor, should understand that. And from a raising capital, there is work that has to happen in terms of reaching out to community to bring them to the platform. But that is a challenge that, we all have to work on. But the opportunities are amazing. 9 out of 10 Americans can now invest in a climate project, whereas prior to 2016, that was not the pot. They couldn't access that kind of investment. Owning your own infrastructure aligns incentives, and communities now can do that relatively easy through a Reg CF raise. And if the amounts need to be bigger, we have Reg A Plus as well, which can be accessed through crowdfunding portals. And there's the wonderful thing that we can scale through replication. You do one project for $300,000, you can do another one and another one so much more quickly. And we see many of our investors investing once, then they invest again and again, and it doesn't have to be in their local community. So those are some of the thoughts I wanted to share, and look forward to hearing what some of my other colleagues have to share about their thoughts on the crowdfunding industry challenges and opportunities.
Thank you so much, Jackie. Well, Will, it's your turn.
Great. Thanks so much, Jackie. And I think you did a good job in terms of kind of laying the foundation of much of the vision of crowdfunding in the climate sector. So kind of somewhat differently than Raise Green, Climatize focuses actually strictly on debt finance of infrastructure assets. And we took a slightly more narrow focus, and very different than many of the crowdfunding portals in market. And we did this in particular because many of the renewable energy projects feel the greatest financing gap in the debt side of the capital stack more than, say, the equity side. And in particular, also, the energy companies are less aligned with, say, the independent renewable energy developers are less trying to raise equity in their own company and more so trying to raise that capital for deployment of the actual infrastructure assets. So we do essentially fixed rate debt investments, and that aligned with our vision of democratizing investing in the energy transition, because then, say, if offering has a 10% return, you're going to earn that same 10% on $100 or $100,000. And that way everybody can earn a return based on kind of their own individual investing capacity. So that's one way that we have really differentiated ourselves in the market and found early product market fit there, with nearly another $1 million being invested to projects just this month. So that's been really encouraging to see as we build that momentum. And one of the really exciting things about being able to crowdfund renewable energy projects is kind of the end impact that you can see, and also even the opportunity to go and use some of the infrastructure assets that you can fund through a platform like ours. So while folks like Lester and the team at Ovanova were more so building microgrid, so solar and battery storage for farmers and small businesses throughout rural America, we've also hosted offerings on our platform that have been, say, for portfolios of EV charging stations. And with that, people can actually go and use the project that they have helped invest in. And that kind of real connection to their investment is really differentiated from, say, investing in, say, an ESG fund, or if you put $1,000 to, say, a public company, you don't really have a lot of visibility to the end impact that creates. And so over the investments on our platform, I mean, we did the math behind some of the impact that it's created. And so we see that, or rather the projects over their lifetime are projected to, save about $435 million worth of vehicle miles. Based on kind of the EPA's conversion metrics, we see that'll be roughly about 175,000 tons of CO2. And that's a really big impact for a technology platform to be creating in the world. So we're really proud of that. And, the projects that Ovanova and team and some of our other developers are projected to save about $2.8 million in energy savings for the beneficiaries of these projects. And so, that really helps lift energy burden from some of these, small to medium scale businesses or farmers. And so we actually went, as Lester mentioned, and interviewed some of these families to tell that real human narrative of the benefits of these projects. And I think often climate communication skews incorrectly in positioning kind of climate change as a battle against this gas in the sky, when really our visit to these projects was very eye-opening in that instead, I think we should be talking more about the human impact and how it can be a tangible benefit to these individuals, these families, and these businesses, and the economic benefits, the energy resilience benefits, the security benefits that it can have. And just anecdotally, one of the beneficiaries that Ovanova installed a project on was hit by Hurricane Helene. And then in the fallout of that, they were able to provide energy to their community and provide cold storage for food and medicines afterward. And I think that's just kind of the power when the community and the crowd comes together to fund these projects. Historically, they have not been able to get that funding from banks. And that is a byproduct of the Basel III rules after 2008. Banks are very limited in the amount of lending that they can do to non-publicly rated entities. And additionally, many of the lenders at that kind of community scale often don't understand how to underwrite either the technology nor the economics of the projects. And so crowdfunding really steps up to be able to fill that gap. And so for anybody that's interested in being able to, explore energy infrastructure projects, I would encourage them to check out Climatize. So with that, I'll hand it off to Lester.
I'd encourage everybody to check out Climatize too. We still have $100 million of pending projects, and we're going to put as many up on Climatize as we can because Will and Alba have been so amazing at helping us out. So thanks, Will. It's great to hear from you guys. I think the thing to probably focus on here, you guys have done such a great job of explaining why finance matters, is to just focus again on energy. I don't know, one of the places where I feel like the climate conversation misses the energy conversation is nighttime and when clouds go over. Because if the only focus is on carbon reduction, then you think it makes sense to put up a whole lot of solar without batteries when that just creates grid fluctuations, right? And the truth is, the most resilient form of energy available is the kind that falls out of the sky for free every day. That's a great source of fuel. Like, you can count on it being there. And one of the blessings that our team has had is our headquarters is in North Carolina, and that's where Hurricane Helene really went wild. Our nonprofit, Ovanova Gives, is still providing long-term relief to that community. So if there's anybody out there that likes to support great endeavors in communities, be sure to let us know. Our team went over to Marshall, North Carolina, and there was a solar array on a building. The reason I said the climate conversation misses energy conversation is partially because of this story. A lot of folks don't know that solar without storage won't provide power after a storm if the power lines go down. And they hadn't really thought about solar in a giant field somewhere. Can't get power to your house if it's separated by lines that are down. And that creates a lot of noise where something is fundamentally true. Solar with storage and smart controls that is secure, it's the future of our energy grid in America. The story about the store is we found some solar without storage in Marshall. We threw some batteries and smart controls on, and there was power in the town for 47 days without even needing a generator. So that was incredibly beneficial. And we took some carbon out of the atmosphere with that project, right? That was already happening, but then there got to be more carbon benefit because there wasn't a generator running. Like, I believe that climate change is an existential risk. I believe it's deeply tied to anthropomorphic reasons. And I believe that oftentimes that conversation causes us to choose technological things that won't allow it to scale to enhance the resiliency and full benefit to humanity that being able to plug into the sun unlocks, especially during a national energy emergency. And we're about to plug in AIs and American manufacturing and Bitcoin mining's ramping up and we're electrifying everything. And I'm really attuned to this because Elon supercomputers are 45 minutes up the road. And I know that that computer, when it's fully recognized, is going to use more power in an hour than my buddy's cotton gin uses in a month. And you might not know what a cotton gin is, but it's a lot of power running 24/7 to pick the seeds out of cotton. What used to take tens of thousands of human beings months to do, that much of power in an hour, or what these AIs are about to do. And we do not have enough time to build out centralized grid resources. So this is the last thing I'll say about where climate sometimes misses energy, is that nuclear could be seen as a solution and is a solution for carbon. But you're not going to have, until we get Mr. Fusions and flux capacitors, a nuclear plant in your backyard, which means if the power goes down, you still don't have energy resiliency. And with 800 hours of projected blackouts on the horizon, I don't know if y'all saw that, but by 2030, the Department of Energy is projecting that Americans are going to be sitting in 2 hours of darkness a day, unable to connect, create with their neighbors, have energy to have conversations like this. It's going to be wild. So if that's the environment we're going into, we have to say, what can humans do? It's that crowdsourced, distributed method. Like, what can we do? And we believe the answer is distributed energy. And what we've noticed is that when you're doing something pioneering that actually is scalable, it's hard for people to see the nuanced differences between this inverter or that inverter, or why does security matter so much, or what is it, who cares about DC coupling the inverter for services, and who cares if there's a microgrid integration device for load shedding and shifting. We can put up enough little power plants everywhere quickly enough to solve this national energy emergency and create scalable solutions for climate while protecting communities from what's coming, because we haven't acted fast enough already as the storms get stronger. But at this game, we're in the resiliency game, and there's nothing better to provide resiliency than renewables. And we also use generators on our projects. They just don't run very often. And they're not very wasteful when they do. But if you need to run a dialysis machine after a hurricane, you need to run a dialysis machine after a hurricane. I don't think anybody would argue with that little bit of carbon being expunged to pump some poisons out of somebody's body. But we can also agree that those times are rare. And there's ways to do this really well to create a super abundance of energy for everyone to do what we want, when we want, how we want. So
thank you, Lester. That's great. Thank you, Lester. I think, Devin, I believe we've reached the maximum time. If you're still with us on our presentation, our panel, I would like to thank all the wonderful speakers and what they're doing in the world. And my whole premise for being part of this, and in the future, deeper things with Devin and SuperCrowd that we're planning, is that my project from the time of 2020, when the horrible, the COVID hit us and we were all locked in, crowdfunding surged beyond everything else. There were no more pitches that were live and all that kind of stuff that was happening with investors. And it would just surge, and it's never looked back. And it is the most amazing thing. And I could actually deeply get into how it's really helped our incubator for this early stage and startups, what it does, that ability to crowdfund globally. And the other benefit I think that's been probably touched on a lot in this conference is that a campaign for equity crowdfunding is so amazing, because at the same time you're raising money, you're branding yourself, you're marketing, you're advertising, you're getting new customers, supply chains, opportunities for licensing, distribution globally. And it's accredited and unaccredited investors from around the world into an American company. And look at how many countries now have copied what the Obama Jobs Act did, this revolution in the democratization of investors that just didn't exist ever before that. And now we can capture that to propel this transition to this green economy, inclusive global green economy, transition to sustainability, using all the tools you've heard about today and a lot more to come. So once again, thank you all for being with us today. The audience, if you have questions, don't forget there's a way to get to us, and we'll all try to answer those individually. And I appreciate this opportunity to be the moderator of such a powerful team. And thank you, Will and Lester and Jackie, and certainly to Devin at SuperCrowd. As we say in Hawaii, mahalo. Thank you and
Mahalo.
goodbye.
Thanks, everyone.
Devin, are you there? Perfect. All right. Here's your phone.
We wrapped up a little early there. I apologize. I was busy taking care of business, and Alan and the team wrapped up early. So I appreciate you all being so punctual. That's great, Alan. Thank you so much. Great conversation. I think the work that you're doing, it epitomizes. It truly epitomizes what crowdfunding is about. When you see people crowdfunding solutions to big problems, and climate change is in some ways a visible, popular solution, but the principles of climate funding solutions using crowdfunding apply to health tech. They apply to all kinds of projects, and we see it with crowdfunding and climate solutions now. I see a lot of the kind of climate justice projects being done. The projects that fund community solar for low and moderate income housing projects, all kinds of things. So there's some great stuff going on in this space, Alan, and I appreciate you leading a really great discussion on the topic. So thank you very much. I want to thank Will and Jackie and Lester as well.
Lester.
They just a great discussion. It's been fun to see the work that they've all done in this space, and appreciate you convening it. You were there. Put your hands on the wheel, the steering wheel of this great ship we call Earth, and said, "I'm gonna make a difference on this planet. We're gonna organize Earth Day 55 years ago," and son of a gun, there it is. So this is that I talked about it earlier. In a way, with crowdfunding, we're nurturing a young tree. You helped plant the Earth movement, the environmental movement 55 years ago with your Earth Day. So thank you very much for that.
Thank you, Devin, for the whole SuperCrowd and your concern about impact and sustainability. And I'm glad that we're going to be working together on the Super Green project in January.
Yeah,
we're going to go all out. We're going to pull out all the stops and have the world's best presentation and examples of what can be done to help this planet heal itself and have a sustainable green economy for everybody, that everybody has a career, a job, an opportunity to create wealth, do things for the planet, do it for their charities in their communities. I'm so excited about this. I can't believe it. And this is so cool, SuperCrowd25. Once again, thank you for even hosting this. And I appreciate our panelists' wonderful backgrounds. I'm going to go forward and multiply today and tomorrow with SuperCrowd.
Fantastic. And I encourage you to pop into that backstage. I know there are people there who want to talk to you. And for those of you who haven't yet joined the backstage, if you're VIPs, if you're having any troubles, we're trying to make sure this is a little bit secure, so that we don't have people who aren't VIPs joining that backstage room. And so a few people have reported challenges. If you're having problems, email me and Chandon. We'll get you sorted out. We'll get you in. If you're not a VIP, you can join as a VIP right now, just $25, and visit thesupercrowd.com and find the event, or thesupercrowd25.com, take you right to the page, or 4sc.fund/25. I apologize. I just gave you 3 ways to get there. They all work. That's the good news. You can go anywhere. Or just Google SuperCrowd25. You get registered. We want to see you there. If you join, $25, get in that VIP suite. Then you can get into the backstage. You can get to the networking session tonight at 8 p.m. Eastern, 5 p.m. Pacific. And for Alan, that's going to be 2 o'clock this afternoon in Hawaii. And so, it's that'll be a great session. Then we've got all day tomorrow, backstage pass. We've got the VIP session. You've got the VIP LinkedIn group that you'll get access to. That's a private group only for our VIPs. $25 creates permanent networking opportunities for you. It's the best $25 you'll ever spend. I encourage you to check it out. Alan, I invite you to pop over there now, but thank you so much for taking the time to be a part of SuperCrowd25. It's just an amazing discussion. It's so incredibly important. Thank you.
My honor, my pleasure. Thank you so much.
All righty. Okay. Well, as we think about what's going on at SuperCrowd25, let me just give you a tiny preview of some of the things that are coming up. In about 10 minutes, we get to hear from Chris Lustrino. Chris is the CEO of KingsCrowd. And, one of the things I've learned over the past couple of years, that if anybody knows anything about crowdfunding, they know KingsCrowd. It's such a valuable resource. It's really incredible. And so I'm excited. We get to have Chris. Chris is also a savvy businessman, and he and KingsCrowd have made a variety of acquisitions in the past few years. It's exciting to see all the cool stuff they're doing. We'll be talking to Chris. Then we've got Meseret Warner is going to be back. She's going to deliver a spotlight address. You remember from this morning, she's doing incredible work in Ethiopia, especially with goals to expand across the African continent, attracting money from the African diaspora and others who are interested in taking part in really what could be the most vibrant economic growth engine of the next 50 years, as we see, the growth potential of that incredible economy with its young population and all the innovation and stuff that's bound to happen there and is already happening there. Then I get to have a conversation with Patrice Gaetan. He was on a panel discussion earlier. He's doing incredible work in Haiti, and we're going to talk a little bit with Patrice about the work that he's doing in Haiti and what's going on in Haiti. We see some scary headlines. We're going to get a sense of the reality on the ground from Patrice. I think this is an important conversation. If you care at all about some of the challenges facing this country, Haiti, I encourage you to stick around for that conversation. And then Jen Risley of Amoeba is going to be leading a fabulous conversation about local investing. And then we'll have Chandra Crosby of local. She's going to be part of that local conversation. We just have all kinds of stuff going on. And that's just the next 2 hours. So stick around. This is going to be great. I appreciate you taking the time to be with us today. Don't go anywhere. We have to pay a little homage to our sponsors. The reality is we couldn't do this work. We couldn't organize this conference. We couldn't do any of what we're doing without the support of sponsors. And I am so grateful to all of them. I hope you'll take a minute as you watch this little tribute to our sponsors, that you'll be thinking about how you can engage with and support them. I know our Max Impact sponsor, is Rancho Affordable Living. Dr. Van has got this amazing crowdfunding opportunity that he's promoting right now, and I want to encourage you to check it out. He's delivering real value to people as investors, while at the same time providing 100% affordable housing. 100% affordable housing. So many projects that are called and referred to as affordable housing are doing 10%, 20%, 30% affordable housing. Dr. Van's work is 100% affordable housing, allowing people to live with dignity and safety. LEED certified housing. He's doing all kinds of great things. You just, got to check it out. Okay. So with that intro to our sponsors, please pay attention.
You're watching SuperCrowd25, the biggest event in impact crowdfunding. Over 2 days, top experts, investors, and mission-driven founders are sharing how to raise capital, discover profitable investment opportunities, and change the world. Stick around. You'll hear stories, strategies, and insights you won't find anywhere else. And if you want to go deeper, join our VIP community for just $25. Get backstage access, exclusive networking, speaker handouts, and a special VIP-only webinar. SuperCrowd25, crowdfunding the future. Impact starts here.
The property was dilapidated. It was horrible. It was code violations, drugs, crime, rundown RV trailers, no parking lot, no lights at night, just nothing. Our main focus is second chance housing. A lot of affordable housing households are led by single mothers. Our portfolio is 100% affordable. So our mandate is to be 20 to 30% below market rent. I'm personally $180,000 invested. We're only one of 2 companies globally to have a published social impact report for affordable housing on a Morningstar platform.
What's the faster way to build wealth? A traditional savings account at 0.38%, or worthy property bonds earning nearly 20 times more. Earn a fixed 7% APY starting with just $10, access your money anytime with no fees, all backed by real estate. Visit worthypropertybonds.com today.
The African diaspora is one of the biggest investors in the continent, but they are looking for a structured, transparent way of supporting this business. This is not donation. This is investment for return, including impact, and join our movement community. Thank you.
Join the CFPA for the Regulated Investment Crowdfunding Summit on October 21st and 22nd.
Register at ricsummit.org.
Rural property taxes fund vital services.
Only when they're paid.
Invest in real impact.
Visit invest.coretaxdeeds.com today. Behind today's biggest crowdfunding raises,
the leading CPA firm for Reg CF, Reg A, and Reg D compliance.
Trusted.
Experienced.
Set apart.
ISPD strengthens health for families across Haiti.
Donate today. Make an impact.
Hello, everyone. I'm Gene Massey with Media Shares, and I'm very excited to be speaking at SuperCrowd25.
Save the date for Super Green Live, the global event on sustainability and green innovation, January 22nd through 24th, 2026. We extend our deep appreciation to our supporting sponsors and co-hosts, including Potomac Growth, Energy Capital Funding Group, Move the Needle with Rob Kaplan, Ridgecrest Herbal, Stakeholder Enterprise, Renaissance League, the Global Equity Crowdfunding Alliance, the National Coalition for Community Capital, Green to Gold, and King's Crowd.
Enter to win one of 2 FireMax 11 tablets. Videos, books, and games come to life. Scan the QR code now.
Rules apply.
Welcome back. I am so excited to introduce you to Christopher Lestrino. We're honored to have a roster of impressive rock stars of the industry, and certainly Chris is one of them. He is absolutely, one of the big deals in this space. He founded King's Crowd years ago, in the early days of this whole environment of Reg CF and has built this up into a substantial business that does a whole variety of things. But he's remained true in so many important ways to this crowdfunding community. He's made strategic acquisitions. He's built this. He's just an impressive guy. We're so lucky to have him. Let me turn the time over now to Christopher Lestrino.
Hey, thanks so much for having me. I really appreciate being here. And it's always a privilege to be a part of SuperCrowd events. Love what you do for the industry, Devin. And I know there's many people who are appreciative of the work that you do. So what I want to do here is I want to share some slides with you. Today, what I want to do is offer an opportunity to give you some insights into what is going on in the equity crowdfunding markets. I have the great privilege where we sit of tracking 100% of the regulation crowdfunding and regulation A markets. We quite literally see 100% of the deal flow across the 100 plus marketplaces that are out there that offer Reg CF and Reg A investments to the general public. And that really gives us a unique opportunity and an incredible amount of insights on what's going on in the market. And from that, we could really start to glean insights about where the market is coming from, where it's headed, and where we are today. And hopefully in doing so, we could really inform thinking through strategic ways we could help to grow the market and improve it over time. So where are we today in the life cycle of the industry? Well, so far through, the first 7 months of the year, it's kind of unbelievable that we're here in August. We have seen 697 deals raise capital under Reg CF and Reg A+. From that, we've seen over $500 million deployed into Reg CF and Reg A raises. The average raise is seeing somewhere around $459,000 invested. The median amount is somewhere around $116,000. We have seen over 130,000 unique investments based on the platforms where we could track individual investments into deals. And so far this year, companies have sought to raise $1.9 billion from the Reg CF and Reg A markets. Seeing over $500 million be raised through the end of July across almost 700 deals, I think is a really big deal, right? When you think about when I started in this industry 7.5 years ago building KingsCrowd, I think there was less than 100 deals that came across the platforms over that given year. Now we're going to see upwards of 2,000 plus deals this year and likely north of $1 billion raised, which is a pretty incredible thing to happen. And I think it speaks to the fact that the industry is growing and we're seeing an incredible amount of progress as more infrastructure support is built, more awareness and education comes into the market. There's a lot of very positive things going on. Now, on this next slide, I want to talk about some of the underlying drivers that we think are helping to drive forward the market and the reasons why we're starting to see these upticks in dollars raised and the number of deals coming into this space. So one of the first key pieces that I think is really important to hit on is that many years ago, when you would go to raise a Reg CF or a Reg A round, it was like, send some emails to your newsletter list. Oftentimes, companies, especially in the early goings, didn't even have a newsletter list. There was no sophistication or thoughtfulness around how to raise capital. What's emerged over the past 3-4 years is some incredible providers. I kind of look at them as like your digital investment bank. Now, they certainly wouldn't put themselves that way. They're not licensed broker dealers or anything like that, but they're essentially capital raising consultants who have learned to strategize and figure out how to maneuver raising successful capital in the equity crowdfunding markets through a blend of efforts, whether it's PR, social paid marketing, email newsletter lists, different funnels they're building, relationships with different partners and different capital groups. These are very thoughtful groups. I'm talking about the likes of Potomac Capital Department, Maverick Brands, Atlas Road, Digital Niche Agency, many of which will likely be on over here in the next couple of days. Now, why that should matter for you as an investor is that when you have amazing groups like this navigating in this market, they're helping companies to successfully raise capital. And when they successfully raise capital, it helps set up that company for a better chance at success and thus returns for investors down the road. And as more providers like that come into the market and can really help founders to be strategic and thoughtful about their capital raise, I think we could see more companies maxing out their funding rounds rather than falling well below what they'd like to raise. We're also starting to see, and this is not me trying to toot our own horn, but we're starting to see some unique funds and people coming into the space focused on raising capital to invest in the Reg CF and Reg A markets. We ourselves at KingsCrowd have KingsCrowd Capital. It's a $2 million fund where we've been investing in 100 companies over a 4-year period to develop a almost index-like investment fund product, right? With the idea of being a highly diversified vehicle in the Reg CF and Reg A markets. But it's not just us. We're starting to see some regional funds pop up, and we're also hearing about interest for others to build in the market. We need more of that institutional capital, again, coming in alongside the individual investor to really start bolstering these fundraising rounds. We're also seeing players like SoFi. I'm sure you may have seen recently, there was a big PR campaign around SoFi starting to offer the Fundrise Late Stage Venture Fund, Sweater Ventures, which is an amazing investment fund product, and other alt fund products in the real estate categories and other different categories. What that says to me is that major broker dealers and asset managers are starting to think about offering alternative investment products. In our perfect world, we see a world where things like Reg CF and Reg A are offered through the SoFis and the Robinhoods of the world. We're really excited to see that come about over the next 5 to 10 years, but we're starting to see those first steps taken. And lastly, we're starting to see more IRA providers working with the likes of Start Engine and WeFunder, so on and so forth. Companies like Strata Trust, companies like Directed IRA are focusing more on being able to serve this segment as more investors become interested in investing in this market. And that's really important because a lot of dollars sit in IRA accounts, and those are long-term investment dollars. So folks are often willing to write far larger checks if they're writing them out of their IRA. And making that more accessible to the general public is really, really important, again, with the idea of being able to better back companies raising in our space. So we've talked about volume. We've talked about why we think we're starting to see that volume increase. The next thing that people always ask me about is, can you tell me about the underlying quality of these companies? Are these rinky-dink companies, or these companies that couldn't raise from elsewhere? And time again, what we're seeing in our market is that there is incredible deal flow. Not every company is incredible. Of course, there are companies across the venture ecosystem, the private equity ecosystem, the public equity markets that aren't good companies. We all know that. But there's also a plethora of exceptional companies raising in the Reg CF and Reg A markets for a multitude of reasons. But the largest reason why they're raising in the space is because they've heard other founders have had success using this new part of the private equity capital stack, and any smart, thoughtful founder is going to leverage every avenue they have to raise strategic capital. So let me give you a few examples of companies we've seen come across our desk as we've been making investments out of KingsCrowd Capital. Consumer Direct, which is live right now with a raise, has over $90 million in profitable revenues. They literally threw off $1.5 million in net income last year. Profitable, growing business with over $90 million in annual revenues. Most people don't think of Reg CF companies as being companies that have nearly $100 million in revenue. That's a big deal. That's a really good company. That's a company people should pay attention to. Why? Because they're far along in the process. This is not a super high risk early stage company. This is a well-established, thoughtful company that's growing really well in the fintech space with tens of millions of dollars. Again, I bring light on this one because I think a lot of people don't think there's growth stage companies in this market, and that's simply not true. There's companies like Sphere, which is a 401k company focused on climate, clean energy investments. They're essentially a fund that's been created for 401ks that removes fossil fuel companies from the S&P 500 index. This founder Alex Wright Gladstein, she previously founded another company that is now a billion-dollar unicorn spun out of MIT technology. She's an incredible founder in raising capital in this space because it aligns with her mission and vision, even though she's raised tens of millions of dollars from venture capitalists and will raise tens of millions of dollars from venture capitalists for this current endeavor. But now you have an opportunity to invest as well. Siren Biotech is an incredible biotech company that is showing really promising results to potentially be able to tackle brain cancers, which is insane. They're backed by some of the biggest VCs in Silicon Valley, including Founders Fund. But guess what? They see that their vision and their message and what they're doing resonates with a massive audience of people who have been affected by cancer. And so you have an opportunity to invest in a tier one, incredible biotech company. There's no guaranteed results of success, but this is a really, really promising company with an incredible management team and terrific results to date. And then lastly, you have Rise Robotics, which originated also from MIT technology, and they're doing incredible things in the robotics space with real commercial traction. So again, people always ask me, well, what does the underlying quality of these deals look like? If one of these four companies resonated with you, now you're starting to get a sense of what we see in the market day in and day out. And yes, this is a space worth paying attention to because there's a lot of phenomenal deals. I also talk about the fact that there's a very diverse set of companies that are raising capital in this space. We have companies like GeoShip, which are Y Combinator, backed company with pre-revenue that's building some amazing new housing technology. We have companies that were co-founded by Zilla's co-founder, right? It's called Picasso. They're doing $100 million plus in annual revenue. They've been backed by many, many large VCs, and you can invest in that company. You have Substack, which is a growth stage company that's backed by A16Z. They just did a round that made them a unicorn, which was up 3x from when they were on WeFunder a year ago. And then you have Power, which is a company with $300 million plus in annual revenue and talks about wanting to go public relatively soon. If you look at the spectrum of these companies, we have from pre-seed to pre-IPO. Again, a lot of people don't realize that. And I think it's really important to understand that Reg CF and Reg A have a lot of power and value in the private capital stack. And companies are finding that there's value across the entire spectrum of their life journey as a business. A lot of people don't think of it in that way. And that is part of what's driving the growth in our market is more and more of these companies are coming along at multiple different stages of their business and recognizing there's real value in raising capital in this space. And we think that's really, really important for investor returns as well as helping to grow the market. The other thing that's really important, right, in any of these markets is now we need to understand, well, if you want to continue to grow, people need to believe that there's going to be opportunities to actually make money on the investments they're making, right? Now, we all know that it can take 10 to 15 years to really see a full cycle through from investing in the early days to a full suite of exits. And, if we look at the market, right, we're just about 10 years in. And guess what? The first company, it was one of the first 5 or 10 companies that on May 16th, 2016, raised capital on WeFunder. The company is called Beta Bionics. They just IPO'd. This was a really legitimate large IPO at $1 billion plus valuation. It's a med tech company, and they built something amazing. And folks had an opportunity. I invested. It was on the first day of Reg CF in 2016, and now they're IPOing for $1 billion. That's a really incredible story, and one that I don't think has been told enough just yet. We're also seeing opportunities like Janover Ventures. If you held onto your stock from the first round of funding, we've heard of investors making 5 to 10x on their investment from when they invested not that many years ago, 4 or 5 years ago. You get a 5 to 10x, you'd be fairly happy. We're seeing a lot of these debt deals on platforms like Honeycomb start to return. I put a notable name that I think folks would know. Dopey just did a full repayment of their debt that they took out. And we're seeing people get really good returns in these debt capital markets where they're investing in debt offerings or rev share offerings on platforms like Honeycomb and WeFunder, so on and so forth. And then, we're seeing these positive signals from the market and that, hey, maybe there is opportunity for liquidity. And I'm seeing people actually get returns. My friend mentioned that he actually did pretty well in a deal, and they're starting to see these companies progress and raise follow-on funding rounds, and they're increasing in value. And that's really important. If we're going to keep people excited about this space and wanting to invest, they need to know that at the end of it, there is an opportunity for return, and that this isn't just a doing well and doing good, or a doing well, but it's also a doing good. And we're starting to see some inklings that that's occurring. I think it's a perfect story. Beta Bionics IPOing, almost 9 years from when it first raised on WeFunder is a great example of, I think we'll start to see a plethora of really strong IPOs in the next 4 to 5 years. That's a projection, but as we see more of those companies from 21, 22, 23 that we're raising really mature as companies and prep for IPOs, I'll be really excited to see what that can potentially do for our industry and shed more light on really positive exits. Now, I've hit on a lot of the really positive things about our industry, but that certainly doesn't mean we're perfect or that there's not room to improve, right? So one of the things that we see in the market is far too many issuers coming into the space ill-prepared to be successful. They're not working with a strategic partner. They don't have a plan in place, a communications plan, an update strategy, a investor list that they want to tackle, a willingness to, hit the pavement and just take calls and do all the things you have to do to be successful. We see far too many companies think, if I list, that'll do the trick. I'll send a couple emails and I'll raise the money. And we know that's not true, but far too many companies are still coming into the market not prepared to be set up for success. The other thing we see is, some of the best companies that we kind of identify with our rating algorithm and our fund are not necessarily the companies raising the most amount of money. Some folks have figured out that you can market the heck out of your deal and do very well in terms of raising a lot of capital, but that doesn't necessarily mean that the best companies are getting funded. And that's a problem I think about all the time, because we're always trying to think about how do we empower investors to make better decisions rather than just getting pulled in by good marketing. And that's a challenge for our industry and something we'll continuously have to fight and work through and think through. We also need to see more ongoing investor relations from companies raising capital in this market. I've always been committed to providing quarterly updates. I average about 6 to 7 updates a year to our investors. And even still, when you have thousands of investors, people miss your communications and think you're not communicating with them. So we've actually built an IR portal to help try and solve this problem, but we need to see a lot more compliance around people filing their annual reports and doing the things they should be doing to keep investors up to date. That's how we keep people engaged and coming back to invest more. We see, a lot of issuers come very far from hitting their maximum goals and what they want to raise. And we need to think about how we align expectations and set issuers up for success. And then lastly, and I think this comes with any financial services market, there's just a continued need for education and awareness on our industry, right? We are still in what I would call maybe the first inning of a very long game to continue to build the digital private market ecosystem. So from my perspective, and I know I'm coming up on time here, so I'll try and wrap it up fairly quickly. I think we could continue to see improvements on the regulatory front. We're hearing some very promising things around raising the caps on Reg CF and Reg A to attract new types of issuers, which we saw the last time those caps were raised, and I think that would be great. I think coming up with, continued improved systems and functionalities and service providers that can really help people navigate this in a strategic way will be very, very important. I think broader access via new distribution channels like RIAs and wealth advisors and asset managers offering things like Reg CF and Reg A to their clients will be really important. And of course, continuing to see liquidity events in the market to give people the confidence that if they put their money in, there's going to be an opportunity, if they diversify, to get money out with a real return to be had. So we're really excited about where the market is. We've come a long way. We have a long way to go. There's a very, very, very bright future for our industry from our perspective. We continue to see the number of issuers increase, the dollar volumes increase. There's so many positive things to be excited about, but there's still a very long way to go and a lot of opportunity for new people to come into our industry and help us continue to build something that's really special and really powerful. So with that, I'll turn it back over to Devin.
And I've been a happy subscriber for several years. How do we take the whole CF industry, investment world to the next level?
Yeah, it's a great question. I think at the end of the day, regulatory improvements, proving that the market is working, and then from there, because I think there's multiple steps that have to be had. But for me, the next major level up is when the Robinhoods, the SoFis, the TD Ameritrades say, "Oh, there's something here. This market's really working. We need to plug in and offer our investors access to this market in a more streamlined, seamless way." I want people to be able to open up their brokerage account and see CF investments listed alongside your blue chip stocks. That, to me, is when the world really changes for all of us. And that will be the major step change that changes things.
That's a great insight, and that certainly will come if this industry continues to grow, and your leadership there is going to help that happen. Chris, thank you so much. Really appreciate you taking the time to be with us today. What a great presentation. Thank you so much. We're really, truly grateful. Next up on the program is Meseret Warner. So thank you, Chris, again for being here. Let me share a little bit about Meseret. She was on earlier, and she really is a big deal, and she is doing such important, exciting work building a crowdfunding ecosystem, really, in Ethiopia, and trying to expand that to Africa, tapping into the diaspora of Africans around the world, plus the millions, perhaps billions of people who simply want to take part in the growth of the continent that has the most potential for growth in the next 50 years. This is exciting stuff. Let me bring Meseret onto the stage here. Meseret, thank you so much for being with us. We're just so excited, thrilled to have you. Thank you for being here. We appreciate your support for SuperCrowd25. You're a great sponsor. We thank you for that. And we're happy to turn the time over to you. Do you have slides for us today? Oh, sorry.
I was talking muted. After years of COVID, I still talk muted. That's what it is. Yes, I do have a slide. It's on the slide, I guess, and I can get it started, I think.
There you go.
Can you see it? Yeah, there it is. Yeah. Okay, great. Thank you so much. And I hope I can advance it, I think. All right, let me see how I can get to the next page just to make sure. Yeah, there you go. All right, thanks, Devin. Thank you for everyone joining. Like Devin said, that I was here earlier this morning talking about crowdfunding for the global opportunities. And now we're drilling down to the continent of Africa, and most specifically for Ethiopia. I have been in Ethiopia. I'm a diaspora myself. I went back to the Ethiopian ecosystem and trying to see access to finance. And it looks like it is really debt financing dominated market, not really the equity crowdfunding is just starting to take hold, but not really well known yet. So we started Ignite Investment to mobilize capital from the African diaspora. So I just want to give you some information in terms of how much capital is coming into the continent, while at the same time, a lot of small businesses and the startups are actually having so much harder time in finding access to capital to grow their businesses. Just to give you an idea, the African diaspora sends way over $80 billion. This year, I think, is about $100 billion into the continent as the remittances. And what we are working on is tapping into that potential to transform it into at least sending a small fraction of it into the productive sectors of the economy so that it can support entrepreneurs and also develop the private sector. And going beyond the obligations that we send remittances as supporting family and friends, we could still do that. And we really do need to do that, especially now aid is a little bit being minimized. And also it's very important to trying to become self-reliant and getting capital in terms of investment instead of aid and dependency. So that capital can show you how little investment is going while a lot of money is going as a remittance. So we are trying to tap into, and we are calling in this presentation the last frontier, just because, as everybody knows, that Africa is one of the last continents that haven't economically progressed yet. We have seen a lot of progress in East Asia, South America, and other places. So I really do believe for sure Africa is the next place that are with a lot of potential for investors, for generating wealth, and just participating in terms of a lot of the opportunities, what the young Africans are really tapping into, solving the great challenges that we hear about, how Africa is famine and poverty and this and that, but you cannot believe it if you come to the continent how much investment opportunities are happening. I'm sure some of you have heard how many unicorns have been coming out of Nigeria, from Flutterwave to Andela. There are so much opportunities, but there are also millions and millions of Africans that are solving big challenges, making them business investment opportunities for a lot of the people globally, as well as for the diaspora. So for us is, how do we get this diaspora that's sending a huge amount of capital to be part of this economic progress by helping support the African diaspora, the African entrepreneurs, to be able to access capital. So as I mentioned, there are billions coming in. How can we get a small fraction of it in terms of becoming investment? And it's not really charity, it is investment, it's for return. So these are huge, huge opportunities, not just for the diaspora, for anyone who can come in. Somebody was mentioning earlier today, saying that for VCs and private equity firms, to see crowdfunding as opportunities where a very good investment opportunities can be found. And for us, that's what we are trying to show by making even opportunities for blended financing. If some diaspora is coming in to invest in opportunities, how other who are a little bit hesitant in coming into a continent, they probably don't know. It's challenging, even for myself, for a lot of diaspora. They usually say, well, how do I know this investment goes to this impactful opportunities? How do I get my returns? All those questions. That's why we are on the ground working with the entrepreneurs, helping them become a very attractive investment opportunities, so that investors that are looking for opportunities can actually come into the continent and be participating in this really, really huge opportunity. For now, we are in Ethiopia, like David mentioned, but what our plan is to be able to scale what we are doing here in Ethiopia, but also expand into other parts of Africa. So we really do believe there are a ton of opportunities. So anyone in this room, or hopefully even here in the recording, do look into the continent of Africa, as well as our platform, to see the opportunities to learn more. We are doing not only just here, we have been participating in different events. Just last month in May, we were in Washington, D.C., even participating into for the African Diaspora Investment Symposium, which is a much bigger one, but we were part of that. So that is what we believe in, and I think most of you would be able to participate by looking into the continent. So why do we believe this model is transformative for Africa? It is because local empowerment. It reduces, as I mentioned, so much dependency into Africa. We have heard the aid, we have heard many of it. I think it's almost 75 years of aid, and we haven't seen a lot of transformation as a result of that capital. But tapping into the diaspora, what makes it completely different is that that is an ecosystem building community, because they do have vested interest in empowering their home countries. So they are not just giving money. They can become backers, they can become customers, they can become mentors, advisors, and they can help companies to scale and become successful corporations of tomorrow. So for us, we believe the diaspora actually is really empowering the local communities, but also even building wealth for themselves. This democratizes, of course, access to capital. I'm not going to talk about that much because everybody was talking about how crowdfunding is democratizing. But how for Africa, it does make a huge meaning on that word, because as I said, access to finance is just on only collateralized debt financing, and most startup industries do not have that collateral. So this gives them the opportunity to be able to raise capital by tapping into the global investors, including the African diaspora. There you go. And I'm sure I will hear this from a lot of people, and I hear it every single day where I speak, where I'm trying to engage not only the diaspora, but the global investors. I hear a lot about, yes, it's great. We hear about the opportunities. Look at the big population Africa has, the young population, entrepreneur, amazing investment opportunities, but it really is risk, they say. So I will just focus for just a little bit on the opportunity side, where I am in Ethiopia. Well, not physically right now, I'm in Canada, but I'm based in Ethiopia. So the economy, I know, there is about 126 million people in the country. There is so much consumer goods that can be produced because Ethiopia imports so much so far. There is the new evolving capital markets in Ethiopia that's happening. So that capital market is also implementing a regulatory sandbox, which is giving an opportunity for innovative businesses like the crowdfunding, our Ignite Investment crowdfunding, and others to be able to get into the sandbox and experiment innovative financial instruments. So that is very big leap forward. There is a very growing diaspora interest. As I mentioned it in my earlier panel discussion, one of the very successful stories in Ethiopia is the Ethiopian Renaissance Dam, a multi-billion infrastructure, really huge government, sponsored project. But that project has shown that the government itself tapped into the diaspora, and they sold bonds in smaller tickets and bigger ones. And it was very successfully funded without any kind of debt, mostly by being funded by Ethiopian, local Ethiopian, and mostly also diaspora investors. What that shows is the diaspora is much more interested in giving capital just beyond the remittances. Of course, like I said, remittances is a key part of it because we all want to support our families, and it will go to education, healthcare, other things. And those are very fundamental, and it will continue to go there. But they are also putting some portion of the money that they send into investment, as long as they find some dependable, transparent, and very profitable, as well as very, very impactful opportunities that's well structured. The Ethiopian diaspora has shown that they would invest in these opportunities. So the Renaissance Dam is one huge example why they do. We also, as Ignite, were involved in another public-private public-private partnership share company where they were interested in raising capital. And we were able to raise over $5 million from over 600 Ethiopian diaspora all over the world, mostly in the US. What that shows is how much there is interest. And like I said, their interest is it's completely different from a foreign investor that's going back to invest into a new continent. For them is their home country. They have vested interest in seeing economic progress, in seeing their own countrymen and women getting opportunities and being enabled in becoming empowered economically. So that it shows is there is a huge opportunity for us to tap into and use crowdfunding to be the next frontiers in terms of finding a capital flow that can finance entrepreneurship instead of just donations. That said, now I will flip into the challenging part of it because, like I said, we hear every time that we say anything in platforms like this, and even when we mobilize ourselves, the diaspora as well as impact investors, the first thing they say is, Africa is a very, very risky place to invest, and Ethiopia is another layer because of the challenges in terms of some conflict areas, and also because of the challenges, there aren't that many well-structured contracting that they can depend on, or maybe there is a gap in understanding. So a lot of people are shying away, including some diaspora, a lot of the diaspora, especially who have left a long time ago, and they're very, very hesitant because when you are sending us remittances, it is very easy. We know that the money is going to our moms and dads, or our friends, and we are not expecting that money to come back to us. But when we say investment, we wanted to know to which company it's going to, which entrepreneur, how am I going to get a return? Is there a dividend paying? How do I do that? How does it come back? How do I exit? How do I get my hard currency back? Or am I going to get paid in local currency? So there are many, many questions. So those are some of the challenges that we are trying to overcome, and we are overcoming by partnering with very dependable, trustworthy institutions, well-known banks in the country that are regulated by the National Bank. That way, we use them as custodial and co-investment partners. And a lot of the challenges that some may see from crowdfunding can be mitigated through the banking system that already has been solved a while back. So that gives an added security, comfort level, that type of stuff that can give a lot of confidence to investors. The other thing a lot of investors get concerned with is the dependability of the fundraisers. How do I know these fundraisers? Where are they based? Where is my due diligence? How do I do them? So in order to overcome that, one of the things that we did was we created an accelerator program where we spent some time with actual fundraisers, because there is a huge gap in the market in fundraisers that are interested in to raise funds, but at the same time do lack some of the international standards, some of the structures that we know in developed economies that we may know in Africa. So we work with them in helping them develop their financial system and the auditing financial records, the business plan, the pitch deck, all of it, we support them, and so that they can make themselves as a great investment destinations as anyone else who could be in the U.S. and other parts of the world, so that they attract those investors, especially the diaspora, because we have to treat them the exact same way as our investors will be looking to. We don't want to, just because they are a diaspora, it doesn't mean that they just give the money and then they just say, okay, well, go ahead and do it and we'll see you later. They want to have the same comfort level the other investors, any other investor looks for. So they do due diligence. We help fundraisers to do compile, prepare, and develop all those types of due diligence papers. When it is important, we also give them. We also get them directly connected to investors so they can have communication with them. That is actually partly the trust building mechanism that we try to build, because I mentioned it, I think, earlier in our panel discussion. One of the biggest questions we get over and over and over is trust. So trust is earned. Trust is, we have to show it. So one of the things that we do all these things with the accelerators, getting into the sandbox, the capital market, also getting registered in the US so that we are also compliant in the US. Through the partnerships that we build, we do all these things as part of the trust building exercise, while at the same time trying to make the process of the funding seamless and better, and also working efficiently so that investors can keep on coming, have their confidence to invest in these attractive investment destinations. So we do have the challenges, of course. I'm not going to say there is no challenge, and much more than other parts of the world, or maybe in some cases a little bit new to a lot of people, including the diaspora. So what we do is, how do we actually mitigate this, not really look over them or pretend they don't exist, but instead attack them and try to address them and build the confidence that the diaspora looks to get that kind of incentivization and trustworthiness. And the other, well, I just already mentioned some of it, and it's because I think I'm emphasizing a lot in terms of trust. It's because that's just number one, number two, number three challenge. And I see David. Is my time up yet?
We're kind of approaching that point quickly.
Okay, all right. I have only a couple of slides, so that's about it. I already mentioned about the trust, the exit mechanism in the banking, so I'm not going to go through that one. So this is what we do, going beyond the remittances and focusing on making it investment and capital. I already mentioned the ownership, the transparency, the community building aspect of it, and of course the impact part of it is another big part. This is the last one. Where you can find us and learn more is our platform. Discover what we do. Please join the movement. Really, we can use your support, spreading the word, not only being investor, but you could do a lot more things to improve and get the traction in Africa, how equity crowdfunding can actually transform really the access to finance challenge the continent is facing. And that's about it. Thank you so much.
Well, thank you, Meseret. It's just been a joy to listen to your insights. I love what you're doing, and I so want to see you succeed. My gosh, there are a few people doing work that has more potential for impact. And I've got to say, I'm convinced there's an opportunity for profit here for those who are exploring investments there. That the potential for growth in Africa is really incomparable. I don't think there's any region of the planet, certainly no other continent, with the potential for economic growth that Africa has. Young population, growing population, and so much, the gap between the economic prosperity of the continent with the average of the world creates a pull, an upward draw toward that median, and there's an opportunity for all of us to participate and profit from investing there. So I'm excited. Love what you're doing.
Absolutely. Thank you so much. One of the statistics that always kills me when I hear it is even when the global investment, venture capital, even when Africa was making a record in mobilizing investment, it's 62% of the global venture capital that comes into the continent. And it just is amazing for me to see that, because the opportunities are really, really tremendous. But I think we need to do a lot more knowledge transfer and information.
Yeah, you're so right. Meseret, thank you. I invite you to pop over into that backstage room. I know there are people there who want to talk to you. That's clear to me from, kind of peeking in. So please pop over there, say hi, introduce yourself, and make sure that the folks there meet you. And for those of you who are interested in visiting with Meseret, if you're a VIP, pop into that backstage room. If you're not a VIP yet, you can become one very quickly. Visit the SuperCrowd25.com and get your ticket, and you can join. So with that, Meseret, thank you very, very much.
Thank you, David.
Okay, I am now excited to introduce you to my next guest. Now, Patrice was already on a panel earlier this morning talking about global crowdfunding, but Patrice helps to lead an amazing nonprofit organization that's just been through the challenges this year. USAID cut its funding for a lot of programs around the world. His operation was literally shuttered by that funding gap. They've since found new sources of funding. They're back in business. They're doing amazing, vital work, saving lives in Haiti. And I'm excited to introduce you to Patrice. We'll talk a little bit about what's going on in Haiti and the amazing work that he's doing. So stick around. You don't want to miss this. Patrice, welcome to the show. It's so good. It's so good to see you again. Thanks for making time for us. I know you're plenty busy. I think I want to set the stage. I want to kind of take a step back and ask you to set the stage so that we better understand the situation in Haiti. What are the key things that Americans need to understand from someone who's living it, who's on the ground right now? We see occasional headlines. They don't look good. What's going on?
Yes, thanks, Evan, for this opportunity to explain what's actually going on in Haiti. I know the headlines. One of the major headlines that we had in the past, in 2010, we had the earthquake, and that drove a lot of goodwill from a lot of Americans, a lot of donations. Unfortunately, our leaders have not handled that wave of support very well. In 2019, there were different elections. A democratically elected president, got assassinated, and that drove basically a whole cycle of chaos. What's different than what's been happening in the past in terms of what Americans are used to, or at least the global community is used to, is now what you have is the gangs. Actually, gangs are organized and they're basically taking major territories that they basically control. They destroy police stations and then they take it over. So there's a lot of displacement of population. As of now, based on current estimates, like 360,000 people have been moved, have lost their homes, displaced all over the country and the capital. So that's actually the main thing. If there's something that we're seeing, that's significant because they can't go back to what they were.
Yeah. Fundamentally, Haiti is one of the most beautiful places on earth. It is located in the beautiful Caribbean, and with that balmy tropical climate year round, they're just, and then Haiti's a relatively large place. You've got mountains and various weather. I mean, has just such tremendous potential, tourism, all kinds of things, and we want to see it thrive. But there are fundamental challenges, and those are where ISPD is playing a role, is addressing kind of some of that fundamental work. I wonder if you could give us a kind of an overview to the work that you're doing and how you're making it work in these difficult times.
Exactly. Thanks again. What we're doing as SPD is basically we provide frontline health and humanitarian services to different type of groups. So we have different core programs. We have two clinics, one incubation that's way up in the north. It has less disturbance there, and one in Del Mar that has more disturbance. And we our basic healthcare services, and we also within those for different type of people. Also, another core program is basically what we do is we bid out on major projects like USAID, and what we do, we basically serve. Before USAID thought funding, we were serving 3,000 patients that has HIV, and we were providing them life care, we were providing them medication, life-saving techniques. After the cutting from USAID, we were still engaged in providing also mobile clinics. That's our third core program. Mobile clinics in different type of sites. So I was referring to displaced people. What we do, we just give them healthcare services. We check their pulse. We basically do a lot of treatment for that, and it's still in a dangerous environment. But we have our ways in terms of logistics, in terms of security help, to be able to secure our personnel. And as of now, we provided the healthcare services to 45,000 within that program. And recently, just when David was telling you guys I was busy, recently we just got a new type of funding to restart the program, but not just for 3,000, but for 14,000 patients, and that's all over the country. Before it was more. We were handling like about 6-7 sites. Now it's more like it's gonna be 15 sites. A lot more in the north, a lot more in the south, a lot more in there. So it's a new thing. We're very proud of that, and we want to continue helping. Our motto is we can provide healthcare services anywhere, at any point, just so that we have a healthy population.
Well, it is so essential, right, to have some sort of fundamental healthcare system in a country. The burden of unhealthy people is just too great. It's just too great. And so it's exciting to see the difference you're making. I'm thrilled to hear that here after.
Devin, if you're talking, I haven't seen.
Yeah, can you hear me? Can you hear me now? Can you hear me now? So, Patrice, the work you're doing is vitally important. It really is just tremendously important, and I think that life-saving fundamental work is kind of irreplaceable. Can you hear me yet, Patrice? Can you hear me now? Patrice, I'm sorry, we're having technical difficulties. Can you hear me?
I can hear you. Yes.
Okay. But what you're doing is vitally important, just essential in every possible way to having the economy of Haiti grow. And I'm amazed that after being essentially defunded early in the year, you now are growing and operating more sites. What resilience! That's just impressive. It's impressive. As we think about your work, right, and the projects you're doing around the country now, these 15 sites, that's just absolutely essential. What are some of the things that donors can help you fund today? With all the difficulties and challenges going on, what would a donation help you accomplish now?
Well, again, we can donors can help us expand a lot more for the mobile. If we're talking about the mobile clinics, while we have while we already have set sites, there's a lot more. There's a lot more need, and so donors can help us fund mobile clinics, and they can also help us in emergency health kits. You know, anything that can help them with that has food in there, that have basic hygiene process, because they're in camps. There's not a lot of sanitation. Is not the best. So anything we could provide. We don't have those a lot in our programs, but donors can help us on those. And well, we recently we're talking about energy in a VIP room. Yes, we do need fuel for generators to support that. And within our clinics, because of the way the country, if we don't have healthcare is not basic healthcare is not wide, so it's always difficult for people to go to do checkups. So we can come up with our clinics. We can definitely work with donors and to help them sponsor a group of patients, and they'll get the basic consultation, basic medication, in order for their better lives.
It's wonderful to think about the potential impact that people can have by funding your work. You know, as we think about the work you're doing.
Hello.
Patrice, can you give us a sense of? Can you hear me now?
Yeah, I can hear you.
Okay, can you give us a sense of a particular case study, an individual, and if you're not close enough to the action to be able to give us a specific person, maybe you could give us a more a hypothetical example of someone that kind of typifies the people you're helping, so that we can better understand what that on the ground experience is for those you're serving.
Yeah, so on the ground, let's talk about the mobile clinic programs. You will find men that have they have stiff neck, they have headaches all the time. So with the mobile clinic, you were able to diagnose that basically they have certain level of blood pressure, pretty high, and because we do a rotating process every week we're on the ground every day, so we're able to visit them, give them the right medication, and follow their process. So those are most of the cases we find. In terms of the women, sometimes we had a case where it's a postpartum. She was experiencing a headache. She was experiencing nausea and all that stuff. And we were able to discover what our problem was, and again, basically give her the proper medication and with the rotation. The advantage is we just don't do one site and then we're done. We have a rotating process of going to the site, seeing the different patients, and monitor how they're dealing with their condition.
You know, as you think about that, people that you're helping, most of them, I suspect, have no real alternative for care. It's the care you provide, or no care at all. Am I misinterpreting the situation?
Yes, and definitely. Well, most of the hospitals, the major hospitals, especially in most this marginalized communities, they've been either destroyed or they just stopped work. So it's what they basically relying on is very private hospitals, but that have a limited time frame, like limited time operation, or some private clinics. And because the biggest hospital in the government, the public health hospital, is closed. And so what we're offering is very crucial for them in terms of, especially because we're close to them at the moment. They want and they know when we're coming, so they can already lined up to get the basic services.
Yeah, that's such vitally important, essential work. I'm thrilled that you're there doing it. Thank you for doing that incredibly important work. Um, as you look at the challenges you face operationally, kind of your job, what are the critical issues that are the biggest challenge for you on a day-to-day basis in delivering that care to the mobile clinics? I mean, are you able to get fuel? Are there checkpoints by rogue authorities that are creating? What are some of the issues that you're facing operationally to try and deliver this care day after day?
Well, the major issue is the security. We know that we're still living, even while the population is moving, is displacing to safer areas. Um, the, the the threat of the gangs, over that their shadow is still there, and nothing stops them from coming into the camp and do what needs to be done, or threaten people or ransoming them. So, but the way we protect our team, because we have like a team of 20 people going there, doing that with 2 mobile clinics, basically doing this thing every week, is what we do. And we work with a security team. While we're working, and we kind of change the way they operate. We tell them, okay, we're gonna do this way. You're gonna start reconning. So do reconnaissance first. Go ahead first. Check the space. See what's happening there. Who's on the ground. If it's too dangerous, we stop. Or we find another site. If it's okay, we move. Once we move, you pick them up. We pick the people. We have a one point where a point of contact where we pick everybody up, and then we drop them to the site. They provide the service, but the security team stays with them, stays informed of whatever might happen and everything, and then once the service is done, they come back again. We do the same process, same recon back. Is it safe to use that route? Is it not safe to do this route? So safety is pretty important. Safety is important for us. We need the team. We don't want them to be in dangerous situations. We know they are already in precarious situations, but we try to mitigate it as much as possible. And we have good contacts with the police in terms of if anything should happen. So right now, so far, we haven't had any casualties. Everything is going fine, and we're moving ahead. The ultimate goal is to be able to reach at least 90,000. We're still at 46, so we're on course.
That's, it's wonderful to see you succeeding in meaningful ways despite these really intimidating challenges. It's hard for me, and I've been there, to imagine the challenges that you're facing operationally today. I was there, several years ago when things were relatively stable, operational, functional, and things have become a little more challenged. So it is amazing to me that you have figured out some of the key ways to operate and deliver care in this challenging situation. Apart from the big picture, right? You've talked about you've got the mobile clinics going. What do you see as sort of the specific big wins? Can you think of examples where you've been able to do something that people said they'll never be able to do this, and you've been able to do it? Have you had some big successes that you're proud of, you want to brag about?
Well, just getting back the funding from going from 3,000 patients to 14,000 patients. That's a brag about, because we were there. We The team actually, some of them actually worked, volunteered their time in order to keep the organization running, in order to keep the project running. One of the challenge, I think, what also comes up in mind is we have a health site that's based in the frontier, and you might not know the geography, but it's close to the Dominican Republic frontier, and that area is basically controlled by the gangs, and they basically stopped any smooth road access to it. But we still had like about like 100, 150 patients that needed care, that needed medication, and what we had to do was basically find another way to get around it, and it was go through the mountains. It was and only one vehicle could get there. And when we found out not any type of vehicle, it was had to be motorcycles. So that's what and we had to come up with a different type of delivery mechanism, to put it in the motorcycle, send it into the road, and basically give those 150 patients the medication they needed. That was a good success story. It was very praised at USAID and the US Congress, because again, it's so remote, and with the with everything being controlled by the gangs, it was supposed to technically be impossible to be achieved. But we do find a way. People will find a way. People will eat. They have to eat. Things have to happen. Um, it says a lot about the resilience of our people.
Well, it says a tremendous amount about the resilience of the Haitian people, and more of your personal resilience as a leader in this organization to make extraordinary things happen in extraordinary, exceptional circumstances. So, congratulations. As we begin to think about wrapping up our conversation, Patrice, I wonder if you would take a minute and be really clear, be operationally clear about how people can contribute to your work, how they can donate, how they can support you. Otherwise, maybe there's a way to contribute volunteer labor, maybe remotely, maybe they got to be on the ground. Walk us through how people can help and support you.
We like we're open to any type of donations, and but what we're looking for mostly is partnerships, and having a sit down conversations to see how that any investor or donor can make an impact in Haiti. I think our organization, we have a strong financial background. We passed through different audits, and so we're willing. Our books are open to anybody, and we're still working on the mechanism on how we can receive macro donations, and but overall, because again we did develop expertise on receiving big type of grants from the U.S. government. But at the same time, we also want to highlight that there's also other alternative investments funding mechanism, and that's one of the reasons we sponsor this type of activity. We're looking because we have a different type of innovation, small innovations that we came up with that we want to highlight, and we would like to partner with anybody that's interested in strengthening and not only scaling up, but having an immediate, readily impact on the people. Your dollar is going, whatever dollar you're gonna make is gonna hit the ground running and make it. There's no waiting. It's just that's immediate relief, and you will see the numbers pop up.
That's fantastic. Patrice, I can't thank you enough. I know things are difficult and challenging right now, and yet you've made time for us. I want to call out to our audience that you have been impressive, actively engaged angel investor in our community, and have been a stalwart member of the Impact Cherub Club, participating remotely for years. One of our earliest members. You're still coming. I can't thank you enough for the contributions you've made to helping us make wise investment decisions in that context, and having kind of a genuinely thoughtful concern for making sure that our investments drive real impact in the world, and to see what you're doing in Haiti and get this closer look. It's inspiring, and I thank you for taking the time to do this with your busy schedule. So we wish you all the luck in successful raising, and I want to encourage everyone who's watching. If you're watching now and you are in a position to be of any help to Patrice and his work at ISPD in Haiti, I would strongly encourage you to explore that option. There are lives hanging in the balance, right, of what the work he's doing. And so I encourage you to check out whether you might be in a position to be of some help. So again, Patrice, thank you very much for being here. We got to move on. I wish we could talk all day because I love what you're doing. But thank you very, very much, Patrice.
Thank you all. Thank you, guys.
Okay. Well, I'm excited. Our next panel discussion is led by one of my favorite people in the world. Jen Risley she's just one of those amazing people who, in my experience, has an uncanny ability to just get stuff done, right? There are so many of us that are guilty of talking more than we do. Jen is exactly the opposite. She's one of these people who does more than she talks, right? She's just absolutely a leader in this space. She's the director of operations for the American Independent Business Alliance. She's also the editor of the Main Street Journal, and as savvy a voice as there is in this community. And I'm so thrilled to have her lead the panel discussion today. Jen, I'm going to ask you to introduce this amazing panel that we've assembled.
Yeah.
It's just a great group of people. We've got Kathleen Minogue, Danielle Crosby, and Danielle Godfrey, and we've got Chandra Crosby. Sorry, Chandra and Danielle for that. And then we've got one more person that's MIA. I'm going to see if I can track him down while you guys get started.
No, and John did warn us that he is on a very different time zone than we are, but was going to be here. So
yeah, he's in some faraway place on the other side of the planet in the middle of the night. So we'll see if we can track him down while you're talking.
Oh, no, it's so great to be here. Welcome everyone to our SuperCrowd25 conversation called Unlocking Community Capital for Local Growth, something dear and near to my heart. So I'm so excited to be moderating today. As Devin already introduced me, I'll move on to just saying thank you to our fantastic panel for being here. And what I'm going to do is I'm going to ask the first question, and I'm going to ask each panelist to give a short introduction, your name and who you're representing. I know you probably all wear lots of hats, but just before you answer the question, and then the other questions that we have will be more of a popcorn. So as you feel moved, please do speak or raise your hand to contribute and answer to the question. So, and we will also have time near the end for 1 or 2 audience questions. So I'll keep an eye out for that. But I really want to make sure that we get started so we can hear as much as possible from our panelists. So the first question is, how do you define community capital? So I'm going to throw that to Kathleen first and then go to Danielle and Chandra.
Thanks so much, Jen, and thanks to Devin and the team at SuperCrowd. Kathleen Minogue, I'm the founder and CEO of Crowdfund Better. We are the leading crowdfunding and community funding education organization in the US. We've been around for over a decade. And our focus is on providing education and training for the ecosystem of community funding, everything from donation, rewards, investment, community investment funds. So we have a wide range of support. I love the question, what is community capital? I can't wait to hear what the other panelists have to say. For me, it starts with, community capitals are those resources that exist in a community, whether they are financial or non-financial. So you have natural resources and built resources, cultural resources, social capital, financial capital, human capital. We have all of these things. And the at the heart of community capital is recirculating these funding and resources within a community rather than those resources leaving. And so I like to say that, these community capital tools allow folks to have a new financial ballot box where they get to vote for what gets made, who makes it, and who benefits.
Awesome. Thank you, Kathleen. So moving on to Danielle, what do you introduce yourself, but also how do you personally define community capital?
Hi, Jen. Thank you for having me. I am Danielle Godfrey, the founder and CEO of Setapad Accountancy Corp. We help issuers get their financial ready for their raise. So I think Kathleen gave a really powerful definition of community capital. It's a community coming together, whether putting the wealth together, whether financial, human, social, for a common cause, And the part of it that I like is it creates a sense of belonging, a sense of rising together, and a sense of resilience within the community, a sense of thriving together, supporting, lifting each other. So that's what I will add as on top of her definition. So yes.
I love it. Yeah. And the four of us are definitely raising each other's votes, I hope, with this conversation. So yeah, Chandra, tell us about yourself and what you think community capital is all about.
Sure. Thank you for having me. It's so awesome to be on the panel with you all. Hi. I'm with Local Fund. I'm with Community Partnerships. So whether you're an investor or a founder, you will deal with me initially and probably throughout the process of working with us. And I don't think I can say it better than Kathleen or Danielle. I'm so happy that we're so aligned on this. Community capital is about, like you said, raising all tides and being able to create resilience is the word that I keep hearing over and over, being able to create resilient communities. And making sure that, like Kathleen said, we circulate money within Main Street before it goes to Wall Street, right? So, and we're definitely very passionate at Local Fund about BIPOC communities and creating pathways that haven't always been available to those communities. And so we want to see the communities that are built by the people, we want to see them thrive. So.
Awesome. It's great to hear from you and meet you, Chandra. I think we probably met just seeing your Zoom name, so it's great to actually see you. And John, I know you're in a totally crazy time zone, but we're just introducing ourselves and sharing a little bit about what community capital means to you. So thanks for being here.
Oh, great to join you guys. That's pretty early in the morning. Basically, we opened the door for broad-based participation, giving everyday people access to a real estate space that was once limited only to hedge funds and high net worth investors. Basically, we deploy capital directly into local jurisdictions, helping the counties, the schools, and the cities recover delinquent tax monies that in turn fund education, emergency services, as well as infrastructure. So community capital is, to me, means helping local communities, and you can be part of a broader community, in turn helping local communities in this space. Glad I could join in. I just had some technical difficulties with my laptop, but my cell phone seems to be working.
Awesome. Yeah, thanks for being persistent, for sure. So the next three questions are more of a, like, if you feel compelled to answer, raise your hand or start talking. I won't call on people like I did for the first question. So what are some effective strategies for attracting community capital, especially like from a diverse range of investors, included non-accredited and everyday investors? Like, what are you seeing as effective strategies where you're doing this work?
Was that directed to me or everybody? Go ahead.
Okay, I'll go ahead and get started on this. I think being in the crowdfunding space, what I have seen with founders that have been successful is when they have a compelling story, a story that people feel connected to their mission. When they have something that really improves the community, the economy, and it really draws that capital that they need. So I think it's important to craft a story people can relate to. It's important to feel that connection to your vision, to your mission. So, yes.
Absolutely. Other effective strategies. Storytelling is a huge one.
I could jump in. So we're working at Crowdfund Better also with the National Coalition for Community Capital and some community investment funds right now, which are using investment crowdfunding. And one of the things that we are seeing, and I have seen in our work in the past, is how important it is to get community organizations and community groups who have the trust of the people in the community, who have built that over time, involving them in the conversation. Because for me, crowdfunding is all about passing trust from one person to the next. And it takes a long time. I mean, technology is quick, but humans build trust in human time. And that can take, it's not necessarily a 2-week process. But many of these organizations have spent time in the community. They understand what they need and what they value, and they can become champions that then can bring these offerings to those community members in a different way than that individual. And also they bring networks. And I think those trusted networks are really important.
Yeah, I keep seeing that. Moving at the pace of trust is definitely a huge thing to remember as we're doing this work. And Chandra, do you want to, calling on you when I said I was going to popcorn, but if you have anything to share, I'd love to hear it.
Yeah, sure. Definitely at Local Fund, one of the things that we're focused on is lowering the ramp for access. A lot of people, feel intimidated about being able to help and being able to, like Kathleen and Danielle said, instill that trust in the community. So at Local Fund, we work on that as well, but I echo their sentiments. It's about trust. It's about resilience again. It's about resilience and maintaining that sense of community.
I will also add that a good way to attract is to provide things like free webinar and workshops where we can educate the people about what we are doing and how it adds value to the community.
Absolutely. And just going from strategy, kind of like pie in the sky, or how you come to this work every day. But if you have specific examples or stories, we'd love to hear of successful projects that have been funded by community capital.
Yeah, sure. I'll jump in. So with Local Fund, we had a project with Leimert Park where essentially Hot and Cold Cafe, which was a local community-owned business or a community business, was facing gentrification. And it was a Black-owned business. The community obviously wanted to help save the business. So the community came together to form a trust with support from Wells Fargo, LA County, and even Gucci. They purchased the block and they were able to turn those renters into owners through fractional shares. So instead of displacing the business, owners are building wealth, they're regenerating it in their shops, and they're preserving the natural cultural identity of that area. And even when the cafe was damaged in a storm, the trust allowed for the business to have the stability to rebuild stronger as a whole new cafe with no fear of losing their space in the neighborhood. And so that's a really cool example of how the community can come together, create capital, and save, and continue to build.
Fantastic.
I share a story or two. We typically buy properties that are in Blythe communities, tertiary markets, and I can think of one property. We don't buy many homes. We mostly buy lots and land and acreage and mineral rights. One reason is in Texas, the homestead and occupied properties have a much longer redemption period, and we're not in the focus on displacing people. We really rather deal with land but in one case, we bought a house that was pretty run down, been vacant for about 4 years, and the prior owner lived across the street with her father, and we talked to her right away, found out her situation. She introduced us to the neighbor, the next door neighbor lady on the right, who the daughter owned the property on the left, so our property was in the middle of two properties, and again, it needed to be demolished. We demoed the property and ended up selling it to the family that owned both sides of it contiguously. So it made it something where they could expand their compound, and actually, I believe their plans is to build a home for a son. So it just was a good story. It turned out well, even though the property needed to be demolished.
I can add a great story in the crowdfunding space. Last year, we had an issuer that came in and within 4 weeks raised $4 million. So what we saw from that was that they had a very good strategy from the beginning. They had done their research. They had a very strong team. They have crafted a compelling story that their community felt connected to, and they were very engaged with the crowd, very engaged and answering questions and making them feel like they belong. They were part of the whole process, and they also had a strong teams of vendors. So yeah, that's my example of a successful story.
And I'll just bring it home. Sometimes community is not necessarily geographic. We worked with Pioneers Performance Streetwear, which is the only Black-owned running apparel company in the U.S. It was started through these running clubs. They used rewards crowdfunding, raised, got their product out, and they had this really excited community. And the founder, Sidney Baptista, he wanted to give his community an opportunity to become owners in what he felt they had helped build. So he launched an investment crowdfunding campaign. And something we did, we used the testing the waters period to help educate the community about investment crowdfunding. So before we put the offer in front of the community, they had a chance to sort of toe in the water, learn a little bit about this new way of investing, which was unfamiliar to most of them. And so he was able to raise, he was just looking for 124,000, and he raised that from his community. And now he has investors who are the runners that were in the club, who helped create the company, and now they are co-owners.
Wow, that's cool. And just kind of taking a step back, I know, Kathleen, you said that, local is kind of relative because some of you work really hyper local and some of you help other local communities thrive no matter where they are. So I'd love to just hear where you guys are based and what level of work you do. That would probably help the audience. So I'll go to Danielle first. Where are you?
Yeah, hi. I'm based here in Los Angeles, California. And yeah, we do a lot of attest work. We do tax work. Yeah, we have a financial statement type of work. And sometimes even we can do valuation. So, but we specialize in crowdfunding, in reviews and audit, preparing the founders to launch their crowdfunding campaign, whether Rec CF or Rec A. Yeah.
Wow. Great. And John, I know you're afar right now, but where do you land usually?
Okay, I live near Corpus Christi, Texas, which is on the Gulf Coast. and we operate specifically in Texas. I saw a question in the comment. I don't know if now it's time to address that.
Sure.
Somebody asked, how does tax deeds work with liens? And that's a great question. About half of the states in the U.S. are lien states, where your investors typically are investing the amount of interest. It's an interest play, and you take the position of the taxing authorities. And then there's something called a redemption period, which is different than what Texas and deed states. We have a different terminology. We get a deed when we're the high bidder on the property, subject to the prior owner's short right of redemption, which is 180 days, if it's not a homestead. So the lien is what goes in place when someone falls behind and becomes delinquent on the property taxes. And depending on each state, it's handled. The state statutes handle it differently. But I'm based in Texas, and we specifically buy properties in Texas, but it's open to anybody and everybody pretty much under Reg CF from anywhere in the world.
Great. Thanks, Sean. Kathleen, I know where you're from, but I'd love for you to tell us more.
I grew up on the East Coast, but I'm currently based in Boise, Idaho. So calling you from the Mountain West. And our work takes us clear across the country. So we have work in Los Angeles, in Washington State. We have a certified advisor program where we provide professional development to the advisors that work with small businesses on the ground. So a lot of small business development center professionals, and we've got advisors we have a half dozen in Florida and advisors in New York and Arizona and California. So our work really takes us coast to coast.
Fantastic. And I actually met Kathleen. I live in Keene, New Hampshire, and we use rewards-based crowdfunding in our community. So I was lucky enough to get connected with Crowdfund Better and Kathleen and Scott, and they really helped our community just get grounded in that process. And, the difference between there's a science to crowdfunding, and then there's the art of crowdfunding. And I think it was Sean or Danielle that talked about the storytelling, and that was just a huge lesson that we learned from Kathleen and others in this field. So I know there was a question about how do you contact all these folks, and I know that Devin and his team has done a great job of making it easy to connect afterwards. But if I'm wrong, I'm sure Devin will tell me. But Chandra, where are you calling in from? And yeah, what level of work are you doing now for Localite and the fund?
Yeah, so I'm based in Atlanta, but Local Fund and Localite, since you mentioned it, started out in Long Beach. However, we have funds that we're starting in DC, Tucson, Cincinnati, Georgia, and Long Beach. And so basically using our framework, our LIFT framework, we're able to fractionalize and diversify allocations. So it's a network of funds, whether they're regional or what have you. We use our LIFT framework also for ESG funds. So, and the LIFT framework operates somewhat like a savings bond. So we're all over the country. We're trying to anchor every block.
That's great, because I've known Localite just through their loyalty program, which has been really impressive. But I've heard that this fund has been cooking or doing work. How long have you been with Localite?
I've been here for about 2 years.
Oh, cool.
Consulting, yeah. So it's been really great. It's really near and dear to my heart. And the fact that we're able to impact people that I would know every day is really, really cool. And it's a part of the world that I don't think a lot of people know about. So it's nice to be able to be a voice.
Great. No, that's super. And so I think the final question is already kind of been touched upon by all of you, but I'll just go ahead and ask it as well. But I'll also invite each of you to ask questions from the other folks here, because you all are doing such amazing work, and you know this and live it, where I'm kind of like someone who's benefited from it. So I don't want to keep the conversation limited to my questions, but what lessons can be learned? If there are other community members listening today, and you've touched upon this in terms of sharing specific examples, specific strategies, but if you could like go to one of these communities and like wave your magic wands, what do you think they need to learn before doing this work or while they're doing this work?
I think Danielle said it so well early on in terms of being able to build and sustain trust in these communities, because once these projects get started, you need to have a steward, right? You need to have someone that's able to be a voice. And if that's not there, then things can really fall apart. And you're not allowing space for accessibility, or any of the things that are really great when you're talking about building community capital. So I think definitely sounds redundant, but definitely trust and knowing that there's more out there. I think that's what it is. It's don't let no stop you. I think it's a really great lesson for communities that are building.
Yeah, I want to build on what Chandra was saying, because you were saying, that don't be intimidated. And one of the things that I like to remind people is, we did this as communities for many generations, and it's just that there's almost no one alive right now who could do this kind of private local investment legally. And so we just didn't have the kitchen table conversations. We don't have that familiarity. But if we focus on the feeling that we want to create, so instead of the what, the why, like what do we want people to feel when they participate? What do we want these projects? What feeling do we want these projects to create in us, in the community? I think it can bypass a lot of what can intimidate folks, which is some of the financial jargon and the securities rules, but focusing on that feeling. What is it that you want to create, the feeling in the community? I think it can help us overcome some of those barriers.
I love that, because it can be completely overwhelming, especially when you're one of the few people starting this work in your community, because everyone looks to you as, the person who has the answers. And it's like, it really is about serving the needs of the community and just making sure that, you start with the why is super critical.
And I think, Chandra, you might have said belonging, and that is, something, it's like you can talk about investment crowdfunding, or you could say, I want to create something where everyone can belong. Right? And start with that instead of the technical piece. And then you'll have the lean in, and then you can get to the technical piece. And then there'll be a little more resilience again for those technical pieces if the heart part is engaged.
100%.
Love it.
Absolutely. And I would also like to add that integrity is important, because it's important that you do the things you say you would do with the resources that have been given to you by this community. So after establishing trust, it's important to follow up with them, to follow up and to having transparency and integrity. So that would be very helpful.
Here. And John, I know there was a specific question for you, so feel free to answer our question or also just dive in. I think the question will pop up again. I noticed that beautifully happened before. Woo! Okay. There it is. I love it.
Yeah. Hi, Helen. Thanks for your question. Absolutely is open to investors from anywhere in the world, as far as I know. You do have to meet very minimal questions as far as have some disposable or suitable money, and I guess it depends on each offering as far as the minimum investment, if it's suitable for you. But to answer your question, we do have investors from Brazil in our fund. We have investors from Canada, and we get inquiries, significant inquiries from everywhere around the world. So all that information would be available on the offering portal, which is invest.coretaxdeeds.com, or seek your CPA or legal advisor for a more direct answer. Can someone else answer that question?
So, Jen, I want to ask you a question. I want to ask you what you have seen that has worked. We all answered, but you didn't. But you have done this work on the ground, and so I'd love to turn the microphone over to you for a second to talk about some of the things that you have seen work.
Oh yeah, I mean it echoes what you guys have shared, but I think I'm blessed to have done this work completely hyper local. So we work in Southwest New Hampshire, and so we are talking about rewards-based crowdfunding, and we started in 2017, and so it had to do with projects that people could understand. They're like, oh, here's a nonprofit that works to support the local food system, and they want to build a new barn. And so they invited people to contribute. And they also got a special little reward out of it, like maybe a little token of their thanks. So it was something that, again, people could understand, they could wrap their heads around, not, another piece of property somewhere they didn't quite know. It was a place that they visited all the time. So that made my job very easy, because it was about working with these entrepreneurs and these nonprofit leaders to distill, their story and their why. I also was blessed to have a videographer that worked with me. So again, instead of just talking words, we could see visuals of what people wanted to do. So that was another really powerful thing. And then we had some amazing partners. At the time, I was working for a local food co-op. So it was really easy for me to tell the story about a local business that was actually selling at the co-op. So then people are like, oh, cool. There's this cheesemaker that wants to, ramp up their production. I would love to buy more of their cheese. So it just made it very tangible and very, easy to, for want of a better word, sell. So, and also for me, it was building those connections with people that I've known for a long, long time, doing local economy work. So all of a sudden, they kind of knew what I was doing, and I probably promoted their business. But then when I invited them to do rewards-based crowdfunding, they were like, I've been thinking about this, but no one's ever asked me to do it before, but you're willing to help me? Okay, I'll do it. Or I tried it before, but now I'm interested in trying it again. So it was really a great opportunity to do community building. So yes, they got funding. Yes, people, were able to give, and it felt good, but really it was a long-term opportunity to build our community. And I'm hoping in the future that, that it'll go beyond rewards-based crowdfunding, because that's only a small piece of the puzzle. In talking about some of the programs that you guys are offering, adding that layer in our community would be fantastic. Real estate, return on investment, equity-based crowdfunding would be really, really great. So we've set the stage for some of this work, but we don't have anyone yet who's helping us get to the next level. So that's why I'm really excited that you guys are all talking about this today and throughout tomorrow.
And if I could just piggyback, as my life is education, that I would love to see more folks embedded in communities who can guide entrepreneurs and community organizations to do this work. We're on this wonderful collection of folks, but we're like a drop in the bucket. And so really, to me, the next step is to find people who really understand what's going on in their community, empower them with this knowledge, and then see what wonderful and miraculous things they can accomplish.
I love it. Absolutely. It takes us all to do this work. Yeah. So we do have some more time. We have time for questions from the audience. We also have time for, if you want to tell us how to get in touch with you. I know, John, you shared one website, but if there's anything else that you all want to share, just so people can just follow up with you after this discussion.
Sure. I put a white page in the backstage platform somewhere that can be accessed. Encourage anyone to reach out and take avail of that information. I really enjoyed the seminar so far. It's great. A lot of wonderful content. I would like to mention my advisory team was not on board when I decided to go Reg CF with my offering funds. They're kind of old school attorneys, securities and real estate attorneys, and they I think they were not aware of the subject matter. And even though it's been around, I guess 10 years plus now, it takes time, and the momentum appears to be fantastic. I'm real excited to finally be involved in it in a practical manner.
Awesome. Thank you, John.
You're welcome.
So to learn more about Local Fund, you can visit anchorship.org. And to connect with me, it's Chandra at localfund.org. There's all kinds of interesting things on there about how we build our funds and how we're working with nonprofits and communities to build funds. Because to Kathleen's point, you need people you trust. And if you already have people who have boots on the ground, that just makes it a whole lot easier to, makes it's better when you're doing it together. So yeah, I've really enjoyed this. This has been awesome. And it's so nice to be amongst a group of people who are aligned and in the same, same goal. It's really nice.
Awesome. Thank you, Chandra.
I'll jump in. So best way to start to connect with us is our website, crowdfundbetter.com. You can always reach out to me on LinkedIn. I spend a little bit of time there. And we have resources that are for entrepreneurs. So we have online courses. All of them are relatively affordable. So we have a learning center, learn.crowdfundbetter.com. We also do professional development for small business advisors. So we have a certification program where you can certify to be able to guide individuals through the crowdfunding process. And we also have a professional development training for community members and resource members. So economic development, chambers, Main Street, just engaged community members who want to understand this ecosystem. So you can check out all of those on our website.
Thank you, Kathleen.
Yes, that's amazing. You can connect with me through my email, Danielle at setupatfs.com. We also have a website, www.setupatfs.com. We are also on LinkedIn, on Instagram, on Facebook. But I'm very reachable through email, and my email is also on our website.
Awesome. Thank you, Daniel. And it's one of those things where I was asked to be, in this panel and was surprised that 2 out of the 4 people are members of the American Independent Business Alliance. And Devin is a great collaborator on that as well. So please do get in touch with us at amoeba.net and also the Main Street Journal, because again, we're all about connecting to the practitioners, just like Devin and SuperCrowd and Superpowers for Good. So it's so fantastic to be with you guys today.
Before you wrap up, can I throw out one question that maybe all of you could answer? As we've got a few more minutes, and I would just love to get your insight on something. But I think each of you approach your local investing from a very different perspective. You sit in very different chairs doing very different things, and yet you share a passion for making your communities better. What's one thing you individually are proud of having accomplished recently in your community? What do you like to brag about at cocktail parties, or tell yourself at least at night, hey, I did good today because I did this? What's that one thing? I'd love to hear that from each of you, including you, Jen. Do you want to go first, Jen?
I know, I heard that it sounded like a marble drop or something. It was or a mic drop, I guess it was. Yeah. So, it didn't involve rewards-based crowdfunding, but it did involve community capital. So in 2007, our community decided that local food co-op was what we wanted to do in our community. We felt like it was really going to, move us forward in terms of a local food system, and also just, in terms of food access. So we were lucky enough to have the right people at the right time, and our city supported our efforts. And so we now have a downtown-based food co-op that went from like, you know, 50 employees to 150 employees. I think we're up to like, oh gosh, $19 million. I'm probably getting that totally wrong because I don't work for them anymore, but just the impacts we're having are really huge. And it was the only business I've ever been a part of that actually, gave everyday investors a chance to give money and then get that back after a certain amount of years. So that was a great experience.
That's a great example. That's a great example. Maybe we should just go in order. Kathleen, what was your turn? What are you proud of? You've done so much.
Yeah, if I make it hyper local, I was on Instagram one day and I saw this post about someone who wanted to start a cafe in my neighborhood, which had no place, no third space, no gathering place. And I reached out by message and they said something about crowdfunding. And I was like, please don't crowdfund without me. Like, not in the neighborhood. And I didn't know what they would say. They came back. They were so excited. It's two moms who met at a turkey trot at the local elementary school and said, I want to create a place that's walkable, bikeable, where our community can gather. And so we worked with them. They got some traditional financing and they had to replace their HVAC unexpectedly. And so they launched the crowdfunding campaign. The community came through. But the proudest part is they did a soft launch and there was a 2-hour line out the door for their soft launch from the community. And when people got to the cash register, they said, thank you. And they're like, but you just waited for like 2 hours. And they're like, no, thank you for being here and for doing this. And they've been thriving. They do all sorts of programming, book clubs, and they've become a space for the community to really get to know one another. So, for me, the pride of that, this is right in my backyard and I can walk into that coffee shop and see the impact of that community capital in action.
That's a great example. What a great example. Danielle, what about you?
Yes, one of the things I'm very proud of is helping women launch business and understand financial statement, understand that they have the power to create sources of income. They don't have to be restricted to a 9 to 5. So it always a blessing when I see those women take step of faith and courage and get started launching businesses, impacting the community, making a difference. So it really it really makes me proud to see women stand up for themselves and walking in their identity and their purpose. Yes.
Chandra?
Oh, sorry, I might have frozen up a little bit. Yeah, so one of the things that we're really proud of is, it's going to seem simple, but the word anchorship is sort of a word that we coined and we try to use readily within our verbiage, because we talk so much about gentrification and businesses being displaced. But when you're able to create a fund and you're able to keep these businesses where they are in the communities that they have essentially built, you're anchoring them in the community, right? And so that's my fun party trick. And it also has people asking tons of questions. So that's nice. And it just means that the people who are building the culture around us are anchored in their community to build it. So.
Yeah, great. John, what about you?
Okay, what I'm really proud of is that our fund offering, which is just 14 months old, we've acquired 23 properties, had 6 exits, all at triple-digit returns, and we bought everything at under 30 cents on the dollar. So most importantly, we've had 2 profit distributions in our first, one in the first year, and now in this year in March, and also in July, we had distribution to our investors of profit. So that's the most important thing I'm very proud of.
Somebody's got a very happy computer. I don't know who that is. But listen, thank you so much, everybody. Jen, great job leading the discussion here. Kathleen, thank you so much. Danielle, we really appreciate you. We appreciate your sponsorship. Chandra, yours too. And John, yours too. Wow, you've got a triple play here of sponsors supporting us here in this work. I can't thank you enough. We're really truly grateful for all that you're doing, all of you in the communities, to make this a better world that we're all living in, and focusing right at home, starting in building stronger communities. So thank you very, very, very much.
Thank you for having us, David.
Thank you.
It's been a pleasure.
All righty. Now, as we move on, I want to. We'll be taking a short break here, but when we come back, we have, oh my gosh, some of the highlights of the day are coming up, right? So we have our live pitch coming up in about an hour. Oh my gosh, great companies pitching. We've got fantastic judges that are actual active professional investors who will be quizzing them. I mean, this really is, the parallels to Shark Tank are intentional. These people are for real. But here's the difference between what we've got coming up and what, Shark Tank. On Shark Tank, you get to watch. Great. You're entertained. Here, you get to invest too. So we've got that coming up. We've got Kenneth Barrios coming up. He's going to speak. We've got a tremendous panel of actual angel investors talking about the lessons that you can learn from experienced angels who can give you insights into becoming a better investor for the kinds of deals we're doing here and talking about. So we got Karen Rand's participating that among others. She'll be leading that discussion. This is going to be so great. Stick around. I want to again. I know I've said this before. Maybe you're new in the room, but I want to emphasize we could not do this work without the support of our sponsors. We couldn't do the conference. We couldn't do any of our work. This is a vital fundraising effort for us. This event helps fund our work for the year, and we're working on a shoestring here. Let me be clear. Our laces are tied up tight, and but this event really helps us, and I'm so grateful for our sponsors. I want to encourage you to pay attention to our sponsors, to look at how you can support them. Our Max Impact sponsor is an affordable housing company that's raising under Reg CF right now. Rancho Affordable Living is their project that you can back right now under Reg CF. I encourage you to take a serious look at that. They're promising good returns, and they've got a deep experience in doing affordable housing, and 100% of their housing, not a small portion, not a majority, 100% is genuine affordable housing. Check it out, and pay attention to all of our great sponsors who support our work and are doing the kinds of things you love. So stick around.
You're watching SuperCrowd25, the biggest event in impact crowdfunding. Over 2 days, top experts, investors, and mission-driven founders are sharing how to raise capital, discover profitable investment opportunities, and change the world. Stick around. You'll hear stories, strategies, and insights you won't find anywhere else. And if you want to go deeper, join our VIP community for just $25. Get backstage access, exclusive networking, speaker handouts, and a special VIP-only webinar. SuperCrowd25, crowdfunding the future. Impact starts here.
The property was dilapidated. It was horrible. It was code violations, drugs, crime, rundown RV trailers, no parking lot, no lights at night, just nothing. Our main focus is second chance housing. A lot of affordable housing households are led by single mothers. Our portfolio is 100% affordable. So our mandate is to be 20 to 30% below market rent. I'm personally $180,000 invested. We're only one of 2 companies globally to have a published social impact report for affordable housing on a Morningstar platform.
What's the faster way to build wealth? a traditional savings account at 0.38%, or worthy property bonds earning nearly 20 times more. Earn a fixed 7% APY starting with just $10. Access your money anytime with no fees, all backed by real estate. Visit worthypropertybonds.com today.
The African diaspora is one of the biggest investors in the continent, but they are looking for a structured, transparent way of supporting this business. This is not donation. This is investment for return, including impact, and join our movement community. Thank you.
Join the CFPA for the Regulated Investment Crowdfunding Summit on October 21st and 22nd.
Register at ricsummit.org.
Rural property taxes fund vital services.
Only when they're paid.
Invest in real impact.
Visit invest.coretaxdeeds.com today. Behind today's biggest crowdfunding raises,
the leading CPA firm for Reg CF, Reg A, and Reg D compliance.
Trusted.
Experienced.
Set apart.
ISPD strengthens health for families across Haiti.
Donate today. Make an impact.
Hello, everyone. I'm Gene Massey with Media Shares, and I'm very excited to be speaking at SuperCrowd25.
Save the date for Super Green Live, the global event on sustainability and green innovation, January 22nd through 24th, 2026. We extend our deep appreciation to our supporting sponsors and co-hosts, including Potomac Growth, Energy Capital Funding Group, Move the Needle with Rob Kaplan, Ridgecrest Herbal, Stakeholder Enterprise, Renaissance League, the Global Equity Crowdfunding Alliance, the National Coalition for Community Capital, Green to Gold, and King's Crowd.
Enter to win one of 2 FireMax 11 tablets. Videos, books, and games come to life. Scan the QR code now.
Rules apply.
Hey folks, I am so excited to share with you some, great speakers coming up. Next on the docket is Kenneth Barrios, and he is an amazing guy who has some really powerful leadership insights for us. And so, regardless of your role, there'll be opportunities for you to take some insights away from this presentation. I invite you to stick around, take notes, pay attention. But I am really excited to bring you Kenneth Barrios now. Kenneth, welcome to the show. Welcome to SuperCrowd25.
Oh, thank you so much. Let me flip this over. There we go.
There we go. Now you got her done.
Now I'm very excited to be here.
I think you said you don't have slides. Is that right?
That is correct. No slides.
Okay.
No slides required today.
All right. Take it away, my friend.
Awesome. Thank you so much for having me. Executives, business, and community leaders struggle with making those fast, confident, and high-stake decisions because they are afraid of making a catastrophic call. Imagine, if you will, a time in the future where your decisions came quickly and confidently because you understood a process and you were able to trust yourself to make that call. Here's the promise. If you cast out preconceived assumptions about how the world works and allow yourself to see things just a little bit differently, you will have a new set of tools to make those tough calls. To do this, we're going to throw away some old ideas and discover some new ones. And when you start to feel that cognitive dissonance, I challenge you to have an open mind. Over the years, I've had 3 breakthroughs that I call the value velocity effect. 1, we never make logical decisions. 2, we should aim to make the least wrong, not the most right decision. And 3, we need to cultivate probabilistic thinking instead of deterministic thinking. Let us begin. To make room for the new, we need to throw something out. And the first idea we're going to throw away is that we make logical decisions. This is a huge fallacy made to make us feel in control of the uncontrollable. Many psychologists have argued that human decision making is primarily driven by emotion, with logic serving to rationalize those choices after the fact. Basically, we humans don't actually use logic to make those decisions, we use our feelings. And when we say that we make an emotional decision, we're saying that we feel good or we feel bad about a decision. The emotional spectrum is only binary. According to Dr. Shalom Schwartz, a social psychologist best known for his theory of basic human values, which identifies 10 universal values across all cultures, would say that feeling good or feeling bad is determined if the decision is aligned with or aligned against one of those primary universal values. Ever made a decision and then immediately regretted it, even though nothing new has happened and there's no real new information to kind of judge that from? The information you received was how aligned that course of action was to your primary value. When we take action in line with our values, we feel confident. When we don't, we are in doubt. Understanding your Schwartz values provides you with a compass you need to kind of guide your future decisions. The problem most of us have is that we've never articulated our universal value, mostly because we didn't even know existed. And this is why much of our feelings around our decisions are a mystery. So let's see if we can get some clarity on that today. Here are the 10 Schwartz values. I want you to think about which one resonates most with you, as it's probably the one that is driving your decisions. 1. Self-direction, which emphasizes independent thought and action. 2. Stimulation, the pursuit of excitement and novelty. 3. Hedonism, the desire for pleasure and personal gratification. 4. Achievement, the drive for personal success and competence. 5. Power, which involves seeking social status and power over resources and people. 6. Security, which is reflected the need for safety and stability. 7. Conformity, the restraint of behaviors that might upset others or go against social norms. 8. Tradition, respect for and commitment to cultural and religious customs. 9. Benevolence, concern for the welfare of a close circle or group of people. And then universalism, which promotes understanding and tolerance and the well-being of all people in the planet. Schwartz's framework has become foundational to understanding how deeply held values shape attitudes, decisions, and social behavior. So now let's shift to the second breakthrough. Again, to make room to understand why we should aim to be least wrong, we need to throw out the idea that we can be right. By aiming to be least wrong, we add velocity to our decisions. To have velocity in decision making means that we need to have the courage first to be wrong, the courage to make a decision without the complete picture, courage to make another decision as fast as possible to course correct. The velocity is the speed at which we can complete a decision cycle, how fast we can observe the problem, orient ourselves to the problem, and then make another decision to gather more information for the next observation. This process will repeat until we obtain the objective. And it's not about a one and done. It's about being less wrong with each iteration. Dr. Daniel Kahneman is a Nobel Prize winning psychologist and the author of Thinking, Fast and Slow. talks about two modes of thinking we do. Most of the time, we use our System 1 thinking, using general rules of thumb, heuristics, and of course, our feelings to make those daily decisions. System 1 works best when we understand our values and how they align to the options of our decisions. This frees up the energy to course correct and make as many least wrong decisions as possible to achieve the goal. System 2 thinking is slower and deliberate. It forces us to recruit more brain power to solve the problem. We add complexity to the question when using System 1, and we shift from a deterministic thinking into probabilistic thinking. This leads us to our final breakthrough. Again, to make space, we need to throw something out. And for this to really be understood, we need to throw out deterministic thinking altogether. In the roughest sense, deterministic thinking is all about all or nothing to a fixed set of options. That could be really summed up as when we have all the options, 100% of the pie. Like, for instance, we can turn left or we can turn right. And because there are two options, we assign 50% probability of either one of those two being the right answer, right? 100% of the pie. Traditionally, while this seems easier, it's a trap. You see, it forces us to see the possibilities of the world in a very, very limited fashion. The leaders of tomorrow, we really need to be better at this. Probabilistic thinking, on the other hand, says that there are near infinite possibilities of options, and then each option is assigned an independent probability of success. To find the best option from the infinite, we need to build a map of what is known, what we wish we knew, and the assumptions that we're making. Let's call these high points of the terrain of a cognitive map. Like a creek flowing downstream, bending and twisting around obstacles, different options and courses of actions will be to emerge. And then we will grind through each course of action using rubrics and frameworks to ensure consistency. And what we're going to do is that we assign possibility of success, level of gain, and level of risk to each option. What I found to be really great about this process is that it provides us with options that we have never considered before. And it also releases us from preconceived results. This process provides awareness of why we're going with one course of action versus another, and it reveals to the decision maker their tolerance for risk, as well as their ability to be open to different problem solutions. Bottom line, we are always making decisions based on our values, and we should be seeking alignment. We should be aiming to make the least wrong decisions as fast and frequent as possible to be adaptable. And we should use probabilistic thinking to gain decision awareness. Truth is, it's impossible to tell the future. I know. I've been trying to do it for 20 plus years as an intelligence analyst, and I can promise you the best I got is to give you the probability of some possibilities. By understanding the value velocity effect, we can start to make those fast, confident, high stake decisions because we understand the process and we can trust ourselves to make that call. There's my talk for today. I hope that you realize, like, through this particular process, that when you reshape how you see the world, you then create for yourself some more options to accomplish better things.
Kenneth, that's such great insights. You know, KB, I think all of us struggle with making decisions. Holy cow do we struggle? And I appreciate a little clarity on some decision-making guidance that can help us do that better. And that's particularly important as investors, as we're looking at opportunities to invest in crowdfund opportunities. We've got to be a little bit time efficient when we're talking about making investments of $10, $100, or $1,000. We can't spend 2 weeks and 40 hours on a decision, but they're vital because the cumulative effect of making lots of those decisions can be weighty. And so we can't take them glibly. So this is an important discussion. So thank you very, very much for leading that. I want to encourage you to hop over to the backstage area where there's a good group, and I know there's a good discussion going on with some of the folks from the last panel discussion. They're in there chatting it up. So I encourage you to pop over there and participate in that. I also want to encourage those of you who are watching, if you've got questions for our panelists, there's no better way than to be a VIP, pop into that backstage room and try to get all our speakers to pop in there with you and get some questions answered one-on-one, kind of face-to-face, almost like you grabbed them in the hallway after they spoke at a conference or something. So please, please, please take advantage of this opportunity. Upgrade. If you're not a VIP yet, visit 4sc.fund/25, scan that QR code, and really let this experience of SuperCrowd not just be information. Let it become a life-changing experience where you meet and connect with people who can help you, whatever help you may need, whether you need money as an investment, advice, whatever it is. There are people in this community who can provide it, and there are services you can provide. I trust that's often the case. So take advantage of the network opportunity. You never know what might happen. Okay, Kenneth, thank you so much.
Thank you so much. I'm hopping over now.
All righty. Well, listen, I know a lot of you have been waiting for this next panel discussion, because if you are an entrepreneur trying to raise capital, trying to get into the mind of an investor, sometimes tricky. Well, we've got that group coming up, and add to that, right? If you're an investor, you're trying to figure out, how do I make savvy decisions? How do I complete due diligence in a way that works? It's time efficient. Well, Karen Rands is going to lead. She's going to moderate the panel discussion now on this really important topic about angel investing. And so I want to bring her now forward. There she is. Karen, thank you so much for joining with us. We're just thrilled to have you here to lead this discussion. So why don't I turn the time over to you? Karen, let me just point out, is an author and a speaker, but she's been doing angel investing, I think, for, well, I don't want to say the number of years, but it's a number of them. It's an impressive number. So she started when she was 14. This is going to be a great discussion. Karen, take it away.
Are the rest of my panelists here? Oh, there you go. There's Craig. There's Yvonne. And there's Carl. Yay!
Yay! Woohoo!
All right. So, okay. Thank you, everybody, for tuning in. We're going to get through this pretty quick. First of all, I just want to set the stage. Investing in private companies is both thrilling and risky. Unlike public markets where information is standardized and regulated disclosures are routine, private markets, whether the information, I'm sorry, my phone, I thought I had it turned it off, but not. You plan the best way that you can. Sorry about that. Okay, let's see, where was I? Whether through angel networks or equity crowd portals, they require investors to be more discerning. Too often, investors fall victim to wrong assumptions, believing that SEC filing equals validation or the social proof others have invested, so it must be good, is the same as due diligence. But here's the truth. Due diligence varies dramatically. Angel groups set a narrow gauntlet for founders, subjecting them to deep scrutiny, oftentimes because they're further along. Crowdfunding issuers, or on the other hand, can sometimes spin their way into attracting emotional capital. Storytelling often outweighs their fundamentals. The big risk is that often startups, particularly companies raising capital on Reg CF platforms, don't know what they don't know, and that is real. And the reality is that platforms don't screen. They file paperwork and help the companies express their opportunity with the videos and content they put on the portal. And that's the conversation we're having today. Best practices to improve your odds of a return while avoiding the traps that leave too many investors disappointed. And joining me are experts across the spectrum of raising capital, investing through regulation, equity, crowdfunding. So Yvonne DeMonk, recovering Wall Street money guy, now with a passion to help Main Street businesses and innovative companies get to Wall Street with investment crowdfunding, is a passionate industry promoter and educator with C-Clear. It's a sub of Woody Neese, who you saw earlier today. Hopefully you got to see his presentation from Crowdfund Capital Advisors, and he is building the Reg CF Rocket, his new brand as well.
Nice.
And then is that good for you, Yvonne? Are you
Totally on par. Yes, there is much more, but we're going to keep it at that for now. Yeah.
That's right. We're going to get into more. And then we have Carl Dakin, who is a recovering lawyer to tech entrepreneurs turned crowdfund strategist, helping entrepreneurs navigate the world of equity crowdfunding, the types of offerings, the strategies, and the executions of campaigns at Capital, right? Right, Carl? Okay. So then we have Craig Jonas. He spent the early part of his career deep into the sports industry as a very successful tech entrepreneur. And as a coach, he had his aha moment and wanted to use his time and knowledge and resources to have a greater impact, and created Copiece PBC, a revolutionary impact holding company dedicated to generating measurable social and environmental impact alongside the financial returns. Good. That's good for you, Craig. We're going to get into more
Good
of it here.
Good stuff, Karen. Yeah. Thank you.
All right. Terrific. Welcome to all of the panelists. And for the record, I'm Karen Rands. Devin said a few things about me, but I'm a leader of the Compassionate Capitalist movement with a vision to bring, get this, big bodacious goal, 350,000 more investors into the market.
Come on.
To invest in entrepreneurs, basically tripling what it is today with what ACA reports on 350, that's the Angel Capital Association, with the accredited investors and groups, and then what you see as sort of the aggregate of the Reg CF world.
Karen, that's not that audacious. That seems reasonable.
Yeah. Well, I'm going to do it with the help of this community,
pedestrian,
right? Because
pedestrian.
yeah. And that's because, I have a podcast, The Compassionate Capitalist Show. I have 2 books, Inside Secrets to Angel Investing, the one that's just coming out, Inside Secrets to Crowdfund Investing. Follow Jane's journey, see how the next generation builds wealth with purpose and passion and profit. And my digital learning platform for beginners and advanced education for angel and crowdfunding investors, the Compassionate Academy. Join the movement and let's get this together. So you can click on all the bios and please see us in the VIP, particularly if you're VIP. We got a special session going on. And before we get into some of the questions, I hear a squeak sound. I'm trying to figure out where that's coming from. Do y'all hear that too?
Maybe a little bit faint in the background.
No, a little bit.
Okay.
Just me. Okay. Okay. I promise I'm maybe it is my mic.
Or maybe we can all just mute ourselves when we don't speak, right? So that can always help.
No.
And another tip that's helpful is to just lower your volume. If you're not using a headset like Yvonne, lowering the volume will reduce that echo.
Okay, maybe that's better. All right, so very good. Okay, great. So let's get into some of these questions, right? So I'm going to just put this out. Y'all play nice and take turns on this, right? And we'll come into one specific for you, each of you. But many new investors think an SEC Form C or D filing equals approval, like the government has blessed the deal. Why is this a dangerous assumption, and what should investors really be looking for?
Who wants to go first? Carl, you go ahead.
Yes, you
jump in, Carl.
Go ahead. The reason why it's dangerous because it's completely untrue. The government has not blessed anything. What they have done is given you permission to go out and pitch for funding. But at this point, this level of raising capital, they do a review to make sure you filled out all the forms, but they don't verify that the information within the form is correct. They actually don't do necessarily a great job of verifying the information is complete within the form. Whereas if you're traded on a public exchange, it has to go through what's called a merit review. And there's all kinds of people taking a look at it to verify that it's all correct and where it should be. So basically, you're on your own. As an angel investor, as any form of investor, looking at crowdfunding or any other type of former private 506 offering, it's on you. Figure it out, look at it, and see what's there. And if you don't know, you don't like the answers, or it's incomplete, you have an opportunity to ask the management of the company questions. And you should take advantage of that for anything you don't understand, anything you want more information on, because it's a very good opportunity to learn how good the management fields the questions, how well they're competent in their own business, and it'll guide you quite a bit in making your decision.
I can't hear you, Karen. Sorry.
Carl, I think the it's on you. That theme is important throughout. I think it's people come into the crowdfunding world and think it's kind of magic. Hey, you open it up and people are going to come, and it's just not true. There's a fallacy as well on the legal side as well as on the marketing side. It's on you to make sure your campaign is seen into the world, which is a challenge.
Yep. Karen, I can't hear you.
There we go. One of the things to note as well is that, it all part of the due diligence of figuring this out is how much is an investor investing. If you're only investing $100, a few $100, not $1,000, $2,000, $10,000, then it is probably, I think that is my mute. Then it probably is something that you don't need to necessarily do all that. You could do it based on the emotion and you like the deal because you're just sprinkling a little money around. It really becomes important to understand this when you have when you're putting larger dollars in, so because you have more at risk. Okay, so on to our second question. Angel-backed startups go through a gauntlet of questions as they apply, and after they present, so it's the screening process to begin, and then the due diligence after they present. But many crowdfunding issuers never face the same scrutiny. How does that change the risk profile for investors? And this kind of goes to what I just said: the money versus time for the investment. But this might be a good opportunity for you, Yvonne, to talk about the way you and Woody are helping investors narrow down how they spend their time looking at deals.
Yeah, sure. And thanks for that question. I think you made it very clear the difference between, if you deploy larger amounts of money, then obviously you're going to be able to spend some more time and money to do a, more serious due diligence. But if you're only going to, spend a few hundred, even just a few $1,000s in the space, you're not going to spend time nor money to do all these things. So how do you go about still doing the basics of what you should be doing? And so that's what, again, me and the team at Crowdfund Capital Advisors, together with C-Clear in our database, we've produced a report. It's a weekly report. It's called the Capital Pulse Ratings List. And it's basically a combination of an algorithm that we've developed to come up with a selection of what we call the best of the best 15 companies every week that are out there open for investment. And you got to understand, right, in this industry, on any given day, you can invest in a couple of hundred open deals, right? A deal typically takes 3 to 4 months before it gets done. So every single day you can, up to 500 different deals you can invest as an investor. So I have $10,000 to invest. Where am I going to go? I don't know. I have like 500 companies to choose from. So what you do with this list, I have only 15 names now every week. The only thing I do, I only look at these 15 names. Why? Because I know it's a curated list that has been going through a due diligence, an automated, algorithmically driven, but based on past performance that C-Clear comes up and we publish. And so basically it's a shortcut for anybody who's like, if you want to deploy $5,000 in a couple of deals, get that list, look at the 15 names, and this is where you start your due diligence. And you know that these 15 names out of the 500 that are out there are really the only ones at this moment you care about, or are sort of the ones that are, based on past performance, we have determined as those companies that are most likely to be successful in future funding rounds, in getting their targets done. And so that's I think very important. And it's very easy, and it's dumbs down the whole process. And then you just pick 1, 2, 3 companies that really look interesting, and then you can go a little bit deeper. And then I'll finish with my second step, which is again something that I do. I've developed my own custom GPT due diligence. So when I have like the 2 or 3 companies, I say, okay, these 3, I want to do some more work. I take these 3 companies and I put them in my RecCF Rocket Custom GPT. And basically, there's a button there that says, give me a deep dive on this company. So I just put in the offering page of the company, the website page of the company, put it in there, give the thing, 20, 30, 40 seconds to think. And you get like the perfect 90% done for you due diligence on that company with everything you need to know. And then from there, I take my decision. And, I want to invest $500, $1,000, $5,000. This is how I roll. And this is actually available for everybody. And I think it's a perfect shortcut for, anybody to quickly deploy capital in the space.
Yvonne, I wish I had that before I invested in about 50
I know.
CF offerings so far. Just kind of like play along. So yeah, I look forward to learning more.
Karen, we don't hear you.
So, Craig, you operate sort of a fund, right? So you do a spectrum of stage of investors and stage of investment. So,
Yeah.
address this as well as any tools that you use or best practices that you do for due diligence, please.
Yeah, very very interesting, and appreciate being part of this discussion. We've been doing this for a little while, and we've taken advantage of very varied strategies, including Reg CF, and raised about 600,000 on WeFunder, which was work. It was hard. I think one of the things we learned is that to do things right, you have to take it to another level of due diligence. And on our side, we're impact investors. We have decided to move up the food chain a little bit, so that we're finding companies that are doing the work and showing the strong returns, so that we know that they're running their businesses well, and that we can support those businesses and have the impact that we're seeking. And we say that margin magnifies mission. So that it's important for companies to have the wherewithal to be able to do the things that we're seeking for them to do. At Copiece, I think for us there was some confusion in the marketplace about Copiece. We were like, Copiece is an intriguing name. People are like, oh, you must be doing good things. Are you for profit, nonprofit? And for us, we are a for-profit entity. So we wanted to make sure people understood that. So we rebranded ourselves from Copiece to Copiece Capital, which we still have the embedded impact, and now the capital side speaks to the fact that we're seeking a strong return, because that's how the impact gets magnified and amplified. So it's been quite a journey, honestly, for us at Copiece. We've used a couple different strategies, and we are excited about working with SVX, who's part of this crowdfunding world, and actually just launched a new crowdfunding campaign on SVX. So this is a community that's important to us.
Go ahead, Carl. Go ahead, Carl. You're trying not to skunk over here.
I just want to put out a little bit of a word of caution with regard to use of large language models, ChatGPT, and reviewing options. I'm right now working with setting up a crowdfunding campaign for the Renaissance League, which is one of the sponsors of this event. And we had some very early people review our current seed funding round with ChatGPT, and the reviews were like 0 on a scale of 10. And we went back and looked at all the comments, and we basically said, well, why is this so bad? They said, well, you're not conforming to all the standards within this industry, which was the sports industry. And so we went back and asked Chad again, says, well, if all the standards are failing financially, is it okay to be disruptive and do something different? And immediately Chad comes back and says, well, yeah, past indication is not necessarily, the picture of
That's
the
great.
future. And if you're that much difference for good reasons, then okay, forget everything we said before.
Yeah.
Hey, Carl,
That's a
I
fair
just
warning. That's
yeah,
good.
I just want to add to that. You're right about the Chat GPT. You got to be careful with that. The problem is that most people have no clue how to prompt this thing, right? And the output is, completely equal to the quality of your input, right? And so when you have a custom GPT, which I have, obviously it's structured in a way that it's gonna dig deeper in a way that you and I would do it. It's also fed with all the information that we have within, crowdfund capital advisors and see clear about all the past offerings. So
Yeah.
there's a lot of intelligence there that gives you probably a very different output than the one you would just in your normal, which not most people do, right? They don't use a
Carl,
custom GPT. Yeah.
Carl, we did ChatGPT for Copies Capital, and it was 10 out of 10. So it's
Ugh.
it's just a bit.
There you go.
No, I'm
And you know how to prompt it. So I'm going to throw in about human intelligence.
Yes.
And so this is what sort of the sniff tests I do is I look at two things when it comes to a Reg CF company. Because the one I do for angel level, larger companies doing a series A, not necessarily pre-seed, but Reg CF is you look at like how much have they raised, you look at what their structure of their raises, what are their kind of like their things that they're offering as their incentives in that, if it's a straight equity, or one of the things that Carl has really championed is adding this value to goes into that investor kind of a thing. They might get something in addition to their equity that makes them feel like why not, right? But you look at it, and if they got a lot of investors for a few $100,000 and you do the math on it, you may not be able to see what, if you're on the outside looking in, how much it is, but it can be an indicator that they have a lot of really small investors. And so it's not necessarily a good indicator that if they've raised a few $100,000 when they have, 500 investors, or, 1,000 investors, or 2,000 investors, or something like that, because it's an emotional sell. And in order, I think a real key element of a company's ability to go all the way to an exit is their ability to know that they have their actual financial expectations based on true business model and customer discovery, big key words that we always throw around, but that they have the ability to go because they know that they're going to need to raise more than whatever they're raising on Reg CF. Right? You can't name. I challenge anybody to name a big company that they know of that went public that did it on $3 million. That you have to be able to raise multiple rounds. And so being able to look at their Form C and how they're structured and what their authorization is, and then their business model, their financials, do they understand that stuff? Those are real simple sort of things that you can look at. And if you like the problem they're solving, what I teach them course is then don't fit those elements, or something that's about weird about it, or they don't really respond to your questions, then go find another company that's solving the problem in a different way, because odds are there are other companies out there solving the problem in different ways. Entrepreneurs are very innovative. So
Yeah.
that's good for you guys. I'm going to go to the next question on capital strategy. A company says that they're going to be $100 million in 5 years after raising just $2 million. Kind of talks about what I just said. What red flags should investors look for when evaluating whether the capital strategy matches reality? And this goes to underestimating their capital needs. But how would all three of you have experience advising companies on raising capital. So what do you try to make sure they have when it comes to understanding their market, so they have an appreciation of what they're getting into when they try to scale?
Maybe I'll take then quickly first. One of the things that, and it's a very important question, obviously, one of the things that we've also developed at CClear is, again, together with Woody and Crowdfund Capital Advisors, is a report. It's called an Offering Insights report, and it's all about competitive benchmarking, right? So I come also from 3 years working at a financial services company that was specialized in competitive benchmarking for large banks. And what we do here with this product for issuers, so people who are trying to raise capital, is we make your report and we're going to benchmark everything you have based on a questionnaire and compare it to everything else that happened before with similar companies, with companies that have a similar profile. And then you're going to get a report, and it's about 10 or 12 pages, but you'll immediately see where the outliers are. And so, for instance, if there's going to be a discrepancy between what the revenue profile, the projection profile is with the capital that's being raised, that's going to be a red flag in the report. And it's going to say, look, these numbers don't make any sense because similar companies of the last 9 years that have raised capital successfully, they have these kind of average metrics, and you're so far out of the line here, so it doesn't match up. So this is one of the things that I think is extremely valuable and addresses your concern there, Karen, where there is no sense between what they're trying to raise and what the outlook is for the business in and of itself.
Yeah, good question. Yeah, well answered, Yvonne. For us, it's about operational expertise and the team. And luckily, we were a little shy about our no hair, gray hair because we want to be cool with the young people. And then we realized we had done some things that we could bring in that team to help us. So we've got a couple people on our team, Andy Eckert, Nikita Norman, who've just done this, and for them to be able to see these companies and understand what needs to be done to take it to the next level, it's very unlikely if they've raised 2 million and they're going to be evaluated at 100 million that's true. But there might be a path if the operational efficiency and the team is intact.
Yeah, and following that is I typically start with the end in mind. If I'm advising a company, I want to know how much money they're going to raise over time before they're successful. And then we work our ways backwards because I don't want to pay more for money than I need to as I hit different milestones going up. And quite often, when you look at an offering for whether it's a private offering or 506c or crowdfunding, there's no reference capital strategy. It's like a one and done type of a pitch. And that to me is a red flag because I'm going, well, if you have all your money and you're done and gone, good for you. But it's not been my experience that most companies work that way. So I want to see a reference that, yes, this is around this, but we're anticipating round 2 or round 3 or round 4. This may dilute our equity position. It may negatively impact us. And more importantly, if you can't raise the next round, am I dead in this round? And I shouldn't go into it. So take a long view when you're looking at the offering, and take a long view when you're doing your capital strategy.
Nice.
Yeah, and maybe just also saying in the rating, for instance, in our Capital Pulse ratings, in the different metrics, it's the velocity of money is one of the metrics as well, and how fast do they raise during and is it early or late? What is the size of the checks? But I think what is important there is that you see increasingly, as we're now 9 years into after the first offering, you see many companies that have many repeat offerings at higher valuations. We see now companies that come to round 8, round 9, round 10. And so again, the more they raise at higher valuation, the more that potentially can be a metric of success, right? They raise money, we're going to do this. Okay, we delivered. Now we're going to raise more because we have a new target to go after. And people say, hey, you did well on the last one. You did what you said you were going to do. So I trust you guys with this new round to do that as well. So I'm going to give you more money. I'm going to allocate you more. So that is a metric, a part of the metric of success that, comes into play here as well.
I want to add to that, and I just want to confirm with Devin. So the clock, the clock that's running is how much time we have been on air. So we've got another 30 minutes. Is that right? I didn't think so.
I don't think so.
I think we have 13 minutes. That is
13.
correct. You have 11 minutes. 11 minutes.
I have 11 minutes
In
left.
13
Thank you,
minutes,
Devin.
we're going to start
Thank
the
you,
live
Devin.
pitch. We're going to have 2 minutes for transition. Goodbye.
Okay.
Make it
All
quick.
right. So to your point, Yvonne, the unicorns.
Yeah.
Okay. So I happen to have a personal pet peeve with unicorns. Okay, and for those that don't really know what unicorns are, I forget which VC coined the term many years ago. It's because they didn't believe they would ever see a company with $1 billion valuation, and what they call a startup, right? Or with $1 billion, so it'd be like seeing a unicorn. Well, the reality is that when you start getting into big giant VC plays, and the method of oftentimes how value is set when independent of what the company is doing, it's every time there's more money put in, it gets added to the valuation. And so you can have a company, and we've seen many of these big tech companies that have huge valuations and zero profit, which ends up translating to a nosedive after they go public. They can
Yeah.
go public with notoriety, and they can get an investment banker on there to back them, and create a market for them. And then hopefully the investors aren't locked up because, a week later their stock is down in the dumps, and those investors pray that they can go back up to what they actually, were hoping it would be worth, right? And so
Yeah.
be careful if a company's main value is established because of additional rounds of capital, and not because they are actually creating revenue, creating value in the market. They may be bringing out product, they may be growing a market share, but if they have one of the things that a lot of times entrepreneurs don't understand, I'm dealing with a company with this right now, when they don't understand how to calculate their cost of sales and their actual cost of goods of generating the revenue, and it gets all muddied up in there, and it's not in this piece. And so they think they're making a lot of profit and they have a margin, but in reality, they're not as much. So just more on top of that doesn't mean more profit if they don't have a handle on their soft dollar expenses as well. What would y'all
Well
like to
said.
add to that?
Well said, Karen. Yeah, we say zebras fix what unicorns break. So that we're looking for solid companies that are actually creating the impact that we seek and having a strong return. But I think your that is well said.
Anybody else want to add to that, or we move to the next little topic?
With little time left, so let's move on to the next topic here.
Okay, let's get into because some of these, we our conversations go, and we've been covering some of this stuff right already. So, Carl, you've guided founders through crowdfunding processes, and you also invest. In your view, what signals tell you a crowdfunding deal has been oversold? Emotionally, they're drinking their own Kool-Aid versus having strong fundamentals, so they aren't relying on just buying interest through Facebook ads and selling the deal on emotion rather than objective criteria. Any thoughts you want to add on that?
Yeah, it's the absence of objective information. As Yvonne was pointing out, that if you're dealing with a company that's 5 years old, they've been around for a while. If you're dealing with people who have been running companies for 20, 30, 40 years, they've been around for a while. If the product is something that's been sold before, you've got track records everywhere. You've got all kinds of ways to triangulate on what it's doing. But if you have two kids out of college with something that's an invention they can't pronounce, and they've never sold one of these, you might start suspecting that maybe they don't know what they're doing, and maybe they don't know where they're going. That isn't to say they can't get there, that it isn't possible. But if you're doing your statistical analysis and you're betting on, basically the more solid investments, this isn't going to meet that. It's an outlier. Now, outliers may make higher profits. They may have greater risk as a consequence of that. So you're making your investment decisions, you have to figure out, what part of your portfolio do you want to go at high risk, medium risk, or no risk? And then that's up to you. And if you want to bet everything on high risk, I've got some deals to talk to you about.
So, Carl, that's unless you're an AI researcher that is highly sought after, in which case you can raise $500 million
Right, right.
in no time without any products, without even having a set of first words. Just say, "I'm going to start a fund." So anyway, but that's not our space, I
But
guess.
yeah, but then we
I
get
grew up.
into the bubble of AI, which we are, quickly blowing a lot of hot air into the AI bubble.
Yeah,
Yes,
I
indeed.
grew up in the dot-com era, actually before that. I'm much, much older than that. But in the dot-com, it was one guy in a bar is worth $1 million, two guys, $2 million, two guys with a napkin, $3 million of funding. And if that's all the due diligence you did, then so be it.
Yeah.
I was on Wall
Okay.
Street in these times. Great fun, Carl. Great fun.
So, Yvonne, you often focus on numbers. You share a lot of that with us, and the predictive models are a great aspect of the process. What are some key criteria that predict success, and what is weighted on place? What kind of weight is placed on the capital raise, getting them to cash flow positive, capital to scale and subsequent rounds, that kind of thing, like we've been talking about in your metrics? Do you have a way of calculating that and applying that?
Yeah, I'm going to try to be quick. I have it all here and I want to be accurate. So the race dynamics is like 30% of the rating. It's not the dollars, it's the velocity and diversity of checks. It's the early slope, conversion rate, investor mix, update cadence. So that goes into that first metric. The second thing is the path to cash flow positive, right? So that's weighted for 45%. So how do dollars translate the dollars raised into months of runway? And we ask if it funds concrete time bound milestones, right? So the burn multiple, CAC payback, all these kind of things go into that metric. That's 45%. And then the last 25% of the weighting is really readiness to scale and attract subsequent rounds, right? So it's the quality of the investor base, valuation, discipline, clean structure, and evidence of repeatable growth respected by follow-on capital. So this is in a nutshell what the system works on. And very important, it's not only AI, it is with human intelligence as well. At the end of the day, when we have all this, the team at CClear and CCA looks at everything and says, look, if there is an outlier, there's something fishy, or there's something that really doesn't hit, then it doesn't go in the selection regardless what the AI says, right? So it's the
Yeah.
perfect, it's what I call, hybrid AI. And I think this is what everybody says we probably will evolve to. Hopefully it's a combination of the best of both worlds.
Yeah. So in the time that we have, I think let's spend a few minutes on sort of the ones we don't talk about a lot in crowdfunding: Reg A Plus and 506C. Okay. So I think Craig, you raised a Reg A Plus round, right? And back earlier on, I think. But I think one of the things that has become clear, like somebody had made a point that, your value goes up each time. So doing a Reg A Plus, sometimes people will do a small amount because they're going to go do the stuff with it and then raise more before they finish their paperwork. I know, and I think Carl has worked on some of that as well. So Craig, start out by addressing your experience
Yeah,
with Reg A Plus.
yeah. So we've used a lot of different strategies. We actually have not used Reg A Plus yet. It was in the plans, and we decided to continue with. We started with a 506B, friends and family. So we were able to raise a little money, recognize the incredible privilege to have people that believe in us and have seen us succeed and some other things, and given us a little bit of cash to get started. And then we went to kind of a parallel Reg CF and 506C. So we were able to continue to raise money in both of those strategies. As we have continued to move along and move up the food chain and some of the things we're investing in, we are using a more traditional approach to create the impact that we're seeking. So we are just launching our kind of our fund two, using more of a more of a traditional approach to invest in growth capital space. So a little bit higher revenues, 2 to 5 million in EBITDA, and in sectors that we know really well. One of the things I think we learned in our first fund from Copiece is that it's hard to be an expert in everything, and it's probably very appropriate to talk about that here in this discussion. And we had a good instinct for it. We have some quite diversified holdings in our first fund, and to do it even better. And I think the data that Yvonne and Carl would lend to this discussion shows that you got to invest in what you know, just like Warren Buffett says. So we're investing in healthcare and sport. We have extraordinary people that are uniquely positioned to be part of that world. So we hi Devin.
Yeah, it looks like we're out of time.
We're getting to that point.
Okay, so Carl,
let me
do you
just-
want to? Because Carl and I had an interesting conversation yesterday about the wild, wild west of 506C. So
Yeah.
I think it would be from a risk perspective. We have just a minute for him to share his insights in that. Devin, I'd like to do that.
Well, very quickly, Reg CF has a $5 million cap on how much you can raise, which is why you roll over into the larger Reg A plus up to 75 million. 506C has no limits, but it also has no gatekeepers anywhere along the path. So you can throw out a 506C offering in about 2 hours, go shop it everywhere. There's no approval required by the government before you start. You do have to file after you've raised some money, but there's no one watching, so to speak. So it reminds me back to the penny stock in Denver, where it gets a little risky when you look at anything that comes across your table.
Always worth asking the question: how are you raising capital? Are you authorized to general solicit? Because a lot of entrepreneurs don't. They just sort of take it for granted that they can these days. So, make sure that they're filing right, and if they're doing it under 506C, that they're going to be able to raise the capital because it costs money. I learned from Carl that they have to file in every state, and every state is different in how they file, and that could end up being pretty costly. The way the old Reg A did with blue sky laws. So
okay, we gotta call time.
Thank you, everybody.
Karen,
Thank you, guys.
so much.
Great panel. Thanks, Karen.
Yvonne, Carl, thank you all. I really appreciate you being here.
Thanks, guys. See you soon. Bye.
Thank you.
See you at
Thank
the
you all.
VIP.
Well, I think that was a really important discussion. I'm really grateful for that. It's just really just a tremendous group of people that we had the opportunity to hear from. And, now we're getting to kind of a highlight of the day. I know a lot of people really look forward to. I look forward to the big moment when we do the live pitch at our SuperCrowd events, and we are at that point now. And so I want to introduce our host today for the live pitch. The NC3 live pitch is Christopher Miller, who is the CEO and board chair of NC3, the National Coalition for Community Capital. And he, his roots in crowdfunding go way back. He's really a pioneer in the space, and has agreed year after year to host the live pitch, the NC3 live pitch at the SuperCrowd events. And so we're thrilled to have him back. Let me bring him onto the stage with our judges, and we'll get started. Let's see here. I got to do this right.
Greetings, Devin. An august panel there. Woo!
Yes. Well, Chris, take it away. I'm going to hide.
All right. That sounds great. Wow. I'm going to go ahead and have each of you just do a 10-second introduction of yourselves, and then we're going to invite the contestants in, which should be a whole bunch of fun. So So Leah, let's start with you, please.
Hi, so I'm Leah Boyer-Gautreau, Senior Investment Associate at KingsCrowd. And what we do with KingsCrowd Capital is that we look at every single deal that is raising online through equity, and we invest in what we believe are the top 1%. Excited to be here today.
Great. And we love King's Crowd and the great work you guys are doing. So go ahead, Paul, you go next.
Yeah, Paul Lovejoy. I am a registered investment advisor and I specialize in crowdsourced investing. And at Stakeholder Enterprise, we make impact accessible and investable.
Awesome. And Paul is an actual investor himself as well. And has got some great stories. You definitely want to read some of the stuff that he's written. So, and Woody, you can wrap it up. And if you don't say enough great stuff about you, just so you know.
Woody Neese, we're principal with Crowdfund Capital Advisors, author of Investimers, and my goal is to bring institutional capital to investment crowdfunding through data.
Fantastic. And the really cool stuff, for those of you who are not aware, is we're really probably sitting in this room mostly because of the work that Woody did 14 years ago, 15 years ago, something like that. Yeah. So Woody and his team did the hard work on Capitol Hill to get the original legislation, the Jobs Act, done in 2012. And in addition to getting to sit in the Rose Garden, really did all the work that led up to that sitting in the Rose Garden. So, and continues to be really engaged, as if you were in the previous session, you heard there about some of the work that you guys continue to do. So great to have you all here, all rock stars, humble me. So thanks a lot. So I don't know how to invite everybody else in the room. So hopefully Devin is still paying attention and can bring in our first competitor.
All righty. Our first presenter is going to be Tamara Lucas. So we'll bring her on. Oh.
Hello.
Hello. I got to hide.
Welcome, Tamara.
Thank you. All right.
Go ahead and introduce yourself and talk about your super cool project. I love it.
Awesome.
I know a lot of people who are going to be signing up, so you're going to need to expand your geographic footprint. Just saying.
That's what we're working on. So just stay tuned. That's towards the end. That's a big reveal.
Yeah.
So, all right. Thank y'all for having me here. Okay. So we're good with my slides. Okay. Perfect. Well, great. So I'm going to tell you a little story, and I'm going to ask you to just get this in your brain. So it's Tuesday morning. You got a busy working mom, busy on an important Zoom call with an important client. And the laundry is over there on her couch, giving her the side eye. The sink is full of dishes, and her son's school just emailed her about a last-minute science project, which is now due tomorrow. So she's smart and she's driven, but she's also completely overwhelmed. And I know this picture well because I lived it. My name is Tamara Lucas. I am a single working mom with 2 boys. I'm trained in social work, and I have a background in entrepreneurship. And my passion is for helping women and communities thrive. So a few years ago, I hit a wall, and I didn't just need advice. I didn't need to get a fancy new planner. I really just needed a set of extra hands to help me fold all that pile of laundry. And what I really needed most was a village of support to help me. And through most of human history, we have lived in communities. We've had neighbors, aunties, cousins that help us manage life. But now we live these isolated lives, and we're told to just be independent and do it all alone. But as human beings, we are not made to do life on our own. And there's over 24 million working mothers in the US right now that are living this kind of life. And that is a massive amount of mental load that needs support. And in fact, the second shift that so many of these women are working at the end of the day adds up to over 100 billion hours of unpaid work annually. So this is why I started my Panda. So it's the personal assistant next to our app. It's an acronym. And we are a dual-sided marketplace that pairs trusted, fairly paid local helpers, we call them our pandas, with busy people who need support. And requesting help in our app takes under a minute. And what we do is we take that request and we match it with vetted, interviewed, background checked, and insured pandas that live nearby. You pay as you go at $44 an hour, or you can join our monthly premium membership and pay as little as $30 an hour. And so I'll tell you a story about how one of our happiest clients, Erin, uses our services. So she has 2 kids, she works full time, and her preferred panda comes twice a week for an hour or 2 at a time. And her panda folds her laundry, preps dinner, runs any lingering errands she has, and resets the house. And Erin walks in the house and it feels like her life is manageable again. So this is not just a service, it's a supportive relationship. And our pandas aren't just gig workers, they're neighbors that you can trust. And 90 to 95% of our pandas and our clients are women, which is really creating a really beautiful culture of women helping women. So our app launched in late 2019 in Atlanta. And since then, we have helped 900 families, and 65% of those are repeat customers. We have had over 25,000 hours of in-person services that we've delivered. And as of this month, we've actually hit $1 million in total company revenue. So that's a really exciting milestone. And we are thrilled that we've actually just now opened up our second in-person service market in Charlottesville, Virginia, which is a smaller city than Atlanta. So it's got different demographics, and it's going to give us teachings to help us learn how to scale into even more cities over the next year. And when you look at the market that we're focusing on, it's enormous. We are operating in the over $650 billion household service market with our direct-to-consumer model. And we started really hearing that we had the impact of our support was huge, not only at home, but also in our clients' productivity at work. So we decided to tap into the nearly $90 billion employee benefits market with My Panda for Business. And this is companies can offer our services to their employees as a benefit or a perk. This is a really high impact benefit that helps employees reduce stress, it boosts their productivity, and it helps them feel supported both at home and at work. And we've already signed several great deals, and we have more that are in the works right now. So what's next? As we have expanded throughout Atlanta and into Charlottesville, the next question kept coming up over and over again. When can I get a panda? I need one so badly, as it was evidenced at the beginning of this presentation. But the demand really inspired us to build the virtual village. And this is a remote support model for anyone, anywhere in the country. Our virtual pandas, who are the same team that provides our in-person services, help clients with any of the family or household tasks that can be done remotely on the phone or computer, like scheduling your kids' doctor's appointments or researching summer camps. It's important to note, though, that this is not replacing our in-person services, it's just enhancing and informing them. And this is unlocking national access for our B2B clients to use the demand and the data from our virtual people to help guide our physical expansion. And AI is in the conversation. We're using it to improve our resources and our processes, but AI can't fold your laundry. It can't sense when you're overwhelmed. Our differentiator is real people, real help, and that's what's going to set us apart. In a time of disconnection, we strengthen community through connection.
All right.
So if you believe in the power of community and time, if you believe business can be a force for good, please join us either as a client or investor. Thank you.
Fantastic. And you almost got that fast enough that Devin didn't bump in and go, hey.
I was close. I saw him getting close, and I'm like, let me just cut out 1 or 2 sentences.
Most of the time we love to see Devin on the screen, but at moments like this, it's not so good. So, but anyway. I know the panel is going to have some questions. So Lee, I'm going to start with you and fire away, and let's grill Tamara and find out how we can support her work, and because we need this in Michigan. I'm just saying. So.
Thank you, Chris. Tamara, it's great to hear you pitch again. Question for you. So you're basically building a two-sided marketplace. You have the pandas on one side and your customers on the other side. What is your strategy to gain users on both sides of the equation?
Yeah. So the supply side, the pandas, really has not been an issue. It's really been interesting. We had about a 2-month period in the midst of COVID that we were having a little bit of a lag. We basically, pandas just apply online. It's like a job board. And so we just put out job postings, and basically we just get pandas queued up. And then as they come in, as things start to pick up, we bring them on. We've already done like the pre-screening of them. A lot of times we will have done the initial interview and then told them that they're kind of in the wings waiting while things kind of get picking up with our client side. So with the pandas, it's really just sort of a matter of just sort of governing it that way. And with our clients, it's just a matter of getting the marketing. The B2B, My Panda for Business, really is allowing us to increase our customer acquisition much more, much quicker. With one big deal, we get 50 or 100 or 200 people that are signed up to use the services. And then with the virtual village too, that just really opens it up tremendously to a lot of people.
Great, thanks. And we may have some follow-up time, but I want to make sure that everybody gets a shot at it. So Paul, have you got a question?
Yeah. Hi, Tamara. I love the local economic multiplier effect of keeping money circulating in communities rather than extracting it to distant shareholders.
Yes.
This is exactly the kind of impact I look for in investments. My question is about maintaining your mission as you scale. Right now, My Panda feels like a genuine community support system. Women helping women, hyper-local trust networks, focusing on holistic relationships rather than transactional services. But I've seen many mission-driven companies start with beautiful values and gradually shift toward profit maximization as they face growth pressure, investor demands, or acquisition offers. TaskRabbit started as a community platform too, but became increasingly corporate and transactional. What specific structural safeguards do you have in place to prevent mission drift? Are you considering benefit corporation status or other legal protections that would lock in your values even if you face pressures to prioritize short-term profits over community impact?
So thank you for that really good question. The issue of keeping money in the local economy is one that I really am passionate about as well. And I love that we can shop at local independent businesses and just keep the money circulating in our local economies, which I think can make a huge impact. And my goal is not to end up going for big VC money at this point. My goal is to continue to fundraise from our community. I love the opportunity that my pandas can invest via our WeFunder, that my customers can invest this way. So the stakeholders that I'm bringing in are people that are all on board with what our mission is. And the direct community mission, it runs through every single thing that we do. And I did not start this company to grow it to be this huge multi-billion-dollar scalable company. That was never my goal. I want to make a ton of money and I want to grow it and I want to be nationwide. But my mission and my goal and my why is just to help people like me and to help people like my pandas get fairly paid work that's flexible. And so it just runs through everything that we do. And we're not bringing in stakeholders that are going to even really kind of push us in another direction. I don't know if that answers your question.
Yeah, thank you, Tamara.
Thanks, Tamara. Okay, Woody, you're up. You appear to be muted.
Okay, here I am. Tamara, great presentation. I have to be honest, when I first heard it, I thought pandas were going to be coming to my house, which my daughter would have been thrilled about. But I do not keep any bamboo stock there, so thank God this is not that. These concepts are needed. Okay, clearly you've identified a problem and a solution in the marketplace. We live in this society now where trust is a huge problem. Okay, we have lack of trust in media, we have lack of trust in news, we have just all around us. And I heard you touch on the trust factor related to this. Can you dig in a little deeper as to how you build that trust with the people that are going to be doing the service? Because, I know in our household, even when it came time to finding a new cleaning service, it was all about, well, who are these people coming in? Is it the same? Are it the same people every time? How do we know that they're not going to take something from us? it's like those same type of questions. How do you tackle that, and how do you do it at scale? I mean, I can see how you handle it locally in one environment now that you've expanded to another, but if you want to go nationwide, that's a lot. How are you gonna do that?
Yeah. I mean, and that really is where our hyperlocal foundation comes in, right? So all of our service areas, we call them service groves, like bamboo groves. A little play on words there. But they're broken down into where it takes about 15 minutes or so to get from one side to the other. So that's just sort of how the structure of our entire system is built. So when we go into a new area, we have these small service areas, and that proximity really adds a level of trust. I find so often that pandas and our members have like 1 or 2 degrees of separation from other people, or their kids go to the same school or whatever, things like that. So if you're going to possibly run into someone at the local grocery store, you're less likely to steal their grandmother's jewelry. And so really that hyper local thing, the community, is really important. And we also we have an online community that we also have for all of our pandas, and we invite also our premium members to that. So the structure of how we build things is not just like one off, just get a task and then you're done. You're part of our bigger community, and it's just built into everything that we do. So that really helps in a lot of ways. Also, we have full insurance. We've got theft insurance. We've got different things like that are in place to help protect as well. And our interactions with our members are very, very personalized. We have our app to make things go quicker, however, and more like streamlined. However, we also have real people that are there to help with things and to make sure that things are going well. So it's just very hands-on.
Great. So you noticed Devin popped in the room, which means we have to wrap it up quickly, but we do, because we've got to go to the next pitcher for us. But thanks for a really innovative project and for your passion around it. And like I said, let me know when you get to Michigan. I've got work for you.
Well, Virtual Village is launching next week, so you can at least do that. Thank you all.
Thanks, everybody. All right. Next up, this girl looks vaguely familiar. This is like our sister is pitching to us. So Jenny Kassan is here. Jenny was one of the very first people that I talked to on my journey to this space. And it was a long time ago. We were much younger then. And Jenny's been working on a really terrific project. And so we're going to have you dive right in, Jenny, so we have plenty of time to hear about it and ask some good questions. We really need to grill this woman. She knows her stuff. So let's make sure that she's got it right. So.
All right. Thank you, Chris.
You're welcome.
So yes, I am Jenny Kassan. And for as long as I can remember, I've been really, really passionate about wanting to help close the gap between rich and poor in our country. So after law school, I went to work at a nonprofit doing community economic development. One of the projects that I worked on at the nonprofit was working with small businesses. And it quickly dawned on me what an amazing force for prosperity small businesses can be. When they have the resources they need, they create jobs, they spark innovation, and they contribute to the circulation of money in our local economies. So I realized that if it's true that small businesses are really important to our economy, but they don't have access to financing. Most businesses either lack access to financing or financing that is a good fit for them. So once I realized that that was a problem, I decided to become a securities and financing lawyer because I believe that helping small businesses raise capital on their own terms could really move the needle on closing the wealth gap. I also helped change the law. So I wrote the petition that led to the passage of the Jobs Act, and I was also at the White House when the law was signed in 2012. Over the last 20 years or so, I've helped hundreds of small businesses raise capital, anywhere from retailers, manufacturers, tech companies, and I've helped them raise money using community capital, an approach that I call it community capital when they raise money from their community on their own terms to differentiate it from the more usual suspect sources like angel groups, VCs, and banks. And I even wrote a book about it. Raise capital on your own terms, how to fund your business without selling your soul. Unfortunately, after doing this for 20 years, the wealth gap is still getting wider and wider. And still, most small businesses and change makers of all kinds don't have access to the capital they need to realize their dreams. So I kept asking myself, what is going on? What is still missing from this ecosystem? Why aren't more people moving their money from Wall Street to Main Street? And I finally remembered an old adage: change moves at the speed of trust. And humans develop trust through face-to-face relationships and meeting together in person and developing relationships over time. So I came to believe that a place-based ecosystem where relationships of trust were really the top priority could be the key to 1000x the community capital movement. That's why I founded Baltimore Community Commons. BCC is a place-based ecosystem that brings together the components needed to really grow community investing. That includes support for entrepreneurs who want to tackle the daunting task of making an investment offering to their community, and also education and training for community residents to help them learn about how to become savvy local investors. And of course, lots of fun gatherings to bring those two groups together. Last year, we added a new component to what we're building, and that happened when Andrew Yang and Stephen Dubner announced that they wanted to contribute to the growth of time banking. Time banking is a tool where we use time as a currency to facilitate mutual aid, and it's a perfect complement to community capital because it grows community connectedness and trust. So Andrew and Stephen came on board with what we were already building to grow community capital. The project is housed at the Mulberry, and the Mulberry is a beautiful historic building in the middle of Baltimore. We've already raised over $2.5 million for the acquisition and the renovation of the building. On the first floor is where Baltimore Community Commons will be. And on the upper floors, we have 5 furnished residences, which will generate revenue for the project, which will allow us to pay our investors. We have an award-winning general contractor, an interior designer that's amazing. We also recently were approved for a federal historic tax credit, and we do have a committed tax credit investor. Chip Conley is our hospitality advisor, and we hope you'll join us. Baltimore Community Commons is more than just a place. It's a model that can be replicated throughout the country to grow wealth and close the wealth gap. Thank you.
All right. Thanks, Jenny. Really exciting project. I remember when I heard about it a couple of years ago, and the idea of you coming on the ground and doing your great work was just fantastic, very aligned with what we're doing at NC3. And that trust piece is a really important message. So thanks for that. So I'm going to reverse it and let Woody go first this time. And
Okay.
you're muted again. Thank you.
I think I got it this time.
Yeah.
Great job, Jenny. Love seeing you as always. This is like the first time you hear of real estate, not in the cash grab sense, but like in a common sense, and it's very refreshing. So kudos to you for that. Can you talk a little bit about the capital need and how it's going to be used in this instance, so we have a better understanding of what you're trying to achieve with the capital that you're raising?
Yeah, so the capital we're raising is, we obviously already purchased the building, so we raised some funding for that, and the rest is for renovation, furniture, just getting the doors open. Once we open the doors, we expect we will be able to operate cash flow positive pretty quickly. So that will allow us to run the programs that we're planning to run on the first floor.
Okay, great. Great question. Thanks, Woody. So Lee, would you like to go next? We'll make Paul last this time. He looks good at it.
Thank you, Jenny. Question for you. I understood that revenue is mostly going to come from renting apartments, but do you have other revenue streams on top of rent?
That really is the main revenue stream. We are projecting a small amount of revenue from the first floor operations because there will be some retail space and some food and beverage sales and some special event revenue. But we really want to generate the vast majority of the revenue from the upper floor. So we have a lot of flexibility on what we do on the first floor to make sure we can really fulfill our mission. There also will be some additional revenue coming from our sister nonprofit, which will subsidize some of the activities that happen on the first floor.
Great, thank you. All right, Paul, you get to wrap up, and then we can do some follow-up questions. We still have a few minutes. Devin hasn't busted in again, so we're in good shape.
Excellent. Hey, Jenny. Thanks, Chris. Now, this past 4th of July, I wrote a LinkedIn post comparing my fellow Judge Woody, who is a successful entrepreneur, to the most famous American entrepreneur, Benjamin Franklin. I also compared Jenny, who's an attorney, to the most famous American lawyer, Thomas Jefferson. Just like Franklin and Jefferson helped create the framework for political democracy, Jenny and Woody helped create the framework for financial democracy with the 2012 Jobs Act. If it wasn't for them, none of us would be here right now. Thank you. Now, Jenny, I love that this offering harnesses the local economic multiplier effect and keeps money within communities addressing root problems to economic inequality. I also love that you're transparent and clear with your documentation of where money has gone and what's needed, as well as mathematical projections showing both upside and downside scenarios. My concern is with cost control mechanisms. Are there contractor performance bonds in place, fixed price contracts, or change order approval processes? Will you commit to investor notification before incurring debt beyond certain thresholds?
Great question. Yes, I will acknowledge that this is a historic building. And oftentimes with historic buildings, you do discover things about them that you weren't originally expecting that can increase the cost. And that is why it has taken a little bit longer than I hoped to complete the renovation. The good news is we finally do now have the total cost, the contractor who's very familiar with the project has given us the total final cost, and he has committed to that. So the cost should not move anymore. But yes, that is a risk with the historic building.
I also appreciated the transparency in your reporting on the site. So that was really, really useful. I'd love to hear a little bit about the historic tax credit. One of the things that we talk about a lot at NC3 is the ability to stack different capital sources or braid, if you like that term, into projects. So I'd love to hear about the historic tax credit and any other capital that you are braiding into the project. Jenny?
Yes, we kind of are almost the definition of a very diverse capital stack, blended capital. So we have equity investors, we have lenders, no institutional lenders, just individual lenders. We have some very friendly debt that came in through some DAF investors, donor advised funds. Like I said, we do have a sister nonprofit who is bringing in some donations for the charitable activities that we're doing. And we were recently approved for the historic tax credit, which is amazing because that covers 20% of the cost of the development. The hard thing about a tax credit is that if you aren't a super wealthy developer, you can't take advantage of the tax credits yourself.
Right.
So we do have to syndicate the tax credit to a tax credit investor, but we are so lucky we found an amazing tax credit investor that's highly mission driven and has done other projects in Baltimore. So they're going to give us a really good deal, and they've been really helpful with the technicalities of taking on that type of a funding source.
Okay, great. And are you going to get the face value or close to face value? I know there are some circumstances where sometimes you can get face value for tax credits, sometimes 80% of it. Do you know where you're going to land on that?
I don't know exactly, but definitely we will not get face value because that would result in no returns to the investor. So they will buy the tax credits at something less than a dollar per dollar worth of tax credit. We haven't come to that final number yet, but they are very reasonable compared to many other tax credit investors.
Terrific. Okay. Any questions? Any other questions from the panel?
I've got one more.
Go for it, Paul.
Jenny, I'm curious about the market demand for the rentals in the second floor. What kind of research showed you that you can charge what you're charging and that it will be booked?
Yes. So this is a very important point because if you go to that part of Baltimore, downtown Baltimore, you will see on every corner advertisements for apartments. There's actually a glut of really nice apartments in downtown Baltimore. What there is not a glut of at all, and there's a real lack of, is furnished apartments. And so I've done a ton of market research on furnished apartments in Baltimore. There's really not many, especially in the neighborhood that we're in. And so our projected revenues from it are definitely in line with what's on the market right now. And there's very minimal, not enough to meet the demand. I also am in conversation with some of the bigger corporations in Baltimore that have the need for places to put people up who are maybe exploring, relocating there for a job. So I'm hoping that we'll have some wonderful customers for those apartments that are big corporations that need to keep places like that available for their, visiting people that they're doing business with or potential employees, et cetera.
So on that front, I know short-term rentals can actually be more profitable than rent, and sometimes you eliminate issues that you have with long-term renters. I don't know have you looked very deeply at that. I love that model, making it available to larger organizations that may need short-term spaces. But I wondered if you looked at that in the modeling.
Yeah, I mean, they're definitely a lot less regulated. Honestly, we will be regulated like a hotel, not like an Airbnb property. So all that really means is we will have to pay hotel tax, which is not great, but but other than that, there's not a lot of regulations.
Okay, terrific. All right, any last words from anybody or Jenny? All right, well done, friend, and fearless leader, together with Woody. So the rest of us are just standing on the side and watching and applauding. So thank you very much.
Not at all. Okay.
Great. Welcome, John. Really happy to have you here. I love reading the story about what you guys have done, and I'm looking forward to hearing from you. So introduce yourself and Ovana Pet.
Awesome. Grateful to be here. John Carey. I'm the CEO of Ovanova, and we're a 20-person team heavily augmented by AI. And our mission is to add as much value as possible to as many lives as possible as soon as possible. And for us, that means solving big problems. And the biggest problem we've come across is energy in the United States. We are in a national energy emergency. We're plugging in EVs and Bitcoin miners and onshoring manufacturing and electrifying our homes and businesses. And you guys probably heard about the AI data centers. And if you look at the graph, you can see that it's been 2.5 decades of nearly stagnant electricity generation. And so one way to solve this problem is little power plants all over the grid working in a symphony with the traditional grid resources to keep the grid safe and reliable and efficient. We call these microgrids. That just means solar, batteries, smart controls, and the ability to island yourself from the macro grid to operate independently. So We got really nerdy about these microgrids. We've been doing it for a decade. We have installed them in 27 states. We've interconnected with over 60 different utility companies. We even have some power plants in Kenya. And it taught us some very valuable things. One, utility companies need these, and they're willing to pay people to use their microgrids to inject energy onto the power lines at specific times when the grid needs it the most. Business owners and homeowners love these guys because they give them control over their energy. If you're a business and a tree falls on a power line, it might mean thousands of dollars a day to be able to keep your doors and lights on and revenue. And if you're a homeowner, it might seem romantic to bust out the candles when the lights go out, but not if you have an important Zoom meeting at 3 p.m. And so we knew the value of microgrids, and it was really clear that if we made them mobile, then they would be even more valuable. So in comes the PET, a wonderful piece of technology, portable energy technology. We took the time to get the patents and the trademarks for PET because it's a significantly different offering than a trailer with batteries and solar. You can take your pet and you can leash it to a facility, a police station, a fire station, a school, a church, and it can keep the lights on if the grid goes down, but it can also participate in injecting energy during those peak times that we talked about. So it's just a totally different piece of technology. Now, there's a couple other things. It does a lot, but I'll just focus on a few. It's secure encrypted communications. This is necessary because out of the box, microgrid hardware does not have cybersecurity in mind. Now, if you imagine that symphony of all these little microgrids helping the macro grid out and they got hijacked, that's a national security risk and it's a real one. And so we take that seriously. We have bidirectional inverter chargers on these pets. You can pull up 2 EVs, charge them at the same time, but you also take the energy out of the car batteries and stick them in the trailer, which can be used for all sorts of applications. So I'll cut this short just to say something simple. We cannot wait to see what people will do with pets. We've seen a huge interest in disaster relief organizations. They typically have solar and battery trailers, but when they're not deployed for a hurricane, they're just sitting in a parking lot. We have 100% usage for these because it can be deployed at a facility, leashed. They can be offsetting electricity costs, helping out the grid, and supporting during outages. So that's one way. We've seen a desire for people to buy these and own them like Airbnbs to rent out for festivals and weddings and to send into disasters to be heroes. So and utilities are probably the people that we think are going to have the greatest interest. But all in all, there is a great opportunity here to roll with us and jump on board with our WeFunder. If you scan that QR code, you'll be able to jump on, support us in getting 30 pets into the wild as soon as possible so we can see what people will do with them and show the world what these things can do. There's lots to learn about microgrids, but a very simple explanation here about why being mobile makes them a superpower is maybe you've lived somewhere. Awesome. I think I have like 30 seconds. So maybe you've lived somewhere where you've been toasting some bread, turn on the coffee pot, and then you microwave something and your breaker pops. This is happening all over our grid right now, overburdened circuits. Can't make somebody go solar with a microgrid on a facility, but you can surely pull a pet up, park it under the power line and connect it and show utility companies the value of distributed energy resources and how they can save the grid and save our national energy emergency. Thanks for taking part in it.
Fantastic. Thank you. Nice job wrapping up and being aware of Devin's presence in the room, knowing what that means. You notice how these entrepreneurs are always pitching longer than they're supposed to be? It's really, it's annoying, isn't it? No, it's not. It's great. So terrific. So I'm going to make Paul go last for reasons that he may express when he talks. Woody, I'm going to let you go first on this one.
Okay. When I first heard this, I thought a powered schnauzer. I wasn't quite sure what I was going to expect. So it was refreshing to see. You're not the first to be doing this in investment crowdfunding. I've seen similar type of things happen on other offering platforms. So I want to talk about the competitive moat I want you to explain to me what makes you different than other ones that are out there. And this is capital intensive. Like, can you talk to the supply chain issue? Actually, let's just focus on those first because it's too much to answer in a short period.
I love these questions. One competitive moat is cybersecurity. So we had to stay quiet about this for about 6 months, but 2 weekends ago at DEF CON, our findings about how insecure microgrid technology is were able to become public. And this is as the grid becomes more saturated with little power plants helping alleviate the burden, it becomes more dangerous for these units to be able to be hijacked and controlled. And most of the technology that we deploy is not manufactured in our country, and it is definitely monitored and controlled from outside our country. I've had my lights turned off from overseas. We've had our customers' lights turned off from overseas. This is not a fear-based thing. It's just the truth. And so making sure that we have secure encrypted hardware in each pet and each microgrid. So unless you know the secret handshake, you can't tell it what to do. That's one thing that makes it different, as well as I don't know of any other trailers personally or mobile microgrids that are grid connectable. So maybe there are some, but I'm not aware of it. And another moat I would say is we have gotten very nerdy about this technology, and I didn't go into it in the conversation earlier, but we have DC coupled our generators, and with the administration and the understanding of the intermittency of renewables. A lot of people don't know, but in the same day, Woody, we'll pay a solar farmer to disconnect from the grid to stop producing because we have too much. And then when everybody starts to get home from work, we're paying people to shut off their air conditioners and hot water heaters because we don't have enough. And so the intermittency of renewables not matching up with the demand of the human family, at least here in the US, is a challenge. And so when you don't know if the sun's going to be out, and you might not have a lot of energy stored in your battery, but when you can start up a generator, it's firm power. It'll be there. And so, but the problem with the generator is it has its own AC current sine wave. It does its own dance, and the grid has its own dance. And so if they don't match up, phase bumping breaks things. So if you own a generator at your house, you have an automatic transfer switch. When the grid goes down, you island yourself and you run off your generator. Well, our systems use the generator specifically to charge the battery only. So not only are you running it at max fuel efficiency, because it's not just running to run an LED in a refrigerator, it's charging the batteries at 70% load, but you can run it while grid tied, while pumping energy into a facility and out onto the power lines. And there's a few other features that get nerdy like this, but we've just gone all the way, if you will. We've been at it for a decade. We started out selling solar, realized that you have to install it and manage the project if you want to create a great experience. And then we get deep into the hardware and software side of things because we had to serve our customers at a high level. I don't want to take too much time with just that simple question, but if there's anything else, please ask.
All right, great. Thanks. Lee, will you go next, please?
Yes, sir. Thank you for diving into the competition. That's a very important point. Another important point for me at this stage in your company, it seems like your product is ready, and what really matters is how are you going to go to market. So please, can you explain what is your sales strategy? What are you going to do to get this pet to sell, hopefully as quickly as possible?
Yes. So one, we have a heart for community. And so we're looking at, we learned the pet really is inspired from our work during Hurricane Helene, doing some disaster relief work. We had some bandwidth. We sent some microgrid techs into the storm and realized very quickly that our food and water wasn't wanted. They wanted our energy. And so we have, I will be going next week to the Convoy of Hope down in Georgia. They're a disaster relief organization to show them our pet. I'll be towing it down. We have 4 different versions right now of pets, different sizes. You can tow with an SUV, just a F-150 truck, go on and up, single phase, 3-phase. And so we know that folks like FEMA, disaster relief organizations, Samaritan's Purse, those types of people, we're in conversations. We're looking at collecting some very large orders for those, which will be helpful to get our unit economics very tight. That's what we're hoping to do immediately, is figure out how inexpensively can we bring these to the people. And then there's another vertical that I'm the most excited about, which is utility companies. We will find that we do energy campuses and power towns. And what's frequently happening is the line from the utility substation to the neighborhood and the church and the school. We build another neighborhood and it begins to get overburdened, right? It's like the turn on the coffee pot with all the other stuff and the breaker pops. Well, this is a very unique strategy to show these rural electric cooperatives and municipal owned utilities that are very open to these types of conversations, not the Dukes of the world. And show them that with our software, we can give them a button to press where when they turn the microwave on, they can also hit this button at the same time and the breaker won't pop. And we don't need to spend the $15 million to drop a new circuit from the substation. So between utility companies and disaster relief organizations and towns under 10,000 people to make sure that they can keep the churches and the schools and the police stations and the fire stations working, we think that those are great paths and are preparing to go on pet tour and show everybody, what they're capable of.
Great. Great response. Paul, I'll let you finish up.
All right. Hey, John. Now, I know a lot of startups fail because of founders giving up, but you guys, Ovanova, you're not a startup. And I've been watching you and your team very closely for the last 18 months. And I see you as a very unique CEO. I've never seen anyone that can both mobilize and activate the talents of an entire community the way you have. They all believe in you. They revere you, and you stay humble about it. Now, I didn't invest in this venture primarily because of a mobile solar microgrid. I invested in you and the Ovanova team and the patent you have with bilateral charging. Now, right now, market validation for the PET at this point has been slow. However, the PET provides real-world use validation for your patented bilateral charging tech. Now, I would think that there are other applications for it, like commercial peak shaving and grid stabilization services, which you kind of touched upon, which represents massive markets. What's preventing you from actively licensing the bilateral charging technology to established manufacturers like EV companies, inverter manufacturers, battery system integrators, while continuing the mobile solar microgrid PET development?
Well, I don't believe we control rights to non-mobile bidirectional EV charging. That has been done. I guess how I will approach this is we are heavily focused on offering. That's why PET is not portable energy trailer. It's portable energy technology. We see everything becoming a little power plant. And so people have RVs. They need electricity in their RV. It's parked most of the time. What if your RV had batteries, solar panels, and a bidirectional inverter charger on it, and it could, while it's plugged in sitting there, could be discharged to support the grid? We see that with tractors. We see that with sailboats parked at marinas, grid's edge. So Devin's here, but we are working on those things. I see PETs as a tenth of what Ovanova does.
Fantastic and great wrap up. Paul, I wish you were better prepared and had better questions, but I guess we had to accept that. In-depth, carefully researched question directed at John, and you did a great job handling it. Devin, it's all yours. We did a great job. I hope you continue to do one.
Thank you. You have done a great job. I want to turn the time over to our judges to deliberate while we vote. Let me ask my colleague Chandan to pop the voting link onto the screen. And I'm going to put a timer up. And so we will have 5 minutes. 5 minutes for everybody to vote. And in that 5 minutes, we're going to ask our judges to quickly deliberate and choose their winner. So there will be 2 winners today. There will be a judge's choice winner, and there will be a an audience choice, a SuperCrowd award. So those are both separate awards. And we invite you, all of you who are watching, to visit 4sc.fund/vote52 or just scan that QR code that's on the screen now. And I'm going to start the timer now, and then you guys can deliberate.
Okay. Well, first question goes to Paul. Can you be fair in your assessment?
Well, I am very biased. I have invested both in Ovanova and Jenny's project, the Boston Community Commons. So I'm going to acknowledge my bias, but I also have to say that My Panda is the only company pitching right now that has shown strong market validation. So I came into this not really saying, oh, I'm going to pick one person or the next. But instead, I wanted to try and do my best to accurately deliberate with the two of you because I respect both of you incredibly and your opinions. So I would love to hear from you guys. And I am biased, but I'm going to do my best to be as objective as possible.
All right, so I can start and give my vote already to get things started. I really like My Panda. I'm maybe the type of investor who likes staying a little bit away from two-sided marketplaces because these are just such huge moonshots. If they get real, if they work, they actually are. They can become the next Facebook. But if they stay small, it's a little bit complicated for an investor to get a return. So today, I think my choice is going to get more on Jenny's project. The reason being that I just really like the opportunity of real estate in an attractive environment. She seemed to have done a great market research behind that and having the money being used for the community. I also love Ovanova, very interesting. Maybe stronger market traction could have made me go that way, but today is going to be Jenny.
Okay. First, whoever's cooking in the microwave in the background, mute that. Okay. Second, I'm torn. If we were looking at community impact at the local level, Jenny, hands down, I love what she's doing there because it has direct impact. My Panda, I could see how this goes viral, particularly as we're living in a community-driven ecosystem, and this type of word of mouth type of thing. I could see where I live here in Colorado. I'm actually in Seattle, but goes. Everyone just sort of wants to do it, but this distributed energy thing, it's like this. Our grid is capped out. Like we need solutions, and I think that what the focus on this energy solution at this level is unique in the sense that it's storing it. And I like what I heard about I didn't know about the risks involved about people overtaking some of these little portable energy things. So to hear that, I liked as well, but I agree with you, Leah, that we haven't seen the traction that we're starting to see in My Panda. So I am torn. I love them. The Ovanova and My Panda, I think, are my top two, and I could be swayed either way.
Well, I guess is that me here talking? Well, it's hard for me not to want to pick Ovanova just because of the human being John is and the respect he has from his community is unlike anything I've really ever seen. They care so deeply about the mission that they're doing, and his ability, like I said earlier, to get other people passionate about it. That's a special quality. And I think when really researching any startup venture or startup company, it comes down to the founder. And this is a founder. I am biased. I'm going to say it. I'm very biased here. And John and his team are incredible. So my pick, it has to be Ovino. Even though I love Jenny too, I'm invested in her as well. And my Panda, the incredible market traction they're having. It's hard for me not to pick Ovanova.
Okay, then I move to Ovanova.
Well, waiting for Devin to come back, I want to say to me, not me being biased, to vote for what you invested in. It's just your heart, your money just speak for that's what you believe in. So it's an even stronger vote for you, Paul.
Yeah. Thanks, Leah. It's tough being able to, being put in a position where, you already believe in somebody so deeply. And then now you have to, make an objective decision. Even with acknowledging a person's bias, it's hard to overcome it.
Listen, you did a great job. I mean, you put your conviction out there. You were fair in your assessments. I think this is every time we do this, I think we have a similar conversation. We're seeing companies and teams and entrepreneurs that have come up with really innovative solutions and are pouring their heart and soul into these ideas. And it's not easy on us. I wish they all could win.
Yeah. Can we give everybody a win, Devin? Is that all right? If our team
Boy, it's a tough one, isn't it? It's a tough one. So I've been focused on the the SuperCrowd Audience Award. We've got that winner ready to announce, and if you want, I can announce that.
Let's hear it.
Lots of votes for everybody, but Ovanova won the SuperCrowd Audience Award. So congratulations, John. Let's see. So judges, what did you decide?
I think it came down to Ovanova because I was tied between the two. Leah was with my Panda, and then Paul was with Ovanova, and then I was like, okay, I'm convinced. I'll go to Ovanova.
Okay.
Leah was actually Boston Community. Yeah.
Oh, Boston Community. Sorry. Yeah.
Okay. Now wait a minute. So Ovanova, are we congratulating John for 2 victories? Is that what's happening?
Looks like it.
Looks like it.
I'm seeing 3 nods. Okay. Congratulations, John. The double win. That's great. We've got some great prizes for you. We got prizes from Woody. We got prizes from the SuperCrowd. We got prizes from King's Crowd coming your way. So I'll follow up with those. But folks have generously pledged support, as well as there's one more prize from Green to Gold in the balance, and we'll give them the option to choose at the end of the 2 days who gets their prize. But that's a membership to their really great incubator. So we got a lot going on. Congratulations, John. With that, I'm going to thank everybody. Chris, you did a masterful job. Leah, Paul, and Woody, we can't thank you enough for being here. This has just been such a great day for the SuperCrowd stuff, but especially this live pitch. It was just fantastic. We're going to take a quick break to honor and respect our great sponsors. Stick around. We've got another great hour of content coming up.
You're watching SuperCrowd25, the biggest event in impact crowdfunding. Over 2 days, top experts, investors, and mission-driven founders are sharing how to raise capital, discover profitable investment opportunities, and change the world. Stick around. You'll hear stories, strategies, and insights you won't find anywhere else. And if you want to go deeper, join our VIP community for just $25. Get backstage access, exclusive networking, speaker handouts, and a special VIP-only webinar. SuperCrowd25, crowdfunding the future. Impact starts here.
The property was dilapidated. It was horrible.
It was the code violations, drugs, crime, rundown RV trailers, no parking lot, no lights at night, just nothing. Our main focus is second chance housing. A lot of affordable housing households are led by single mothers. Our portfolio is 100% affordable. So our mandate is to be 20 to 30% below market rent. I'm personally 180,000 invested. We're only one of 2 companies globally to have a published social impact report for affordable housing on a Morningstar platform.
What's the faster way to build wealth? A traditional savings account at 0.38%, or worthy property bonds earning nearly 20 times more? Earn a fixed 7% APY starting with just $10, access your money anytime with no fees, all backed by real estate. Visit worthypropertybonds.com today.
The African diaspora is one of the biggest investors in the continent, but they are looking for a structured, transparent way of supporting this business. This is not donation. This is investment for return, including impact, and join our movement community. Thank you.
Join the CFPA for the Regulated Investment Crowdfunding Summit on October 21st and 22nd.
Register at ricsummit.org.
Rural property taxes fund vital services.
Only when they're paid.
Invest in real impact.
Visit invest.coretaxdeeds.com today. Behind today's biggest crowdfunding raises.
The leading CPA firm for Reg CF, Reg A, and Reg D compliance.
Trusted.
Experienced.
Set apart.
ISPD strengthens health for families across Haiti.
Donate today. Make an impact.
Hello, everyone. I'm Gene Massey with Media Shares, and I'm very excited to be speaking at SuperCrowd25.
Save the date for Super Green Live, the global event on sustainability and green innovation, January 22nd through 24th, 2026.
We extend our deep appreciation to our supporting sponsors and co-hosts, including Potomac Growth, Energy Capital Funding Group, Move the Needle with Rob Kaplan, Ridgecrest Herbal, Stakeholder Enterprise, Renaissance League, the Global Equity Crowdfunding Alliance, the National Coalition for Community Capital, Green to Gold, and King's Crowd.
Enter to win one of 2 FireMax 11 tablets. Videos, books, and games come to life. Scan the QR code now.
Rules apply.
Welcome back. Yeah, you know, the pulling off the live pitch, we do the one once a quarter, and I'm hoping if I can get my act together tonight, we're going to announce the application window opening for our quarterly live pitch coming up in September tomorrow at SuperCrowd25. We're excited about that. There's a lot that goes into pulling off a live pitch session, as you can imagine, and well, trying to do that in the middle of a conference, even more challenging. But I thought Chris did a great job. Our judges were great. The companies that pitched, fabulous. Hats off. I'm excited now to reintroduce, I should properly say, our next speaker, who is one of our pitchers, coincidentally. But as was noted during our little introduction to Jenny, as when she was pitching, she is one of the OGs of crowdfunding. She was doing crowdfunding before crowdfunding was a thing, right? She was using other existing rules and exemptions from securities registration rules to do crowdfunding type raises for a decade before it was implemented under Reg CF. So it's hard to find anyone that's more nuanced to turn in. I love telling people she went to Yale for law school, super smart. In any case, I'm thrilled to have Jenny here to speak to us today. And let me turn the time over to her again. Welcome back, Jenny.
Thank you. All right. Well, thanks so much for inviting me, Devin. What I love to share is how to really think through what you want to offer to investors. We spend so much time thinking about, should I do crowdfunding? If I do, how do I deal with all of the compliance components to it? And sometimes we forget to really spend a lot of time thinking about what exactly will my relationship with my investors be? And the most important thing that's going to dictate that relationship is the legal documents that you create that will govern that relationship. So I want to talk about how to think that through when you're getting ready to raise money from investors. And we'll be focusing on a crowd raise, but a lot of these same principles would apply with any type of fundraising that you might do. So, and I just want to really encourage people to go ahead and put any questions you have in the chat. Hopefully I'll be able to see them. Let me make sure I'm in the right place. Yeah, I think I can see them. So I love to answer questions about all of the different aspects of what you can offer to investors. I have been working on this for about 20 years, and I've done all kinds of creative offerings. I've helped a lot of clients raise money from investors using all kinds of creative tools, and I've also raised money myself. As you know, I am currently raising money. So, all right. So, this slide might be a little hard to see, but basically, the mainstream way of raising funding that you hear about, like especially if you're in Silicon Valley, is okay, we need to raise money, so let's go out and find investors. And so you go and you find every investor that you think might be a fit for your company, and you pitch and pitch and pitch. Maybe you go to angel groups, maybe you go to VCs, maybe you go to different lenders that are out there, different, impact investment funds. And with that way of raising money, you really have no say about the terms of the investment. The investors are going to be telling you, here are the terms on which we will invest. There may be a little room to negotiate on some of the tiny details, but basically you have no say over the terms. When you do crowdfunding, it's the complete opposite. You decide what your terms are going to be. And so it's a very powerful position to be in, to be able to select your terms and really think through what makes the most sense. Given my long-term plans, my goals, my values, what makes the most sense to offer to investors? So that's one of the things I love about investment crowdfunding and community capital, as I call it. But it also does create a big responsibility because you do have that power, you want to really use it well and give some really good thought to what you want to offer. So when you raise money that way, I called it community capital earlier. We can call it community funding. There are an infinite number of options. Really, you could come up with all kinds of creative tools by which your investors would get paid back over time. I mean, that's the goal, is that somehow, because this isn't, you're not asking for donations, these are investments. So the goal is that eventually your investors will get paid back with some kind of additional return. That's the goal. But how that happens, there's massive numbers of different ways that could happen. If you're not a company that is on that path where you're hoping to have a big exit, I call that the venture capital model, where you're a wannabe unicorn and you're hoping to have at least 10x increase in valuation, and you exit, your company exits via a sale to a larger company, or maybe does an IPO, and your investors get paid upon exit. That is, a model that's very popular, obviously, with tech startups, but that doesn't have to be you to be able to raise money from investors. And you also don't have to give up any control. It's completely up to you to design what rights, if any, your investors have to make decisions affecting your company. And when you raise money from the community, A lot of studies have shown that your investors value your mission and your vision and your goals to have a positive impact as much as financial return, if not more in some cases. When you're dealing with community investors, they're much more diverse in terms of what they're looking for, and they have a lot more flexibility because a lot of the funders that are the more institutional type funders are investing other people's money. So they don't really have that many options. They may love your mission and positive impact, but they have their own investors that they have to satisfy. So they don't have as much flexibility. So that's a really nice thing, is that when you're raising money using community capital, you can really appeal to things that are important to people beyond just making as big a financial return as possible. And of course, we've seen over and over that when you raise money from your community, instead of going after those usual suspects, we're seeing a lot more diverse founders getting funded. In the VC and angel space, not so much. Even in banking, it's mostly kind of the folks that have all of the traditional aspects of privilege, like education, white, male, coming from maybe a coastal city, et cetera. But with community funding, we are seeing that more diverse founders with different kinds of backgrounds are getting funded. And this type of fundraising can be a fit for any kind of business. So I'll just share a few examples of clients I've worked with over the years to show you the diversity of what it can look like, what you can offer. So this was a project that was a greenhouse. The fundraising entity was a nonprofit, but they were raising money to start a worker co-op. And they offered a debt instrument, and they set the terms so that the interest rate would be rather low, because they knew that people were so passionate about supporting the growth of worker co-ops in their community that they would be willing to take a lower return. Also, don't forget that, interest rates go up and down. Some of my clients that maybe offered a 3% return a few years ago could raise money offering 3%, whereas now in a higher interest rate environment, it might be a little more challenging. This was another client called Farm Fresh to You. They also offered a loan program to their customers. And what they did was, instead of paying back the loans in cash, they actually paid in credits towards their product, which obviously was really great for them. So they were their investors were their customers, and their customers were already buying produce from them. And so to lend money to the company and then get paid in the form of credits for getting more produce was kind of a no-brainer, and they raised several $1 million that way. Quimper Mercantile is a retail store in Port Townsend, Washington, that raised money from their community. And their goal was to have as many people as possible in their community become owners of the business. So they offered equity, and they actually offered common stock. So all of the investors get the same rights. There's no preferred dividend paid out, but all the investors have the same voting rights. And to the extent that the business is profitable, everyone shares in those profits. Cero is a composting business, also a worker co-op based in Boston. They raised money also by offering equity, and in their case, they offered preferred equity. So unlike common equity, the preferred investors did get first dibs on distributions of profits, and also if the company were to ever be shut down or sold, the preferred investors would also get, the first dibs on any money that would come out of that. That's what preferred generally means, but they did not give up any voting rights. It is a worker co-op, so it was really important to them that the workers had all of the control of the company. So, how do you design your investment offering? There's a lot of things to think about, and like I said, there really are an infinite number of options. So, I do have some steps you can take to sort of narrow down what you want to offer. I would say one thing not to do is to pull a cookie cutter document off of oftentimes the crowdfunding platforms will have pre-created documents that they have you use to raise money, or they offer that as a simple way for you to raise money. I don't really recommend doing that. I do recommend taking the time to think through what is your particular situation and what type of investment document fits the best with your goals. So the first thing is to get clear on your goals. And there's a lot of different things that we can talk about here. I mean, one is that whole issue of your long-term plans. And do you plan to have an exit where you sell the company? Like, are you on that path of the high growth tech startup where you're doing everything you can to grow as fast as possible and have an exit? If so, there's kind of a pretty clear path on what makes sense to offer to your investors. Oftentimes, what people will offer in that case is a simple agreement for future equity. And the reason why they'll choose a safe is because it's a really simple document and it's not equity itself, but what it is a tool that allows your early investors to convert into equity at some point in the future when you have a trigger that converts the equity to the investment, the safes to equity. And generally I mean, you can change the safe, but in your typical safe, the safe that everyone uses, what triggers that conversion is a priced round, which means you sell equity to investors. So when you're on that high growth path, one of the things that you're probably going to be doing is raising multiple rounds of funding, because to grow that fast, you have to keep raising more and more funding. So a safe makes sense when you're on that path, potentially. I mean, there's some downsides to safes that I may not have time to talk about right now, but if you're not on that path, it doesn't make as much sense to offer a safe unless you think there will be some future funding round where you will offer equity and that would trigger the conversion of your safe. So that's one thing, is getting clear on your goals in terms of your long-term plans. Maybe you have no plans to ever sell your company. Maybe you love your company. You don't really envision ever selling it. Maybe you'll just die running your company. Maybe your kids will take it over. Maybe you don't even want to think about that right now because you know someday you'll probably exit, but you don't want to have to worry about that now. What you really want to do is get to the point of profitability. Well, in that case, you're going to want to offer something very different to investors where they're not dependent on an exit or a sale of the company for them to get paid. So those are just a few of the things to think about with your goals. The next thing you want to do is think about your entity structure. There's so many different ways to structure entities. You know, you may have a nonprofit, you may have a co-op, you may have a corporation, you may have an LLC. Also, there's different tax statuses. So like an LLC, there's at least 4 different ways that an LLC can be taxed. 5 actually that I can think of. So really think about what your current entity structure and tax status are and whether they're in alignment with your fundraising goals. And if not, you may need to change that or make some, create a new entity or change your tax status. The next step is to decide, do you want to offer equity, debt, or some kind of a convertible instrument? Equity is an ownership interest in your company. A lot of people think that equity is only appropriate for a high growth business because they think that equity has to the way that equity investors get paid is through a sale of the company or a liquidity event. But that's not true. There's lots of businesses like that Cero co-op that I mentioned earlier, where they offered preferred equity, and the way the investors get paid is through sharing in dividends. So they share in profits, and there doesn't have to be an exit for the investors to get paid. You can also build in a structured exit so that if an investor does want to leave, there's a way for them to be able to exit. And there's many ways to do that. There's something that's becoming more popular these days called redeemable equity, which has a built-in exit through redemption of stock at a certain pre-agreed multiple. Debt, of course, is a lot simpler. It's just a loan to the company. And there's so many different ways to structure it. Something that's really popular right now is revenue-based debt. That's where the payout to the lenders is based on your revenue, which could be either your gross revenue, cash flow, et cetera. That's a really nice thing. So some people are scared of debt, but when you realize how flexible you can make debt, it can be a nice option, and then you don't have to give up any ownership. And then, of course, there's no real concern about how the exit will happen, because with debt, there is always going to be a built-in exit once the amount that was agreed to be paid back is paid back. A convertible instrument is a safe, like we already talked about. There's also convertible notes, which might be a little bit more comfortable for more traditional investors. And generally, those convert into equity when you raise a priced round, i.e., offer equity to investors. But it doesn't have to be triggered by that. There's other things that can trigger the conversion, like, for example, reaching a certain profit level or something like that. So once you choose between those three, that's when you do have to get more into the nitty-gritty of designing the economic terms. So like I said, with equity, there's multiple ways that investors can get paid. That's through dividends. It can be through a redemption of their original investment at some pre-agreed multiple. There's even secondary trading, although that is not as easy with equity that is purchased privately, like in a crowdfunding campaign, but it is possible that your investors could sell their equity to someone else. You can also have a way that they can offer their equity back to the company. So there's many, many ways that equity investors can get paid. And, the question might be, how long do they want to stay with you? There are some companies where their equity investors don't want to leave. They get an annual dividend distribution and they share in the profits that way, and they don't want to leave. They love being an investor in this company because there's all kinds of cool perks, and they love getting their annual dividend check. For debt, like I said, you can have the payments be based on revenue. You can set an interest rate that's rather low, like some of the more mission-driven offerings do. You can have the interest rate tied to a market benchmark. And then, of course, governance. Do you want to give up any voting rights? You do not have to. And after the raise, don't stop thinking about your investors. Hopefully you've given so much thought to your offering that you can continue to do what you promised you would do in those legal documents, and stay in touch with your investors and let them know what's going on. Thank you. Oh, you're muted, Devin.
My gosh, that doesn't help. I can't talk when I'm muted. That's so weird. Quick question. Well, quick comment. It doesn't even require a response, but I wanted to share. Someone, Tom Wright, suggested, I totally agree, Jenny. I've spoken with founders who told me they prefer crowdfunders to the big guys because the founders get to retain complete control over their creation. It's a wonderful investment model. I think that was a key theme that you developed. Thank you so much. It really resonated with the audience. Listen, thank you so much for being here, Jenny. Doing double, triple duty. You're the president of the CFPA. We didn't get a chance to talk much about that. Our next speaker is also a board member at the CFPA. We're thrilled to have the CFPA represented well today and tomorrow. Thank you, Jenny, for being here. We really appreciate it.
Thank you, Devin.
I hope you'll pop into that backstage. I know there's an active discussion going on there with some of the folks who are pitching, so you want to hop in there before you go home tonight. And I'm about to introduce our next speaker, but before I do that, I want to just remind folks to enter the drawing. If you are interested in getting we've got kind of a top-of-the-line tablet that we're giving away. This is
the Fire Max 11, it's called, and it's a rather fancy tablet. Great, HD screen, the whole thing for watching movies or gaming, and so it's great. So you've got to enter. I'll ask Chandon to throw that link up on the screen. He's had it up a few times today. He'll throw it up again. But we're going to pull the drawing here in just a few minutes. So you want to get your entry in before we make the first drawing. We'll do another one tomorrow night, but you want to get your entry in now. Okay, with that, now I'm going to shift gears and introduce our amazing next speaker, Rebecca Casava. I just can't say enough about Rebecca Casava. She is such a rock star in this space. I mean, Rebecca has started and led Dealmaker, taking it from a small tech company to really being the dominant player in large offerings in the crowdfunding space. We have these industry league tables that are published by by Woody and Chris Lestrino and their teams at King's Crowd and the Crowdfund Capital Advisors, and we see now Dealmaker at the top of the list frequently. Always, what I see. Always, it's the big offerings. The $4 million, $5 million Reg CF offerings, and the Reg A offerings. She just did Newsmax this spring. So holy cow, she's got it figured out. I need to stop talking so she can talk. Let me bring Rebecca on the show. Take it away. I'm going to shut up now.
Thanks, Devin. Thanks so much for that. Tough intro to follow, but I'll do my best. I'm always so happy to come here. It's such a warm and great community. That's why I love what I do so much. And when I sat down to think about SuperCrowd25 and what is different this year than it has been in past year, it led me to say, I think this year it's a call to action, and it's a call to everyone in our community to dream big and to raise boldly. And in order to do that, we're going to look at where we've been and where we have to go as a community, ourselves, and as an industry. So I'm Rebecca. I'm CEO and co-founder of Dealmaker. And Dealmaker was born out of an idea that I had when I was sitting in my law firm many years ago, probably 10 years ago now, and I was helping my clients with their capital raises, and I could see the frustration on their face, and they were working so hard to get an idea off the ground. And all the founders and all the portal owners in the audience, we all know this pain because we live it, we pursue it, we love it. But building a business is an incredible pursuit, and kudos to everyone here who is doing that. It is something that I've watched founders, not have enough money, and they scrape together what they can and they get a business going. And I have so much respect for that. And that's why we're all here to do what we can do to build an industry to get those founders funded. So if you're here, kudos to you, because not only are you doing that, but you're also the future of the capital markets. You have the vision to see that capital can and should be digital and will become more and more digital in the future. So this is some stats telling us what everybody in this room already knows. The power of retail capital is rising. So just this year, retail investors added $1.3 billion per day to the public markets. And that's up over 30% from what they did the year before. That's immense volumes the power of the retail investors had. And that is being powered because what the World Economic Forum knows, they've found that Gen Z is starting to invest earlier. 30% of them are starting in early adulthood to be investors. That's up from only 9% of Gen X that was doing that and 6% of baby boomers that were doing that. So as a consequence of that, so much more market activity is happening from retail investors, and retail investments are going to grow to 2.4 trillion from the 80 billion they are today by 2030. And that is only in America. In Europe, we're going to see a 3x of retail investment activity from 924 billion to over 3.3 trillion. So huge power in the retail community, which all of us already know. Why is that? Because retail investors back what they believe in. What Jenny was just telling us, they believe in causes and they power them to fruition and to make those ideas a reality. And when they do that, they generate 40% more higher brand spend, and they show 80% more brand loyalty. So what does that do? That loyalty becomes long-term growth for businesses. It's a great sustainable source of capital that is actually powering strong business growth. Where have we as an industry come? When I take a look back at it, we've removed so much of the friction from investing that existed just 5 short years ago. In doing so, we've created these investor tools that have made it so that investors can move through a checkout process very easily digitally. And what does that better access cause? That causes more confident participation from a retail investor community. So we're building this world. I like to say we're building the plane while it's in the air. We're creating something that more and more retail investors can become a part of. And I know this because I live it every day at Dealmaker. We help hundreds of founders a year get their ideas funded. And I talk to them about what they're doing and how they're managing their retail community and how they can use their retail community to power better gains for their business. It's exactly what I did in building my business at Dealmaker, where I got deals from the investors that I had. And people today still can't believe how we achieved such exponential growth. We did it because we were powered by a community who used our technology. It's exactly what we stand for, is what we did. We're seeing this transition happen in 2025 that I'm describing through the data. So we've done over 2.3 billion through the platform now, and the industries that we're seeing powering the biggest raises in 2025 are media and entertainment, as well as the energy and resources sector. That's also not to say that we aren't seeing very strong volume driven by the transportation sector, healthcare sector, real estate, sports, food and beverage, as well as technology and AI. And we know from the numbers and the data that we're seeing that 2025 is going to be bigger than ever. So if you think about it, from 2016 to 2024, Reg CF did about 1.3 billion in volume. That equates to about 150 million in volume annually. But already last year in 2024, we saw 350 million in volume. And this year, only halfway through the year, we've seen 200 already. So each year, Reg CF is doing more and more volume as a category. And what's happening to those businesses as they go on in their life cycle, and our industry has been around for over a decade now, we are seeing that those businesses are able to power reinvestment from their community, and they can come back and use Reg A as a vehicle to fund even more capital for their business. So we saw this year Energy X raise 89 million from a community of 38,000 investors. We saw Newsmax raise 75 million from a community of 28,000 investors. And we saw Picasso, still going strong, has raised so far 38 million from a community of 9,000 investors. So what we're seeing is so transformative to me, these numbers, because as an industry, we used to see one of these raises maybe every 2 years, we could all count them on one hand. But now these 3 raises happened on the Dealmaker platform in the last 12 months alone. So we're seeing not just that volume lift in CF, but also in issuers that can use Reg A and come back to a community to power them again and again. EnergyX is using the proceeds of that raise to build out. They've just launched their second facility in Austin, Texas, where they're building lithium extraction technologies that they can then use in their own mines around the world globally. Their investors go and visit them and pick up some swag in their head office often. A lot of them attended the launch of the new facility. And these investors are having the opportunity to invest alongside big institutions like General Motors and the US Department that invested in EnergyX. We're seeing issuers like Newsmax actually forego institutional capital and choose to raise from their community as part of a pre-IPO raise, and then see tremendous trading volume, very positive when they launched on the New York Stock Exchange. So we're seeing that life cycle now all the way from Reg CF into super powered Reg A raises and into performance in the public markets. That's very strong. We saw this with Monogram as well, which is just giving more positivity and power and liquidity opportunities to retail investors so that they can come back to the category again and again. Retail capital is moving from niche to mainstream, and you, the early adopters, are setting the tone of what we're going to see in this category for the next decade. What we need is more founders, more operators, and more companies to come into this category. We need to raise awareness about this as an alternative source of capital that's hugely beneficial for companies. Retail-backed IPOs remained a small percentage versus VC and PE-backed IPOs, despite the fact that they performed comparatively better over time for the businesses. Education is key to show how retail is a strategic vehicle in capital formation from seed to IPO and beyond. And as a founder, I know what Jenny said earlier firsthand about maintaining ownership of your vision and company is of vital importance, which is why we all believe in this form of capital so strongly. It helps founders keep control by setting their own terms. It helps minimize dilution and protect governance rights that can sneak up on people and steal their businesses out from under them. I saw it time and time again in my legal career. And it also helps increase valuations by pairing a source of capital with customers who invest. There's no glass ceiling when you build the house yourself. It's never been a better time to turn communities into investors. More and more institutions are creating vehicles to chase retail investors, and the global markets will triple in under a decade from 1.5 billion to 5.4 billion. Expansion will be driven by cross-border capital flows and regulatory harmonization, and we have an opportunity to reach beyond the traditional geographies and sectors to build something phenomenal for the world. The direct-to-investor model is primed to define the future. With advances in technology, the future for us as an industry is bolder, it's retail, and it's now. AI-powered platforms are transforming in investor acquisition. The traditional capital markets, remember, are not digital and they're not technology-based. So we as an industry can close the gap to create more value for founders faster. We can convert better, we can streamline compliance and payments and shareholder management, and do all of this while being powered by rich data and analytics. Those are some of the trends that we're seeing at Dealmaker, and I'm so happy to be a part of this community of visionaries, people who dream big and raise boldly. So thanks, Devin, for putting this together, and thanks for having me.
Well, thank you. Thank you. Let me hide your slides here. You just did a brilliant, brilliant job. You know, it's such a joy to have you, Rebecca. As you think about, I want to just visit with you for a minute. You did such a good job. You were a little bit succinct. We got done early, but so let's take advantage. If you've got questions, please, you can put them in the comments on YouTube if you happen to be watching there. If you're watching on television, scan the QR code that we put out earlier. Can't do it now, but you can put in a question at 4sc.fund/25Q. There it is. Now you got the QR code. We'd love to have questions from you. But Rebecca, I think it's it's really interesting to look at all the cool things you've done. And, that Newsmax offering is really a powerful example of what crowdfunding has the potential to do, because it was probably the most successful Reg A offering that I've seen that became an IPO in effect. And this has been something I have long dreamed of seeing done successfully. It happened. What do you think were some of the keys to making this work well? And how can it be replicated?
Devin, I think that's a great question. It was a really exciting offering. It happened really fast. They did that volume in 6 days on our platform. So there was a tremendous amount of activity prior to the IPO. What made it successful, I think they are very strong in their messaging. They know what they stand for. Of course, because it's a news media outlet, they have a community built in. So they're able to host a lot of their own advertising to their own community. And so that's part of it. But I think in terms of what makes a successful crowdfunding campaign more broadly, it's having a strong brand and a strong message and ongoing learning. I think that's part of what makes a successful founder in any event. And the founders that we see on the platform who are most successful are the people we like to say who own their own outcomes. And it's people who really are strong in their convictions. They're willing to work hard to make their offering a success. They're always testing and learning about what messaging resonates. They pick up the phone, they call their investors. As Jenny said, it's so important to maintain that dialogue with your investors. And it doesn't have to be one-to-one on the Dealmaker platform. That you use the Engage portal to do your investor communications one-to-many, but just picking up the phone and understanding what an investor liked about your offering allows you to dial in on what will make the offering more successful.
It is fascinating to see the incredible success of that. I appreciate your tips for replicating that, because I would so like to see it. It has an inherent benefit to society when companies go public with a $75 million relatively early stage offering. I think back to Microsoft. I've been fortunate to have a few shares of Microsoft, but I didn't invest in them until they were 20 years public. If I had invested 20 years earlier, and I could have, because it was a public offering with a $300 million valuation, I wouldn't be working right now, let me tell you. So it's powerful to start moving that back to where ordinary folks can participate, the powerful retail investors you were talking about in your discussion. So, Rebecca, thank you so much. Really appreciate your insights, really invaluable. I hope you'll pop in. We got the networking session starting in a few minutes. I hope you'll pop into that backstage arena, say hi to folks, and then we've got the networking session starting in 16 minutes. So I hope all our VIPs will take advantage of the opportunity to, shake hands virtually with you, because this is what a great insight. Anyway, thank you so much. You're the best.
Thanks.
I'll let you go. Thank you. Well, we're kind of at an interesting moment in time here as we begin to sort of wrap up the day. And I just want to take a minute to recap a little bit of what we saw today. We had such a great day. And it began this morning, almost 9 hours ago. We've been on the air without really a meaningful break for 9 hours. And it's so exciting. I mean, just one great speaker after the other. One of the great things I love about this technology is that we record everything. So I get to go back and review it. I get to go back and reread it. And boy, I look forward to that experience. So we started out with Dr. Van this morning, Dr. Van Williams. He's just a great entrepreneur who's been doing naturally occurring affordable housing for decades, really a proven leader in the space, currently doing a Reg CF offering. I encourage you to check it out. He talked a little bit about his Rancho Affordable Living project in Vegas, but he's got projects all around the country that he's doing, and it's a neat opportunity. Andrew Dix from Crowdfund Insider, I just thought it was so important. My age is showing a little bit these days, and I was really I approached the oncoming onslaught of the digitization, the tokenization of all things securities with some trepidation, and Andrew kind of helped put my mind at ease. And then we had a great panel discussion led by Andrew Field with Patrice Gaetan, Meseret Warner, and Konstantin Boyko and Cameron Neal talking about global crowdfunding, and the potential for that is enormous. I see a connection between those two themes, right? Andrew Dix talking about digitization, right? Digitizing, tokenizing securities. Well, if we are doing that, that can facilitate some of the work in cross-border crowdfunding. Very exciting. I thought Cameron Neal had really hit the nail on the head. We need some regulatory harmony in order to make that work, so that there is a place where you can actually run that sort of business and conduct that sort of business globally. It was great to have Chris Miller from NC3 on to talk about community funds, the community investment funds. I think that's such a great partnership between funds that you can invest in if you're an ordinary investor that are also investing in crowdfunding deals. Wow, it's such a powerful way to reinforce the cycle of local investing. It's really incredible and impressive. I'm grateful that Chris is leading that effort. Woody Neese came, Woody, one of the OGs of crowdfunding there at the White House when the Jobs Act was signed, along with Jenny Cass. We'll get to her in a minute, but really an impressive guy. He shared some great insights with us this morning. And then I had a chance to talk to Danielle Godfrey about the importance of accounting. And I know some eyes glazed over, but she's already told me she's had people reach out to her for help. So I know that some of you were paying attention. I was pleased to hear that. Alan Tratner led a great discussion with Will Wiseman, Jackie Logan, and Lester Crafton about climate crowdfunding, right? This idea that we can crowdfund climate solutions and sustainability more broadly. It's really a powerful discussion, especially right now. We're in this sort of a little bit of limbo. There's a little bit of a scary situation with how federal programs that have traditionally supported clean energy might continue to exist or not in the next few years. And so, crowdfunding solutions become more important than ever. That was a very interesting conversation. Then we had Chris Lestrino give us kind of an overview of some of the data on crowdfunding. Of course, Chris is the president, founder of King's Crowd. Wow, what a great discussion. So much great data. And then Meseret Warner came back and talked to us a little bit about what she's doing in Ethiopia, building a portal there to facilitate investment from the African diaspora, moving capital back, and it's already starting to work. There are billions of dollars flowing to Africa from that African diaspora, but what she's recognizing is that if we could harness even a fraction of that in the form of investments, it would be game-changing for entrepreneurship, economic growth, and ultimately prosperity on the continent. Very exciting stuff. And then Patrice Gaetan from ISPD had a conversation about his work in Haiti. Haiti is a challenged situation, right? They face all kinds of issues. Let's be honest. And he was able to walk through how despite some incredible challenges, he's been able to not only stay in business with his nonprofit, but grow. And we talked about the need for and the opportunity to invest, to donate. Let's be real, to donate to what he's doing and make a difference in Haiti where it is so genuinely needed. High impact opportunity there for sure. Then Jen Risley led a great discussion with Danielle Godfrey, Kathleen Minogue, and John Burlett and Chandra Crosby about local investing. And, it's exciting to see, that all the different ways that people are approaching this to create impact. And, we had some of the highest engagement of the day on this key theme. I thought that was very interesting. This is a theme that resonates with people, right? They want to build their community. We may disagree about a lot of things, but everyone wants to live in a better community. And local investing via crowdfunding is such an important part of that. KB Barrios gave us a great little lesson on decision making. And, when we're talking about investing, decision making is vital, right? Then Karen Rands led a discussion with Craig Jonas, Yvonne DeMunk, and Carl Dakin about investing, right? So they're experienced angel investors, the group of them, and they shared their insights and talked about how all the different ways that crowdfunding is an important part of their work now as investors and how they're taking advantage of that to invest more effectively. And Chris Miller led our tremendous, I just love the live pitches. They're so much fun. Chris did a great job hosting today. Paul Lovejoy, Leah Bollier-Gatreau, and Sherwood Neese, Woody Neese were our judges. They did a great job. It's really a hard job, put them on the spot, but they really do a great job of looking objectively, and they're all professional investors, right? So they're all bringing capital to bear on this, just like the sharks on Shark Tank. Really fabulous. So Tamara Lucas at My Panda pitched, Jenny Casson of Opportunity Main Street pitched, John Carey at Ovanova pitched. All great pitches. It was I've never seen our judges sweat so much trying to pick a winner today. And so it was really a difficult decision for them. In the end, John Carey won the judges' pick and came away with the SuperCrowd Audience Award pick, an impressive twofer for Ovanova Pet. Then we had Jenny back to talk about how to, get inside the mind of investors and build an offering that will resonate. And she does that so well because what she's trying to do is help us figure out how to do that in a way where we're not conceding the ground. We're finding the mutual space for structuring an offering to allow for that, good things to happen, raise money and get people a return. And she's, there are no deeper experts than Jenny in this world. And Rebecca Casava, really one of the, most successful leaders in this space. We were happy to have her back on at SuperCrowd25. She's been on some of our programs in the past, and she is just a rock star. And, she's talking about it's time to dream big, talking about the power of a Reg A offering powered by the technology that can take an offering forward, like the Newsmax offering. She gave us some insights into how we can replicate some of that success in our own offerings. Great message. So we're about the end of the day. Let me get Chandon to give me the word on. I think he's chosen a winner. Oh, Tom, I missed your question for Rebecca. I feel terrible, but I appreciate you wanting to ask that. Chandon, do you have our winner picked? I'm looking at our. There it is. I got our winner from Chandon. Thank you very much. Our winner of the Kindle Fire Max 11 is David Lids. David Lids is the winner of the Kindle Fire Max. So, David, we'll be in touch. Congratulations. We're excited to deliver that to you. So, we'll be in touch in that regard. With that, I want to thank all of you for being here. A couple of final thoughts here as we wrap up. We're going to be in just a few minutes. We'll be starting our networking session. And so that networking session is really an invaluable opportunity for you to connect and collaborate. And so if you are not yet signed up as a VIP, I want to encourage you to check this out. There is no end to the benefit of being a VIP. And for $25, I don't know why you wouldn't do it. I just don't know why you wouldn't do it, right? The next thing that we'll be doing is the VIP networking session, but there will be backstage networking going on all day tomorrow. We'll have the VIP webinar, the VIP LinkedIn group that you get access to only if you are a VIP ticket holder, plus the handouts. If you want the speaker handouts, you got to be a VIP. Okay. And I'm sorry that we have to impose a fee on being a VIP. It seems unfair in some ways, but for crying out loud, it's $25. And it has the potential to be genuinely life-changing. So I encourage you to check it out. Okay, with that, we're going to call it a day. And we will, I want to just recognize one last time, we got to pay homage to our sponsors. We could not do this work without them. I encourage you to take a serious look at the work that they're doing and think about how you could collaborate, partner, work with these great organizations that take the time to support our work. And we're striving to make such a difference in your community and to make this world a better place. So thank you very much. We'll see you in the morning at 8 o'clock or in the networking session in 2 minutes.
You're watching SuperCrowd25, the biggest event in impact crowdfunding. Over 2 days, top experts, investors, and mission-driven founders are sharing how to raise capital, discover profitable investment opportunities, and change the world. Stick around. You'll hear stories, strategies, and insights you won't find anywhere else. And if you want to go deeper, join our VIP community for just $25. Get backstage access, exclusive networking, speaker handouts, and a special VIP-only webinar. SuperCrowd25, crowdfunding the future. Impact starts here.
The property was dilapidated. It was horrible. It was code violations, drugs, crime, rundown RV trailers, no parking lot, no lights at night, just nothing. Our main focus is second chance housing. A lot of affordable housing households are led by single mothers. Our portfolio is 100% affordable. So our mandate is to be 20 to 30% below market rent. I'm personally $180,000 invested. We're only one of 2 companies globally to have a published social impact report for affordable housing on a Morningstar platform.
What's the faster way to build wealth? A traditional savings account at 0.38%, or worthy property bonds earning nearly 20 times more. Earn a fixed 7% APY starting with just $10. Access your money anytime with no fees, all backed by real estate. Visit worthypropertybonds.com today.
The African diaspora is one of the biggest investors in the continent, but they are looking for a structured, transparent way of supporting this business. This is not donation. This is investment for return, including impact, and join our movement community. Thank you.
Join the CFPA for the Regulated Investment Crowdfunding Summit on October 21st and 22nd.
Register at ricsummit.org.
Rural property taxes fund vital services.
Only when they're paid.
Invest in real impact.
Visit invest.coretaxdeeds.com today. Behind today's biggest crowdfunding raises,
The leading CPA firm for Reg CF, Reg A, and Reg D compliance.
trusted,
Experienced.
set apart.
ISPD strengthens health for families across Haiti.
Donate today. Make an impact.
Hello, everyone. I'm Gene Massey with Media Shares, and I'm very excited to be speaking at SuperCrowd25.
Save the date for Super Green Live, the global event on sustainability and green innovation, January 22nd through 24th, 2026.
We extend our deep appreciation to our supporting sponsors and co-hosts, including Potomac Growth, Energy Capital Funding Group, Move the Needle with Rob Kaplan, Ridgecrest Herbal, Stakeholder Enterprise, Renaissance League, the Global Equity Crowdfunding Alliance, the National Coalition for Community Capital, Green to Gold, and King's Crowd.
Enter to win one of 2 FireMax 11 tablets. Videos, books, and games come to life. Scan the QR code now.
Rules apply.